Watching. Well, you are. You're sitting right here.
Yeah.
You're still part of it.
For the week.
For the week.
For the week.
For the next 5 days. Checking on the futures this hour, implied to open in the red across the major indexes. The Dow looking to open about 83 points lower, the S&P 18 points lower, and the NASDAQ by about 87 points lower for the implied open. Let's take a look at treasuries. That complex, you see yields headed higher, the 10-year 4.28% right now, the 2-year at 3.71% on this August Monday morning. Bitcoin and some of the cryptocurrencies, that's pulling back down about 1.9% after rallying on Friday. You see a lot of the risk assets really kind of taking a bit of a breather this Monday. Ether hit an all-time high over the weekend, reaching the $5,000 level. It's still up 80% in the last 3 months, despite being lower by about 6% this morning. Let's get to Dom Chu with a look at this morning's pre-market movers. Hi, Dom.
Good morning, Leslie. Good morning, Wilfred. Good morning, Andrew. We're going to get started with a check on cryptocurrencies overall, following on Leslie's report there. We kind of looking at the surge that we saw on Friday after Fed Chair Jay Powell's hinted at potential rate cuts coming during the speech in Jackson Hole. Ether has been on a big run, but is falling today. It hit a record high of about 4,950 yesterday. It's now trading just about 4,500. Bitcoin also off its highs of about 124,000 it reached earlier this month. Crypto stocks, so look at Strategy, look at Coinbase, look at Riot platforms, all sliding in today's trading, but again, big moves in Friday's session. Next up, let's take a look at some of the furniture makers. After President Trump announced the White House is opening a tariff investigation into the sector, with findings coming within the next 50 days or so. Lazy Boy, Ethan Allen shares are higher as much of their production is based here in the United States. Names that could be, though, more affected by tariffs like Wayfair, RH, even Williams-Sonoma are lower by anywhere from 3 to 6%. So keep an eye on that entire furniture complex. And we'll finish with a check on 2 airline stocks. Alaska moving lower by roughly 2% after Raymond James upgraded the carrier to a market perform from an outperform downgraded. They also introduced a $70 price target, and strong demand and competitive capacity for that company is behind that. That's an implied upside, by the way, of roughly 17% from Friday's close. American airline shares are lower by about 1.5% after being downgraded to a market perform from outperform. Raymond James said that they are seeing more balanced risk reward as the stock approaches their prior $14 price target. So those 2 airline stocks are on the move this morning. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all the access to detail and analysis and context behind some of those big upgrades and downgrades. Leslie, airlines flying in opposite directions. I'll send things back over to you.
Yeah, same with the furniture makers. I learned something there about the supply chains and, you know, who has more complicated supply chains and who could benefit there.
There you go.
Thanks, Dom.
You got it.
Right, valuations for AI companies like OpenAI are sky high. But even CEO Sam Altman has suggested we're in a bubble. Joining us now to talk all things tech and AI is Stephen Levy, Wired editor at large. Stephen, great to have you on with us. Good to see you. Just recap what I'm referring to there for viewers that didn't see it. This is just as they're kind of closing a big private market funding deal, which confirms the sky-high valuations for the sector. Sam Altman is seen saying that actually he thinks there's a bit of a bubble-like set of valuations for the sector.
Yeah, well, he might say there's a bubble, but he's still jacking up the valuation of OpenAI up to 500 billion. Is it now? Is what they're saying? So I think that all of these companies are in this upward spiral. No one can stop this train because it costs a lot of money to run these businesses, a lot of computation, data, talent, and everyone knows, you know, it's the locked-in wisdom that this is the sector. This is going to take the whole tech world and the world itself up higher and higher and higher. No one's bailing on AI. So there will be a reckoning, because not all these companies can justify this, even in the long term, with the revenues that justify the valuations and catch up. But right now, the ride just keeps going on.
If we are in an AI-related bubble, Stephen, and it were to pop or at least correct meaningfully, do you think, and I acknowledge it's an odd question to ask when we think of the trillions of dollars of market cap of publicly listed tech companies linked to AI, but Do you think the pain would be more pronounced in private markets, that it would affect some of the private investors drawn into some of these companies more than it would public market investors?
Yeah, I agree with that. I think that, the bigger companies, they're making their bets on AI. That's where a lot of their capital expenditures are going. But they are fully developed businesses, whereas the valuations come really from the desire of investors to get on big time into AI. So they are, the private companies are much more vulnerable because these valuations come out of strictly the desire of investors to get in on it and hope that the company they're putting money into is going to be the next OpenAI.
How much of the kind of sentiment shift would you ascribe to that McKinsey report showing very little in the way or nothing in terms of ROI for companies utilizing AI right now? And how does that kind of filter into the question surrounding just the fundamental base case for AI at this point in time?
Yeah, that's where the reckoning comes in. It's going to take a while for the genuine advances in AI, it's an amazing technology, to actually filter, translate into dollars, into dollars spent by, everyone. Right now, you go on Google, you go on Meta, and it says, hey, AI must answer this. But you're not paying extra money for that. They're counting that eventually you're going to have like an AI bill, like an electricity bill or whatever, and you will say, I'm paying for it, I'm getting great value, and then you start to see the money come in that justifies those valuations. It's going to take a while, and that report shows like previous big advances. I remember in the PC era, there was this paradox of productivity that people pointed to. Well, no one's saying that the computers aren't worth the money, and these companies now, look at Microsoft, stuck it out, and they're have a fantastic productivity business. It will take years, maybe even the better part of a decade, for this stuff to translate to dollars from consumers.
Stephen, I'm curious what you think the take in the Valley is over the stake that the U.S. government took in Intel, and whether you think CEOs say to themselves, that's fabulous, or they say that's terrible, they're coming for me next.
I think more the latter. They have gone all in, some not very happily, with Trump, but Trump isn't satisfied with the deal he makes in Mar-a-Lago or the White House on a given day. He's going to come back and ask for more. We've already seen that he's very eager to run the businesses. The biggest businesses of America, he thinks he knows more than they do. So you look at the Intel bill, and he's bragging, we got it for nothing. And you could argue that's true, because as you said up top, this was money that Congress already granted. The previous president signed off. They were going to get anyway. They have a contract to do this classified work. They're going to do that work anyway, but now essentially for free. I guess, I wonder if the shareholders might have something to say about that. But what happens now when the government's the biggest shareholder in Intel? AMD can't be happy about that. So maybe, Trump will say, well, you give me 10% too. And then what kind of country we have? The government's got, a piece of every company.
Stephen, thanks so much for joining us. Great to see you.
Thank you. Have a great morning.
A lot more coming up on Squawk Box this morning. We've got much more on the markets following Fed Chairman Chair Powell's speech sparked a major rally on Friday. Will the bullish momentum continue into the fall? More on that next. And then later this hour, tennis, football, and workplace security. Mark Hein, Executive Chairman of Security Systems Company Castle, is going to be our special guest. He's part owner of the Washington Commanders. He also runs one of the biggest tennis tournaments in the U.S., of course, the U.S. Open, taking place right here in New York City as we speak. He joins us at 7:30 a.m. Eastern Time. Don't go anywhere. Squawk Box, come right back.
Educator.com.
Welcome back. Futures slightly lower with stocks coming off their biggest one-day gains since May. Joining us now, Ed Yardeni, Research President. Ed, it's good to have you on this August Monday following Jackson Hole. I know you've written a lot about it. Do you agree with Powell's new tone that tariffs' inflationary impact will be short-lived? It'll be temporary?
Well, I think that what the tariffs have done has kind of kept the inflation rate from getting down to 2%. Inflation now seems to be stuck more like around 3%. And he may very well be right. And I think a lot of people expect that the tariff effect will be sort of a one-shot deal. The problem is the tariffs are not a one-shot deal. For example, the administration is considering tariffs on furniture right now. So it could be a one-shot deal that lasts several months. But in addition to that, the services inflation rates are still fairly hot. And so if you've got durable goods inflation going up because of tariffs and the services inflation rate still running relatively hot, the Fed's not at its 2% target, it's at 3%.
So do you think it would be misguided then to cut 25 basis points in September?
I think so, not only because of the credibility on the inflation front that the Fed needs to maintain, but also because I think the economy is actually still resilient. I know that's a very controversial and contrary point right now, especially after the payroll employment report for July showed piddling increases in May and June, and then a 73,000 increase, which again is relatively low, but it is an increase, and I think we're going to see an increase in the August number at the beginning of next month of 100,000, which I think is closer to the sort of the break-even employment rate that we need in order to keep the unemployment rate down at 4%. So yeah, I think there's no particular rush to lower rates, but that's exactly what's changed in Powell's speech. For many months since the beginning of the year, Powell's been saying we are in no rush to lower interest rates, and what got the market so excited about the possibility of a Fed put is that he didn't say we're in no rush. He just said, you know, it may be time to make some adjustment here. So that's where the Fed is. The Fed won't listen to me, of course. They'll do what they're going to do. But there are a couple of inflation indicators, and there's a payroll employment report that may change their mind.
But the bond market itself doesn't seem to be too concerned, at least in terms of its reaction on Friday to the potential pivot. What do you make of kind of the bond vigilantes right now and their concern about the Fed's ability to fight inflation if it does pop back up again?
Well, you know, for all the excitement in the stock market about the Fed put making a comeback in September, the bond yield is still pretty much tracking in a flat range. 4.29% is last I saw. Well, I guess you have it on your screen. It's 4.27%, but that really isn't much of a change in the face of expectations that the Fed is back on an easing course. And I would say that the cautious tale is what happened last year when the Fed lowered by 100 basis points and the bond yield went up 100 basis points. In this case, if the Fed goes ahead and lowers rates, we may find, we may all get frustrated, including the administration, that the bond yield is still kind of stuck around here and the mortgage rate's still staying around here as well.
Either way, Ed, you remain pretty constructive U.S. equities. It's funny to see the reaction on Friday to the potential of a cut, and it was one day, but a big jump. So will it affect your view either way, if they cut or not?
Well, in either case, it's a bull market. The question is whether it's a bull market that has a melt-up phase. It kind of feels like a melt-up already based on what we've seen recently, especially on Friday. The forward PE on the S&P 500 is 22, which is right up there. The Buffett ratio, which is basically the price over the sales ratio of the S&P 500, is at an all-time record high. So valuations aren't cheap, but earnings have been great. First and second quarter earnings beat expectations significantly. And so I think we're going to have a continuation of the bull market, but I think it's going to be earnings led. if the Fed does go ahead and lower rates on September 17th, I think my targets may be too conservative. Right now, I'm looking for 6,600 on the S&P 500 by the end of the year and 7,500 next year. We could get to those targets a lot sooner if the Fed does in fact deliver the all-powerful Fed put.
Ed, how balanced, if you will, when you put those targets together, how balanced are they? Meaning, how much of that is the Mag 7 effectively levitating the rest of the market versus, looking at small caps or other parts of these indexes?
Well, I think what was exciting about Friday is that we finally saw some pickup in the SMID caps, the small and mid cap stocks. The problem with getting excited about that is we've been seeing that for a few years. We've all been waiting for the market to broaden out, and as you point out, it's been still very concentrated. 30% of the market cap of the S&P 500 is in fact still in the Magnificent Seven. So I would say, 6,600, 7,500 next year. I'm still thinking that the Magnificent Seven account for 30% of the S&P 500, and that there'll be some broadening out of the market, but they clearly are the leaders.
And you mentioned the economic resiliency. What do you make of the immigration element to the labor market? Obviously, it's we're running at full employment right now, but we're talking about potential cracks showing. How do you think the idiosyncratic elements that we're seeing right now with immigration and policy out of Washington is impacting that?
Well, that's a great word. The labor market is idiosyncratic. I've been calling it funky, but I think your word it makes more sense.
Funky works too.
It is another word that comes to mind is weird. I mean, we had a supply-demand phenomenon always in any market, and on the supply side, we've got some strange things going on where suddenly, instead of having an abundance of immigrants coming in, it's completely dried up, and deportations are continuing to affect the labor supply of foreign workers. That's really been where the weakness in the labor supply has been over the past several months, and that obviously jives with the headlines of what's going on at the border. On the demand side, I think things like JOLTS and initial claims suggest that the labor market still has demand. I think what happened in May and June is there was a lot of uncertainty around tariffs, and naturally, employers are going to say, let's hold off on our hiring plans and see how things develop. So I was encouraged by the improvement in July and the likely improvement in August as I'm expecting. But it's just one piece of the puzzle here that's making for a tough puzzle to solve.
Yeah, just another layer of uncertainty there. Ed, thank you.
Yep.
Ed,
Thank you.
So to come, are tariffs impacting auto sales? We'll have some new data on where new car buyers are spending their money. And as we head to break, here's a check out on the early S&P 500 winners and losers. S&P futures pointing to, what, a third of 1% of declines at the open. Small declines after a massive surge late Friday. We'll be right back.
Plus.
Welcome back. Well, tariffs not putting the brakes on auto sales, at least not for the more expensive vehicles. Phil LeBeau joins us now with whether buyers are stepping, how wealthier buyers are stepping up to the plate. Phil, very good morning to you.
Good morning, Wilf. And I'm not sure it's fair to say that the wealthier buyers are propping up the auto market, but they certainly are taking a greater share of the sales transactions that are happening in dealerships. We'll talk about that in just a little bit. But first, in terms of the vehicle transaction prices, the data says it all. You go back to 2019 and look at the percentage of sales for vehicles under 40,000 and over 60,000. Look at what's switched in the last 6 years. It's now 1 out of every 4 vehicles, more than 1 out of every 4 vehicles sells for more than $60,000 according to Cox Automotive. And the question becomes, okay, are people simply stepping up and saying, I will pay more for a vehicle? Or are there other buyers or particular buyers who are stepping up more often? And Cox Automotive says, when you look at the breakdown in terms of income levels per household that are buying vehicles, there is a greater percentage of those households making more than $150,000 that are buying vehicles right now. That's simply what's happening. And that's the reason why you have 14% of the market now, vehicles more than $70,000. Average transaction prices continue to be near a record high, just under $49,000. That could top $50,000 within the next year, according to experts. And part of this depends on what happens with pricing coming as the tariffs take full effect, whether or not we see tariff policies change with Canada and Mexico. That will certainly have an impact. That's why as you take a look at shares of GM, Ford, and Toyota, the interesting thing to point out here is that the sales pace for the year is about 16.1 million vehicles. Remember back in April when the tariffs kicked in, almost everybody that we talked with connected with the auto industry said, watch this, we're going to see sales drop down to a pace of about 15 million vehicles. That has not happened. And for the luxury automakers, the good news is that there are still people buying. Yes, these are European automakers that we're showing you here, BMW, Mercedes, and Ferrari. And Ferrari is a slightly different class, guys. But the bottom line is this. Even though prices of vehicles are now close to an all-time high, and more vehicles are being sold for more than $60,000, more than $70,000, the buyers are stepping up.
Phil, what's the outlook for the next couple of months? I mean, are all of the auto-related tariffs that are going to come into play already in play, or is there still some potential for that to
we don't know what's
down?
going to happen with USMCA, with Canada and Mexico. That's the big one, Wilf. Yes, there are agreements locked in with the EU, the UK, Japan, South Korea, and we know that those tariff levels will come down in that range of 10 to 15% depending on the region or the country. And so those, to a certain extent, there's some certainty. But there's a lot of uncertainty in terms of what's going to happen with Canada and Mexico. And I think that's what the industry is waiting to see before they might have a better handle in terms of what happens with demand and pricing.
Phil, as always, a pleasure. Good to see you.
Good to see you.
Coming up, we're going to show you the piece that sports memorabilia that just broke a record at auction. Includes 2 legends of the NBA. And later, venture capitalist Tim Draper is going to talk to us about why he's predicting Bitcoin will replace the U.S. dollar, he says, within the next decade. That conversation is going to happen at 8:40 Eastern Time. Don't go anywhere. Squawk Box coming right back.
closes.
Welcome back to Squawk Box. A new record in the world of sports collectibles. A card featuring Michael Jordan and Kobe Bryant selling for $12.9 million over the weekend. That is the most ever paid for a sports card. It's the 2007-2008 Upper Deck Exquisite Collection Dual Logo Man Autographs Jordan and Bryant card topping the 1952 Topps Mickey Mantle card, which sold for $12.6 million in August 2022. The buyer's identity not revealed. The Jordan Bryant card now ranks second behind Babe Ruth's 1932 World Series called shot. Now, that jersey for the most money ever paid for sports memorabilia that sold for just over $24 million a year ago. It's making I am a proud owner of the Michael Jordan Rookie Fleer 1986, close to full mint.
What would that get you now?
I actually don't know if it was super mint, it was like a very high. I mean, I think it was six figures for a while. It was a real situation, but it got it for $75, like at the time.
There we go. I don't have any of that sort of stuff. I have I love my old Arsenal jerseys, but nothing formal memorabilia like that.
No Beanie Babies.
No. I used to collect the stickers. But
Oh,
again,
so
they don't have value.
so mine's not this. There's some serious, like perfectly mint ones that seem to be going for like $500,000. It can't be. Some are selling for
I think you should sell it,
$10,000.
Yeah.
No, I know.
Sell,
I know,
sell,
I know.
sell.
Sell.
We're going to talk about sports valuations in a moment.
Yeah.
Broader.
A wide-ranging interview coming up with Mark Hine. He's the executive chairman of security systems company Castle. He's also part owner of the Washington Commanders. Runs one of the biggest tennis tournaments in the U.S., of course, the U.S. Open, beginning right here in New York. He's going to join us after the break. We'll see whether he's got any baseball cards. By the way, I think some of these you can buy for much cheaper. I don't know what I was looking at before. We'll see. Plus, a wild scene at the U.S. Open last night. We're going to show you what sparked the outburst from one of the tournament's top-ranked players. Do not go anywhere. Squawk Box coming right back.
AC Plus.
Welcome back. Well, the US Open underway here in New York City in the first round match last night. A big upset in more than one way.
Wait, please, not now. Get off the court, please.
Looks like a photographer had just
First
gone
serve.
to the court.
Ladies and gentlemen, because of the delay caused by...
Russia's Daniil Medvedev had a temper tantrum, understandably, after a photographer entered the court in the third set. The 2021 champ was facing match point against France's Benjamin Bonzi, who is unranked, when the match went off the rails and was suspended for 7 minutes.
Wow.
Medvedev fought it off, took the match to 5 sets. Bonzi, however, won the 5th set for the upset, but a big delay there. And as we said, a lot of upset tantrums unfolding late last night.
A lot going on. We got a guy here who knows a lot about tennis. Joining us, someone who knows, he also knows about football, knows about security, knows about SPACs. We got a lot here. Mark on Castle Executive Chairman, owner of the DC Open and the Washington Commanders partner. One of the early SPAC kings. Can we call you that? Do you like that name? You don't like that name?
I used to like it more.
You used to like it. We can talk about that in a moment. The Open, though. Should we talk Open first?
Yeah, for sure.
The economics of this Open
Yeah.
have gone sort of like parabolic in
Yeah.
terms of what's happening. I'm curious, A, what do you think is going to happen this year if you have picks, but just the shift in terms of the economics and therefore what it does to the rest of tennis and even the tournament that you have in DC.
Yeah, so tennis is having an amazing moment. In the U.S., participation's up 45% in the last 5 years, and it's being driven by young people and diverse participants. So that's great for the sport because it always had this image of sort of an older, not very diverse audience, and that's totally changing. And then the sport itself, these athletes are like global superstars, and you see emerging brands like Lululemon attaching themselves to Francis Tiafoe, and Viore just did a deal with Jack Draper. And actually, Andrew, one of the last times I was on here, we talked about you asked me about Roger Federer leaving Nike.
Yes, I
said,
remember.
What do you think?
We were all talking about Nike.
To go to Uniqlo.
Yes.
That was the deal that got the headlines, and you know,
And
got
the real
paid.
deal was he got on.
And he became a billionaire.
Right.
And so that's the thing about tennis. These athletes are global icons. They get the entire world focused on them, and that drives the whole ecosystem. So the best players are making a ton of money. And by the way, it's also men and women. The unique thing about tennis is 4 of the top 10 highest paid tennis players are women. And so it's both men and women. And then it just fuels the whole ecosystem. So tournaments everywhere around the world are doing great. Our tournament sold out for the last 5 years. You see that everywhere. And it all starts at the top. You get a great event like the US Open and the whole ecosystem benefits.
I guess you weren't there live last night because you were getting ready to come and join us. And that's one of the things as well. US Open always runs a hell of a lot later than some of the other tournaments like Wimbledon, which is kind of adds to the fun of it all. But today, Venus is back.
She is.
I mean, this is incredible.
Yeah, I mean, I love Venus. We've been friends for a really, really long time. I'll be there tonight supporting her. She decided she wanted to make a comeback. She made it at our tournament a few weeks ago. She beat a young American who's really, really good, Peyton Stearns, who's like 32 in the world. Beat her on our center court. And it got a lot of attention. And then she played in Cincinnati. She's playing tonight. And I think it's a great inspiration for people that even at 45 years old, you can be out there at the US Open playing singles.
Can I just go back to the brands? Because you were talking about Lulu and Viore and all these, and what happened to the old brands? Meaning, where's Nike in all of this these days? Are they still making money in this, or are they basically given up on tennis?
No,
they're on the players, but they've scaled back in terms of what they used to be doing. I would have thought between paddle and all the other racquetball sports that this would be like a huge new market for all these guys, and no one's doing it.
Well,
They're not doing it, but there's a lot more competition, I'd say.
So I think what Nike's done is they focused on the very best players. So they have Sinner and Alcaraz,
Right.
who are the icons
No, they're the
on
top,
the
but
men's
that's
side.
it.
They have Sabalenka on the women's side. They have Qinwen Zhang, this Chinese
Right.
woman who's amazing. And so that's been their focus. But I also think it's other brands have made big investments. I mean, they're paying a lot of money to get these players. And so you see it's not just that Nike's giving them up, it's other brands have seen the power of tennis and want to get involved.
Okay, go ahead.
Oh, no. I was just going to ask, what was the driving force behind the changing demographics that you talked about? Was it the player stories themselves? Was it the media element of it? The expanded timeline this year for the U.S. Open? What is it that?
It's such a good question. When I bought our event in 2019, and I just fun story. I was a ball kid when I was a little boy at the tournament that I now own, and I wanted to make sure it would stay in my city, so I bought it in 2019. And the bear case then was Roger, Rafa, Serena were retiring, tennis is going to fade away. What I believed is this next generation of players, and I knew the Francis of the world, the Ben Sheltons, are amazing. They just never got the attention because all the attention was on the other players. Now you see these young players, they're amazing on social media, they have great personalities, and they're diverse themselves. Francis Ben, all these, Coco Gauff is extraordinary. And so just like in any other sport, they're role models, and they're inspiring these young kids of all types to come out and be part of tennis.
It's interesting that you obviously own a tournament in tennis, you own teams in other sports. Are there similar models there? I mean, what do you learn from one to the other? Obviously you can't own a tennis player, maybe you could do a deal of that ilk, but it's a different way of getting a piece of the sport.
Yeah, it's been really interesting being involved in both because there are lessons learned in both. I think the unique thing that we can bring to tennis to other sports is it's not just, if you go to the US Open, it's not just 1 2-hour game. If you do a good job of creating an amazing fan experience, people will come for 6-7 hours and they'll come back and back and back and back. And so if you go to tennis, it's an event, right? If you talk to your friends
You've
about
only got 2 weeks of the year where you can attract them.
well, that's the thing, but people love it and they come out every single day and they stay there forever because it's more than just what's happening on the court. There's great food, there's great shopping, there's great bars, there's venues. It's an experience. And so I think taking that mindset and taking it to other sports is a real opportunity. And you see the best teams doing it, like the best football teams create a curb to stadium experience that starts the minute you get there. You get there early, you tailgate, you stay after the game. I think that's something that we can take in other sports.
Could there be more of a global league, like sort of what Liv done with tennis, where you could own it all year round rather than just the big tournaments?
Tennis already is a global sport and the calendar is really full. I was involved in World Team Tennis. That was actually my start in the sports business. It's just the calendar's gotten very condensed, so it's hard to find windows to do that.
Can I ask you about sports rights generally? Some people would say this is a massive bubble. Right now, everybody just wants to talk about sports. They want to talk about live sports. They want to put on, people buying rights to, drone shows, anything, right? I mean, anything that moves, that's live, people think has a sort of a newfound value. And what I can't figure out is there's only so much time in the day, right? And between live news, between podcasts now, between sports, does anyone watch a drama or comedy anymore? I don't know. I mean, honestly, do you think that all of this will be able to keep up?
So I think the biggest and best sporting events and media properties are just continue to go up because we're all trying to find places where the whole audience comes together and in a very fragmented media world, and that's sports. I mean, you look at 2 years ago, of the 100 highest ranked TV shows in America, 94 were NFL games and 3 were college football games. So it's the place that people go. But what's happened is more people want to own sports teams and they become more unaffordable. Then people say, well, I can't own an NFL team. Maybe I'll own a hockey team or a baseball team. Then that becomes higher. And then people go, well, I can buy a drone team or I can buy one of the other things.
Right.
And people want, and so a little bit this is fueled by people wanting to be involved. And also,
sure, I'm just wondering whether you think sailing is going to become like a major sport one day or not.
I honestly think it's like any industry. I think some will work and some won't. By the way, SailGP is unbelievable. Like, it's an unbelievable thing. Whether it becomes a big thing is hard to know. Some of these I think will work and some will go away, just like in any industry.
In terms of how it links back with the media, I'm really interested if you think, obviously Apple bought MLS rights globally, to distribute rather than the leagues doing deals in different geographic regions. A lot of talk now, given the success of the F1 movie, will they try and do the same for Formula One, which is obviously quite a global sport? Do you think we'll see more deals like that? Global deals for distribution, even if it's a national league?
Yeah, I think, like in tennis, where my tournament's in 170 countries, but it's more country by country. I think it's just going to depend. Oftentimes you do better going to each country and finding the broadcaster or the streaming partner that wants to pay the most, and you aggregate that. Sometimes there might be someone like a brand like Apple that just wants to own it globally, and that'll be who will win those bids.
I mean, NFL's obviously such a US-led sport, so it doesn't necessarily apply to that. But I guess the next step would be, maybe the Premier League soccer or F1 are kind of global enough that should the leagues just deliver it themselves, pay-per-view globally on PremierLeague.com or F1.com, or do you think we never quite get to that?
That's a debate, and you see a lot of leagues in the U.S. have their own channels and start to experiment with their own platforms. What you find is there's a lot of value in being on a platform that has audiences outside of the people that watch your sport, right? So the value of being on an ESPN is that you get the general sports fan, and if you're only broadcasting to your fans, you don't get that engagement with people who are less involved. So I think there's always going to be a place for multi-sport platforms. And I think it's smart for the leagues and the tennis and the different sports to participate in those as well.
Two other things. Castle,
Yeah.
you have a pretty interesting perspective on what's happening in office places
Yeah.
and the like. It's a security company. What are you actually seeing? We keep talking about, are people really back? Still companies that we're all here 5 days a week, but there's a lot of places in the country that are not.
Yeah, so that is the trend. I mean, executives have wanted to get their people back by and large for a really long time. It just took a long time to be able to make that change. But you see, Jamie Dimon was early, David Solomon, AT&T just came out and said, if you want hybrid work, this isn't the company for you. So you're seeing that. What you see in the data is interesting. Our data at Castle, which is kind of the big source, says that 55%, it's back to 55% of what it used to be. But that's across regions and across days of the week.
55% is just half of what it used to be.
Yeah, a little, but here's the thing. What you'll see is that that's a weekly average. So on Fridays, it's down to 35%. So that brings down the average. And it's also across property types. When you go to Class A+ buildings on the peak days, it's now 95%. So in the best buildings, in the biggest cities, it's basically back to normal. That's the thing that I think that the data shows.
Okay, final question, because I did mention SPACs at the beginning. You were one of the originators of this. I mean, really, like the OGs in this world. And then it got sort of a bad name, not your own, but other people who sort of took advantage and went a little too far. It's back now. I mean, SPACs are coming back. Chamath has a new SPAC. He's back. What do you make of this? And should we be anxious, nervous? Is this a big opportunity? What's your take?
Yeah, I mean, we were involved in the early days when there were a lot less of them, and we did it because it was a really great vehicle for us to take stakes in companies that we would then be part of and help and build and grow, that we're still part of today. That was the idea. It obviously got really crowded, and when that happened, like all capital markets, it honestly became a mess. The market's back, it's becoming crowded again. A lot of people want us to go do it again. Right now, I'm really happy with what we're working on, so we're probably not going to do it. I think it's a lot better when there's fewer people in it than when there's a lot. I think you will see deals that get done that work, and you'll see a lot that don't work. Investors on the front end do get protection. They can always get their money back, and that's one of the reasons that it explodes when there's interest, because people figure, I can always get my money back if it's not going to work out, up until the point that there's a deal. But for the moment, we're really happy with what we're working on.
Okay, Mark, we're going to leave it there. Have fun at the Open the next 2 weeks. Coming up, we just told you about the record-setting price paid for a trading card. We told you about it. Michael Jordan, Kobe Bryant. It's an autographed card sold for $13 million. We didn't know who the buyer was. And it just so happens that we figured out, literally, as the show was on, I got a text from the buyer that he is the buyer, and he's going to be on the broadcast right after this, so don't go anywhere. We will make the big reveal.
roadbeauty.com.
Welcome back. So we told you just a little while ago about a record-breaking price for this card. Take a look at it. It features Michael Jordan, Kobe Bryant, sold for $12.9 million over the weekend. This is the most ever paid for a sports card. We didn't know who had bought said card. Nobody knew. It was an anonymous purchase at the time. And as we're talking about it on the air, I get a text message from the man who says he is the buyer of that card. And we want to welcome him on the broadcast. We literally organized this in the last 10 minutes. Kevin O'Leary, you are the buyer of that card, sir?
I'm one of three. We formed a syndicate so we didn't have to compete with each other. Matt Allen, Paul Warshaw, both legends in the hobby. Shine is the nickname of Matt Allen. He was the guy that did the research, but we bought it together. Yes, we did. And I'm very proud to own it. I've been looking at this asset class now for 3 years. It's an extraordinary return, as you just said yourself on your own card.
Yeah, so hold on, but so you've been looking at this specific card. Do you own a lot of other basketball cards?
Yes, we do. We do. We've been very, very specific. I've kind of looked at the research back in contemporary art and modern art. The majority of the capital gains accrue to the rarest Pollocks or, Warhols, pieces that are extraordinarily priced, you think, and then you wait a decade and look at them again and see you get extraordinary capital gains. It's a very thin market, but as an alternative asset class, I'm all in, Andrew.
So, had you guys all teamed up in advance, or were you all looking at the card and then decided, that you needed to team up because the price was either going to get too high, or you wanted to keep...
Paul Warshaw, the guy that I mentioned is in the syndicate, got me into the hobby about 3 years ago. I was a business partner with him, and I just started, and I thought it was nuts. I said, why would anybody pay $1 million for a piece of cardboard? He said, you don't get it. And I slowly kept looking at the numbers. I'm the analytical guy in the group. I just kept looking at the numbers. Those two guys are crazy hobbyists, but together, we did do that. We stayed up till 3 in the morning on Saturday night. One of Matt, or Shine as he's called, was in Spain. Warshaw was in Miami. And we got together on a Zoom, and my wife thinks I'm nuts, I can tell you that. She just went to bed saying, this is too crazy. You guys are all crazy. And I woke up with her the next day, and we owned the card.
Kevin, great to see you. It's Will here. What do you think is driving the incremental values for this? Because it is different from those classic old pieces of art that could be hung in a museum and tons of people will come and pay and see. This is shared between three of you. You're not even really going to be looking at. Do you think it's just driven by the growing 1% or 0.1% of wealth at the top end that has more money to spend, or not?
No, I think it's getting institutional in nature in terms of hedge funds, high net worth, etc. Remember, these cards stay in vaults in perpetuity. I may handle it once in my life, but it's an image that is passed around digitally. You showed it. It's on my phone. It remains there that way. Everybody knows about this card. That gold logo man made it magic, and it's one of the most coveted pieces on earth. It's no different than collectible watches in some way, an FP Journe, which I'm wearing on my wrist. It reminds me of that market. It's so rare that the prices continue to appreciate, and they seem to defy recessions.
Kevin, so this price tag with $13 million effectively, when you mathed it out for your business partners, you said, we're going to get X return on this when? What are you even looking at in your mind?
I don't think this piece will come to market again during my lifetime, Andrew. It's going to be a part of an index that I'm going to continue to grow along with my partners. We look at it no different than our Bitcoin holdings, our Ethereum holdings, our gold holdings. For me, this is going to be a 5% weighting in my portfolio, maybe more. I don't see it any differently than any of those other asset classes. However, it's a lot more fun. The people I'm meeting in the hobby are truly crazy.
Okay, I got one more question for you before you go. It is a curveball, but because I haven't seen you in a long time, and we always have some pretty raucous debates about capitalism, I am so curious, if you'd indulge me, what your opinion is of the government, U.S. government, taking a stake in Intel on Friday. Do you have a take on this, sir? I bet you do.
Yes, I abhor this idea. I really do. What has made America so great for 200 years is the government stays in its lane and the private sector does what it does so successfully and attracts 52 cents of every dollar from around the world into its capital markets. We let dead old companies die in our version of capital markets. Intel should have been sold for car parts 3 years ago. I do not want to invest in it as an investor, and I have no interest in taking my tax dollars and giving it to a company that has performed so miserably. Why would anybody want to own this thing? Take it behind the barn and shoot it. That's what should be happening to Intel.
Kevin O'Leary, tell us what you really think. We appreciate you calling in today. It's great to see you. Congratulations on winning this auction, and thank you for watching the broadcast and texting in and jumping on the air so quickly. Appreciate it.
Take care.
You bet. Thanks. It is just past 8 a.m. right now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost, in for Joe and Becky on this last week of August, but a very busy one nonetheless. Leslie.
Yeah, let's take a look at the futures at this hour. Still in the red. The Dow implied to open about 84 points lower. The NASDAQ implied to open about 75 points lower. For more on the markets, let's get to Mike Santoli at the New York Stock Exchange. Morning, Mike.
Morning, Leslie. Yeah, market's taking just a little bit of a beat after Friday's very strong upside reaction to Fed Chair Powell's Jackson Hole speech. The S&P was up 1.5%. It did just finish slightly short of a new closing high, although other indexes like the Dow did hit a new high. Here is the S&P 500 starting mid-summer of last year, which I wanted to show because this is the choppiness we saw in August and September. And one of those little rallies was post-Jackson Hole last August 23rd. We did get a little bit of a relief. The Powell basically said rate cuts are coming probably in September, just as he said on this Friday. He did get a bad jobs report in early September that did cause a little bit of a gut check, and then it was up and away from there. So even though it was very positive action, 90% of all volume in the New York Stock Exchange to the upside on Friday, you have to be aware that we've, didn't really give back very much going into this. So we are near new highs and trying to metabolize all that it means. Take a look at the more aggressive parts of the S&P 500, known as the high beta segment. This is on a year-to-date basis. And exactly how it has lifted off relative to the S&P 500 itself, as you can see, almost basically at a new high as well. So this shows that the more volatile, lower quality, more aggressive parts of this market have actually been riding high for a bit. It's a little bit of a funny moment to be considering getting rate cuts into a pretty flush market with very good credit conditions. Now take a look here at banks relative to the AI trade, AI ETF, AIQ in particular, and this is over a 1 year. I just thought it was great that they're basically synchronous at this point. And in fact, banks, this is as measured by the KBW Banks ETF, is leading the way at this point. So that usually is a pretty good signal when banks are part of the leadership group. You got cyclicals working as well. So all to the good. Last week we were having a rethink of the AI trade. I don't know if that was just kind of an excuse for why the mega caps are backing off, but it's worth listening this week to the message of the market with regard to AI versus the rest, guys.
Yeah, it really feels like sentiment-wise, anyone who's concerned about concentration or overspending in AI looks to banks kind of to supplant that. Mike, thank you very much. Mike Santoli. Joining us now, Steph Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. Steph, this is right in your wheelhouse. Good morning. I don't know if you heard much of what Mike was just talking about, but essentially he was comparing the performance of banks relative to AI and how they've been kind of running in tandem recently and kind of the rotations there. How do you see those two sectors? I know both of them are kind of near and dear to your heart.
Yeah, I like both sectors. I'm overweight both sectors. You know, especially on the large cap banks. I still think there's room to go, especially because we haven't even begun to see the IPO activity really heat up. M&A is starting, but hasn't really heated up. And deregulation is absolutely perfect for this sector. And so I know the stocks have run a lot and people are worried about the multiples, but I think you're going to see multiple expansion, especially as the capital levels get eased, right? That the requirements get eased, and then they can buy back stock, they can do M&A themselves, and they can lend. And so that's really important. So that's on the financial side. On the AI side, I mean, I think we're in the first or second innings. And as you and I've talked many times, if you really do believe in AI, which I do, I think you do as well, many of us do, then you have to build data centers. And we only have 11,000 data centers in the world. We have 5,400 here in the States. We have to get that number closer to like 30,000 between now and 2030. So you want to own the data center build out. And of course, the grid has not been upgraded in over 50 years. 75% of the grid is over 25 years old. So you have to believe in the grid too if you believe in all this other stuff. And of course, we're undersupplied in power. So I think both can work. I think the fourth quarter setup is excellent, given that we just got the pivot. Maybe September's volatile, but you use that volatility to be buying, and you buy kind of broad base. You can buy AI if you want. I like the industrial AI plays. You can buy the technology sectors as well, but I do think that financials, industrials, materials, discretionary are really positive areas to buy. Yeah.
Yeah, and just the overall contribution of that CapEx spending to GDP growth is another kind of follow through. Steph, really appreciate your time this morning. Thank you.
Thank you.
Still to come, the battle for AI dominance. We'll take a look at which stocks are in the lead. Squawk Box coming right back. Alphabet shares hitting an all-time high on Friday. The stock rallying into the weekend on news that Apple's exploring using Google's AI model Gemini to power Siri. Joining us to discuss, Mark Mahaney, Evercore ISI head of internet research. Alphabet is his top long-term large-cap internet stock pick. Mark, great to see you. Long time no speak. So, is this a big positive potentially that this is being considered for Alphabet, or also a revealing negative for Apple?
I guess I'll take the first interpretation of those two, Wilfred, and it's good to see you again too. Let's see. I think it's just a small marker, but it's another one that indicates that that Google is running the race. It's in the leadership position, or one of the leaders in AI. And I think a couple of months ago at 160, when the stock was down there, I think there were real fears that it was going to be left behind. But look, with Gemini, I think they've got one of the best large language models out there. They've obviously got a wonderful distribution platform in Google, the most widely used internet asset out there. And then we've also got coming up this week, almost certainly, a judge's decision in the antitrust monopoly case. We hope that it's going to be a clearing event. It's very hard to handicap the outcome of the event. But again, if you look at all of the AI companies that are out there, this is the cheapest one. I mean, it trades at the direct AI companies. This trades at 19 times earnings. And I think there's still material upside. That's why we like the stock.
Do you think when the dust settles that it'll be like Google is as a search engine, free for everyone to use and monetize through advertising, or with the early signs on these AI models is that you have to pay for them? Which will win out?
But my guess is that they'll do a combo. I would think you keep your options open and you do both. There will be people that will be willing to spend $20 a month, and some a lot more, but for access to the most leading edge Gen AI features. And that's what they've been doing so far. I don't think it's a massive revenue stream for Google, but it's a nice diversification, away from advertising. And I step back and I think about that. The core catalyst on Google here, remains getting the search business to sustain a double-digit revenue growth, which I think it can do. I don't see any evidence that it's losing any share in commercial searches. And then you've got these really nice positive assets in YouTube, which is re-accelerating, Google Cloud, which is re-accelerating, and then I love this Waymo asset that just continues to grow and get bigger, and it's the leading playoff, maybe the most interesting physical manifestation of AI, which is robotaxis.
Mark, quick extra question. I wanted to ask you about the story about Meta putting a hiring freeze on AI headcount. Is that something we expected and they've made a decision and then they slowly make an announcement, or is this a sort of wake-up moment for them of, oh my gosh, we've massively overspent in this area? Is it incremental for you on your view on the stock, or not?
Not really. I'm sort of skeptical that there's been a real pullback in intensity, AI intensity at Meta. Look, I spent a lot of time with Amazon, Google, and Meta, and I haven't seen any of those companies really materially pull back. There may be little stops and starts, but the lean in, the spend is growing each year, and it's growing aggressively because these companies are really feeling like, or believe that they're getting a great return on that spend. And I think Meta's proved that with its revenue results and its profitability results. So I'd be shocked if they really were to start materially cutting back. They may slow down the pace from time to time, but it's going to get bigger for them.
Mark, great stuff. Thanks so much. Good to see you.
Thanks, Wilfred.
Coming up, Kevin Hassett, National Economic Council Director, joining us to talk about the government stake in Intel and some of the other big economic stories, including what Jay Powell said on Friday. And then later, venture capitalist Tim Draper on Bitcoin and the next wave of AI and where he's finding investing opportunities. A conversation you do not want to miss. I promise you it's going to make news. We're coming right back.
Kitch.com.
Welcome back to Squawk Box. President Trump announcing Intel has agreed to give the U.S. government a 10% stake in the company. Joining us right now, talk about that and so much more. We're going to talk about Jay Powell and everything else. White House National Economic Council Director Kevin Hassett. Kevin, it is great to see you this morning. Thanks for coming on.
Yeah, it's great to be here.
So here's the question. Ronald Reagan famously said the 9 most terrifying words in the English language are, "I'm from the government and I'm here to help." Right? You remember that line, and it's
Sure.
a line that I think
It's a
it's been
great line,
used by Republicans for the last several decades, until maybe Friday. Can you explain the rationale behind taking this 10% stake?
Right, well, it's not really a taking, right? The bottom line is that because of the CHIPS Act, the U.S. government had decided to give a whole bunch of money to Intel, and President Trump and Howard Lutnick, Secretary Lutnick, talked to Intel about the progress they were making in the hurdles that they had to hop over in order to get the money, and I don't think they're particularly happy with that progress. And so in the end, they worked out a deal where Intel is going to get the CHIPS money, but in exchange, we're going to get some equity. And equity is not voting, so there's not going to be government intrusion into the business of Intel. It's more like a down payment on a sovereign wealth fund, which many, many countries have.
Kevin, though, is this the beginning of a larger effort by the U.S. government to take equity stakes in other industries that we subsidize or other companies in the AI and chip space that we subsidize? So a good example is AMD. Another example might be Taiwan Semiconductor.
Right, well, I think this is a very, very special circumstance because of the massive amount of CHIPS Act spending that was coming Intel's way. But the president has made it clear all the way back to the campaign that he thinks that in the end, it would be great if the U.S. could start to build up a sovereign wealth fund. And so I'm sure that at some point there'll be more transactions, if not in this industry, in other industries.
Okay, so we should expect the U.S. government to be taking more equity stakes in businesses around the country. That is something that if you're a CEO this morning watching us, you should say, okay, the Sovereign Wealth Fund may be coming and trying to effectively buy in some kind of equity stake.
It's possible, yeah, that's absolutely right. You know, that if in the past the federal government has been giving money away lickety-split to companies, and the taxpayers have received nothing in return. And so now what's happening with the Intel deal is the CHIPS Act money is going out as planned, but instead of it just going out and disappearing into the ether, the U.S. taxpayers are getting a little bit of equity. I can really not see how anyone would think that's a bad thing, unless you thought that the government was then going to go in and run the company. But these are going to be shares that don't have voting rights. The government's going to stay out of it.
Well, it goes back a little bit to the Ronald Reagan quote that I started with, which is when, for many, many years, you know, you and I used to have conversations about Solyndra and how I think you thought that was a terrible, terrible mistake for the U.S. government to be getting involved in. We have been exporting the idea of a free market around the world for as long as I can remember, and this is a major shift. Do you not agree?
No, I think this is a very special case of Biden committed the money. You know, President Trump and Howard Lutnick weren't very clear that they wanted to continue to let the money go out because the paths weren't being crossed, the hurdles weren't being crossed. And so I think it's a very special case. But again, the general principle that if the U.S. government is able to create a situation that benefits everybody, then it should benefit the taxpayers too.
But if you're saying that this is really just the beginning of more as it relates to a sovereign wealth fund or something else, it would be suggestive of something very different. And I wonder how we in the United States and maybe even around the world should think about the idea of national champions, which is something that we've been, and the Republican Party in particular, has been quite critical of for years.
No, I mean, we're absolutely not in the business of picking winners and losers, but this is not a thing that is unprecedented. If you look at it right now, the U.S. government owns most everything of Fannie and Freddie. And the president, led by Bill Pulte and Howard Lutnick and Scott Bessent, are studying what should we do with that equity in Fannie and Freddie right now. They've been bringing in Wall Street leaders to discuss it as well. And so it's not unprecedented for us to have a little bit of equity in something. And again, what President Trump wants to do at all points in time is maximize the value of taxpayer dollars.
Well, let me ask you this then. In terms of improving the future of Intel, one of the things that it needs more than anything else is demand for its chips, which it does not have at the moment. And so there's two ways to get there. One is just make better chips, which they need to do, but the other is they're going to have to find customers. And the question is whether you believe that this administration is going to use its influence with other companies that would otherwise be the buyers of these chips to buy said chips. We had a period of time, remember, where Gina Raimondo in the Biden administration was trying to persuade Amazon and so many other companies to buy these chips unsuccessfully at the time, but criticized, if I remember, by Republicans for doing such a thing. So do you believe that someone from the administration is going to call up any of the tech companies and say, you know, you're building a data center, we'd love for you to use Intel chips?
No, I don't expect that's what's going to happen. I think what is going to happen is with the cash inflow that they've gotten, in addition to some money from outside private funders, Intel is going to get its act together and once again become the leader in chip space.
Can I just ask one related question? Because I wonder if you think there's a historical sort of rewrite of history. Some people have suggested that the Biden administration should have taken equity the first time around when the CHIPS Act was first put in place. And the reason I'm curious about that is because I think at the time it was clearly to incentivize chip companies to come to the United States, do business, build fabs, and the fabs at the time were considered uneconomical, meaning companies didn't want to do this unless they could be subsidized. Now, maybe you could argue that given the tariff regime that's been put in place, it's changed the economics of what the playing field looks like today. But at the time, I think it would have been very difficult to go to these companies and say, I'm going to give you cash, you're going to give me equity, because I think they would have said to you, then please don't give me the cash. Am I wrong?
Well, again, if you're a company that's losing money, the equity doesn't have much, if any, value. And the bottom line is that President Trump is building an America First agenda that includes, as you say, tariffs, which will make it so that people are much more incented to bring their production onshore. And so 100%, we expect that companies like Intel that are onshoring production are going to become increasingly profitable because of the president's trade policy.
Kevin, it's Will Fair. I wanted to move the conversation on to the Fed. Did you welcome the tone of the chair's speech on Friday, the pivot, I guess, that started to appear?
Right. Yeah, I think that the pivot was accurate. It was data-driven. You know, if you look at the trailing 6-month inflation rate, it's 1.9%. Core is about 0.5% higher than that. And so inflation has gone way down. Meanwhile, the economy is looking strong, but not too strong. And so I think it's appropriate for the Fed to consider now doing what federal funds futures markets are saying they're going to do with debts cutting rates. And so I think that the Fed's a little bit late to the game, but I thought that the presentation that Jay Powell made up at Jackson Hole was sound.
Maybe there's still time for Jay Powell to have his term extended and you won't be considered as the replacement.
Oh, shucks, I don't know.
You think it's impossible to get back in the president's good books for Jay Powell?
Yes, I do. Yes, I do.
And when do you think he'll make up his mind, the president, for the vacancy there?
Well, Secretary Bessent is running a thorough search process. There are a number of really excellent candidates being interviewed by him and the president, and I would expect that this would run out for another few months before the president decides.
Kevin, Leslie Picker here. I'm curious kind of where things stand with the Section 232 review, especially in light of the strategy with Intel, with MP Materials. How are you strategically looking at kind of protecting national security crown jewels in this country, given the tariff picture as well as the potential to take stakes in certain companies?
Right. Well, you know, we've got 232 investigations and 301 investigations, and then also tariff deals that were cut left and right. You know, we've got the Koreans coming in today to hopefully finalize the deal. And the bottom line is that, as you saw earlier in the spring with the rare earths and the magnets, that it's unacceptable if a potential adversary has control, a chokehold on the American economy. And President Trump's team has studied the U.S. economy and studied our trade patterns with foreign countries, and they're identifying things that need to be onshored more for national security reasons. And so that's what's going on with that.
Kevin, I'm really interested in a broad point here, and not the specifics, and I know you wouldn't try and comment on how a foreign government should run themselves, but a country like the UK, a deep ally of the US's, who's already done the trade deal in large part going forward, should the UK, you know, the big part of the discussion, as you know better than I, with all sorts of different trading partners, has been the topic of non-tariff barriers and different tax structures and things like that that the president wanted to be removed. And then we see a deal like this with Intel, where the government is taking a big stake and helping with investments. State support might be a generous phraseology, but it's not a million miles from that. Should countries like the UK think along the same lines? Should we invest in domestic champions to try and compete, or would that count as a non-tariff barrier that we're not allowed to do?
Oh, I don't think it's a non-tariff barrier. If you look at the non-tariff barriers, they're literal barriers, right? They're things that say, for example, if the food is genetically modified, or if we have Roundup on the fields or something, then we're not allowed to ship the agricultural products. And one of the things I think is a great victory of all the trade deals that we've been striking with President Trump's leadership is that we're doing away with those non-tariff barriers, so that we will be able to, after this Korean deal, sell U.S. cars in Korea. We will be able to sell U.S. agricultural products into Europe. We'll sell beef to the UK. And so I think it's a completely different thing. And again, the Intel deal is something that we inherited from the Biden administration, a commitment to give them chips money. And we made a better deal than Biden did. And that's why the U.S. shareholders, or U.S. taxpayers own about 10% of the company.
Can I ask you a slightly different question about tariffs? And I'm sure you've heard the same thing. If you talk to some of the automobile makers, for example, they will tell you that we are, because of the way the tariffs are set up, and even the costs in the United States of building cars here, that actually we're creating our own silos. So this idea that we're going to be exporting our cars to other countries, we may have the opportunity to do such a thing, but we can't do it in a competitive way relative to the other car makers that are outside of the country, China, obviously, and some others. And so I'm curious how much business you think we ultimately pick up with the quote-unquote opportunity to export versus the opportunity to just raise prices here in the United States?
Oh, I think there's an enormous amount of opportunity to pick up business. And the way to think about it is that we've got countries like Korea and associations like the EU, where they have their own regulations for cars, and unless the car passes exactly those regulations, then we're not allowed to ship the car there. And they could be very, very different from what you're allowed to do if you're going to sell a car here in the U.S. And if you're thinking about selling an American car into Korea, then retooling a whole factory to meet the Korean regulatory standards just doesn't make a lot of sense. And so I think that harmonizing on those regulations has been a key feature of the trade deals that we've been negotiating, and it will absolutely open up markets for U.S. products.
Okay. Kevin, it's great to see you this morning. We appreciate you taking the time on this final week of August. Just as busy for you and I, but hopefully some people are watching us from the beach.
Yeah, like Joe.
For their sake. Still to come, Mohamed El-Erian on Jay Powell's signal of a rate cut and how investors should be thinking about the rest of 2025. And then, will Bitcoin replace the dollar? Venture capitalist and Bitcoin bull Tim Draper joins us. Squawk Box will be right back.
viciously.
We're watching shares of NIO, the Chinese EV makers, surging double digits in Hong Kong. As you can see, it's up some 15%. By the way, it was a strong session in Hong Kong today, following on from that strong performance on Wall Street on Friday. Also, US shares jumping 9% last Thursday and 14% on Friday after the company unveiled its latest SUV model with a battery subscription plan. That plan lowers upfront costs while allowing customers to swap or upgrade batteries through a monthly fee. The new SUV will cost about $43,000, making it NIO's most affordable EV today.
And below that 60,000 threshold that
Yeah.
Phil was just telling us about.
Right in between. I think he's talking below 40 and above 60.
Right.
So it's stuck between.
Kind of in the middle there. Raymond James downgrading American Airlines to a market perform, the call based on the outcome at Spirit Airlines, which is exploring strategic options. The analysts there saying the stock is nearing its $114 price target and the risk reward looks more balanced. Meanwhile, the firm upgrading Alaska Air to outperform and introducing a new $70 price target as demand and competitive capacity trends increase. Alaska up about 1.4%.
I want to show you some crypto this morning because there's been a lot of movement going on here. Bitcoin trading near its lowest level since July 10th. And after hitting a new intraday high yesterday, Ether now at its lowest level since Friday. So Bitcoin's now at about $111,000. Ether, though, obviously down but up, if you know what I mean. $4,600 basically.
Still to come here on Squawk Box. Stocks rallying on Friday after Fed Chair Jay Powell's speech signaling the central bank could begin easing monetary policy. Futures, though, just pulling back this morning. We're down, what, about a third of a percent for the S&P and the Dow, the Nasdaq down about 0.4%. After the break, we'll talk to Mohamed El-Arian. He'll join us to discuss what his take on Jay Powell's speech was, what it means for markets. That's next. Welcome back. Fed Chair Jay Powell finally giving the market what it had been clamoring for on Friday, a pivot. Let's talk about that now with Mohammed El-Arian, who joins us. He's, of course, the Chief Economic Advisor at Allianz and President of Queen's College, Cambridge. Mohammed, great to see you. We've switched countries this week. Obviously, you've written about this in the FT today, and it's a great read. I recommend people have a look. But you're actually quite critical of Jay Powell in the article you've put out this morning.
I am. Let's just start with what was timely, if not a little bit late, which is a recognition, a la Chris Waller, that the risk to the employment side of the mandates are higher. And while there's inflation risks, he downplayed the second and third round effects of tariffs. I think that is correct, and I'm glad he did that. The market repriced, of course, September cut to 85%, and the remaining 15% is between nothing and 50 basis points. We have to remember that. But what next? He didn't give much clarity on what happens after September. And then he said almost nothing about the policy implications of all the structural changes that he mentioned in the labor force, in the trading system, in the operation of the domestic economy. And that matters because it matters for key issues of monetary policy, the level of interest rates, the equilibrium level of interest rates, the equilibrium level of the balance sheet, and it also matters for the framework. The last thing we want is a framework that once again is dead on arrival, or like the Wall Street Journal characterized the 2020, which was the most poorly timed change in the monetary framework. So I'm glad for what he said, but I'm disappointed for what he did not cover.
And I guess your point is that the Jackson Hole is typically a place where you would expect or hope to see some of those broader, longer-term topics covered. One other thing that you raise in the op-ed as well is this point that's been discussed a lot about what the long-term inflation target should be. Do you think it should be 3%? Do you think it will be 3%? And what would that mean for equity markets and other assets if indeed that shift one day formally took place?
So first of all, Jackson Hole is the place to do it. This was his last Jackson Hole. He's had 8 of them. You would have expected him to talk about lesson learned. You would expect of him to keep to strategy issues, but he didn't. And that's because his tendency is to be data dependent, not strategic. In terms of the employment target, look, we're running an employment target around 2% de facto. For 4 years now, we've been above 2%. We don't get back to 2% for another 2 years, according to the Fed. So de facto, we're running with a higher inflation target. Now, they ruled out any discussion of this in the framework, but I can tell you that behind closed doors, people are asking the question, is a better inflation rate 2.5% to 3% than 2%? And the reason is, again, the structural changes. And he's acknowledged by putting the risk on the employment side at a time when inflation is still going up, he has somewhat acknowledged that for now, the 2% inflation target is not as applicable as it has been in the past.
But it doesn't appear, Mohammed, that the bond market seems that they've lost any kind of credibility as inflation fighters as a result of the comments on Friday, right?
So look at the long end. I've been absolutely fascinated by what's been happening to the long end of curves. And not just in the US, around the world. Last year, Japan hit its highest level. The UK is at its highest level in many decades. The reaction of the long end here, the 30-year, was very muted compared to what it was before. You saw in the chart, we basically back at where we were on Friday morning, within 1 or 2 basis points for the 30-year. I think what the long end is recognizing is this notion of fiscal dominance, that we've entered a period of high deficits, high debt, and that monetary policy for now is going to be impacted by what's happening elsewhere in the economy. And I think that is what you see in the long end, and that explains the 230s of 120 basis points.
In terms of long end rates, do you think that US long end rates can be dragged higher if there's a big fallout in Japan or a big fallout in the UK, for example, or not?
To some extent. It's much bigger the other way around. If you have a big fallout in the US, that will pull the rest of the world up. we get pulled out to some extent. I mean, to give you a sense, the beta for us to the rest of the world. So if the US goes up to the 30-year, the beta elsewhere is near 1. In the case of the UK, as you know, Wilfred, is above 1. However, if the rest of the world goes up and we react, our beta is below half.
And Mohammed, I want to pivot just to a wild other conversation, given that we've gone over where this market may go. We've been talking all morning about Intel. You're in London right now, or the UK, I should say. Do you have a take on what we talked to Kevin Hassett earlier. He basically said pretty flat out, the US government's going to not just take stakes in things like Intel, but we're going to have a sovereign wealth fund that's going to be taking stakes in all sorts of businesses in the United States, it sounds like. What do you make of that?
So I'm getting nervous at this notion that this is beyond Intel. The only thing I like about this Intel transaction is a message to the private sector: there is no free lunch. If you're going to take money from the government, don't think it comes free. However, I worry about two things. I worry about the spreading, and I worry about the lack of respect in this critical difference between ownership and control. Ownership is fine. Starting to impact business decision is really problematic, as Kevin said. What distinguishes the US from the rest of the world is a dynamic entrepreneurial private sector that reacts quickly. And I just would be very nervous if suddenly we go into a world in which the government starts impacting lots of business decisions.
Okay, but do you think there's a difference between taking non-voting stakes in businesses and basically taking non-voting stakes in businesses and maybe trying to influence things around the edges, right? I mean, that's what we're talking about here. There was a piece over the weekend in the New York Times that called Donald Trump the new activist CEO, the ultimate activist CEO.
Yeah, and I go back. It's between ownership and control. If they want to have ownership, if a sovereign wealth fund wants to have a stake in corporate US, okay, that's fine. But please don't go anywhere. Control, business decision, influences, that is a very slippery slope. Countries have gone down that slope, and it ends up by undermining the economic outlook and prosperity.
Mohammed, great to see you as always, and thanks for joining us on a bank holiday over there in the UK.
Actually, I'm in the US, but thank you.
Oh, really? Oh, sorry, I thought you were in the, there we go. Well, thank you for joining us regardless. Great to see you, Mohammed. I thought that was your study there in Cambridge that I've seen you join me from before. They obviously all look the same, whichever house.
Fewer books here.
Coming up next, venture capitalist and Bitcoin backer Tim Draper on where crypto prices could be headed and why he thinks the dollar is doomed. You don't want to go anywhere. Squawk Box returning after this. welcome back to Squawk Box. One of the earliest crypto investors is backed over 30 unicorns, including Tesla, SpaceX, Skype, Coinbase, and Robinhood, just to name a few of his big winnings. Joining us right now, venture capitalist Tim Draper. He's the founder and managing director of Draper and Associates. Good morning to you, Tim. It's great to see you. As I mentioned, you have been early and early often with a lot of things, and one of them is Bitcoin. You have a particular view that we are about to go on a new rocket ship as it relates to Bitcoin.
This is a really exciting time for the world in so many ways, where Bitcoin's going to completely transform the economy, and I mean, three things that are really major. One is Bitcoin's going to completely transform the economy. One is that AI is going to take all our jobs. And one is that stem cells are going to make us live forever. So Bitcoin, live forever, and lose your job.
That's a lot to contemplate all at one time. Maybe we might need the Bitcoin to fund the UBI or whatever is going to happen. But we're looking at Bitcoin right now.
We'll start with Bitcoin.
At about $110,000, $111,000. What is your bull case for what happens next? We've obviously had a big run up. There's been a little bit of a pullback more recently. What is the next inflection point if you see one?
So I've been predicting $250,000 for a Bitcoin for a long time. And turns out I haven't been right yet, but we've gotten halfway there, so that's very exciting. But Bitcoin is a hedge against bad governance, against government spending, inflation, which you heard from the last speaker. Bitcoin is your alternative that allows you to deal with the major changes that are happening in government policies over time. And you're seeing it in many, many different places, and it's sort of, Bitcoin started in places where you wouldn't expect something to start. It started in Nigeria and in Argentina and in El Salvador and in Malta.
Right.
Places where you would think new technologies wouldn't really occur, except those were the places where in the case of Malta, it was freedom, but in the other cases,
right,
they weren't confident about currencies. And over the long haul, we're seeing government spending just, uncontrolled, and it just keeps going. Government spending as a percentage of GDP has gone on a rapid tear over the last 100 years, and it doesn't look like it's slowing down in any way. And your only hedge against that kind of government spending is Bitcoin, unless you want to hold gold, which is like holding onto shells, or
right.
It's like being prehistoric in your thinking about.
Tim, what is your take then? Talking about government spending and free markets and all the things all wrapped up in one in this decision by the Trump administration to take a stake in Intel.
Yeah, I think, well, it's interesting. That was both administrations. One actually made it possible, and the other one just decided where to put it. But in both cases, our government is spending more money, and that takes away from the free markets. I'm a believer in free markets. I'm a believer in free trade, and where the government gets involved, it always slows down the economy. And that's true in every situation, every government. Socialism just never has worked, never will work. Capitalism is it's just a better system of government.
Tim, what do you make of the idea? We heard from Kevin Hassett saying, look, they want to build, this administration wants to build a sovereign wealth fund. He talks about taking stakes, not just in an Intel for national security reasons or something else, but sounds like he wants to take stakes in other companies as well.
Yeah, I think that's fine. I think a sovereign wealth fund is a way to keep Congress from taking the money and spending it. And so I kind of get it, but on the other hand, why don't we just restrict Congress? There's so many better ways to operate, but I mean, I think as an investor, a hedge against all of bad governance is to buy Bitcoin. So I think this is a really good time for Bitcoin. I think the government is aligned with us in saying, hey, we're gonna create clear regulations for cryptocurrencies and stable coins and a number of other new technologies. And at the same time, government spending just keeps going up. It doesn't matter whether it's Republican or Democrat in there.
I get that there's obviously a limited amount of Bitcoin, or there will be in this world, so that argument obviously stacks up relative to fiat currencies. But when you see other cryptocurrencies take off, like Ethereum has in the last few months, I guess there's a pushback to the Bitcoin argument, which is there's not a limited amount of cryptocurrencies out there. So what's the argument against that there can't be debasement via just new cryptos appearing and soaring like Ethereum has?
Oh, I think there will be many other cryptocurrencies. Competition is good for the world, but as a percentage of all cryptocurrencies, Bitcoin, with the first boom, they had 40% market share. With the next boom, they had 50% market share. And now market share is running around 61, 62%. Over time, the dominant supplier builds the strongest network, and so all the programmers program to that dominant supplier. A lot of really interesting, innovative things happened when Microsoft was getting going, and they were the platform everybody built on. But there were a few really important applications, and they all got ported to Microsoft. Well, the same thing's happening now with Bitcoin. All of these smaller cryptocurrencies are experimenting and doing interesting things, and all the great engineers are porting those to Bitcoin. And so there is a gravitational pull toward Bitcoin, and yeah, there are other currencies that will come up as flashes in the pan. But I think overall we've got a major trend toward Bitcoin.
Okay. Tim, want to thank you. Great to talk to you this morning. Look forward to seeing you hopefully in person sometime soon. Thanks again.
Great. Thanks for having me.
Squawk is coming right back after this.
to get it done.
Breaking on Squawk this morning, I want to show you some video. The White House's director of the National Economic Council, Kevin Hassett, vowing just 40 minutes ago that U.S. taxpayers will benefit from the government's investment in Intel and that we, the country, may see similar government transactions in other industries. Meantime, Keurig Dr. Pepper buying coffee company JDE Peet's for $18 billion. It's going to combine those coffee assets with its existing coffee business and keep its soda and Snapple business separately. So that's a bit of a spin. And then Kevin O'Leary is now officially one of the 3 people who jointly just bought the most expensive sports trading card in history. It's a Michael Jordan, Kobe Bryant Fleer card. I think it's actually an Upper Deck card for $12.9 million. He called into the show and unmasked himself right here on TV.
And he doesn't like the Intel transaction.
And he doesn't like the Intel transaction either. So lots of news for you. Wilf and Leslie, thank you. We're going to be here all week together. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla. Jim Cramer is back at Post 9 along with me and David Faber here at the New York Stock Exchange. Futures are backing off a touch from Friday's big reaction to Jackson Hole and the Dow's record close. Big week ahead for the AI trade with NVIDIA, Dell, CrowdStrike, and some consumer names like Gap, Urban, and Ulta. Our roadmap begins with the market setup going into this possible September rate cut, plus, of course, some talk about NVIDIA's earnings this week.
Also ahead, the government does take that 10% stake in Intel, one of President Trump's key advisors saying more transactions could be on the way. And Keurig Dr. Pepper is buying the Dutch coffee company JDE Peet's. Price tag $18 billion. We'll talk about that deal.
Before we get to the markets, Jim, we're so glad to have you because even in these dog days of August, a lot happened last week.
Look, I got to tell you, I thought that I had picked the right. You look at the calendar in January. All right, so what week where nothing will transpire? Right? Well, no, that's not the world we're in, and I think that everything from a belief that Jay Powell was going to somehow be a no dove, to the president just making news like there's no tomorrow. I mean, everything that makes me feel that you can't. There's no time you can go away anymore. You just can't. I mean, look. When I was growing up, my father used to go to High Point, North Carolina, for some shows that he had to do for one of those many businesses that was like just okay. And then it just fell down. Well, the president wants to bring back High Point, North Carolina furniture. And he also wants to bring back Grand Rapids, Michigan. David, the home of Steelcase, which has got that great bit from HNI, which happens to be all American. So it just doesn't matter. You're going to find something it's not going to slow down. I will say that I thought that it was great that Powell did what he did because I don't like the way you got to get that home equity loan down. That was the takeaway from the Home Depot call, which was a seminal call. We just don't have enough projects because people are very uncertain. That's what they said. But also, we need short rates down, if only so we can get some home equity loans, David. So I don't think What?
Nothing.
Okay.
Nothing. Is something wrong?
No, I don't know. You looked at me like something was wrong.
I've looked at you the way I always look at you. Maybe you're out of practice.
I probably am. I'm used to my wife looking at me.
Lovingly. So loving.
Yeah,
She's probably glad to have you back at the office.
Thank you. But my point here
yes, sir.
is that we have a situation where I am afraid that we lower rates, short end, and then the long end goes up. So the mortgages don't work out, but we do get home equity loan, and we do need something going on in housing. Housing is 10% of the economy, punches above its weight, and not everything can be enterprise software.
No, you've made that point many times in terms of housing. All right, so we're going to get, 25 basis points in September?
Yeah.
And what's that going to mean?
It means a lot to these jokers who do this, the algo nonsense. I mean, look, pick stocks.
Yeah.
Now, September, unfortunately, is a weaker month historically for stocks. But the Journal comes in with the headline. I mean, it's just like, doesn't it ever bother you that it's like they immediately just pronounce, they haven't pronounced the death of tech, I don't know, maybe since I left. And I do look at it and I just say, are you kidding me? Once again, we have to deal with a story which just says, well, tech is historically weak.
Well, you missed an interesting week in the market as well. Now, obviously, Friday it punctuated by a big move up.
Yeah.
But that said, we did have the momentum trade in certain names.
Oh, the end. What are you kidding me?
The brief end.
Oh, the end. I'm so bad that
It's the end. It's the end.
Palantir's done.
All right, guys,
Palantir's
fine.
done.
We had
He's going into a new business. He's going into the food
I
business.
used the wrong word. We had
Mini
the
rotation.
suspension
There you go.
of the momentum for
I like
a
that.
period of days where
Yeah, that was
Palantir
amazing.
suddenly its price to revenues of 90 times seemed to get people's
David,
attention.
ain't you ever heard of the rule of 90?
Yeah, I've heard of all the
he
rules,
does this
man.
stuff. He actually he's fixated on earnings per share. It's been his biggest problem for the last decade.
Oh, you're right. And by the way, those who are probably are not making nearly as much money as those who aren't.
I got a guy on.
That's been
I
20
got
years.
this guy Kurt Wolf on tonight from Pitney Bowes. Now, if you take a look at Pitney Bowes, that's like and then boom, and that's because they got out of the one thing that was going to be the growth engine. Kurt Wolf, and then he brings in a CFO, both on the board of GameStop. During the conference call, someone says, "We've got the GameStop Dream Team now at Pitney Bowes." Now, what? The Dream Team?
That's not a phrase I ever thought I'd hear.
No, the Dream Team of GameStop.
Dream
They
Team.
brought it back. I
Yeah.
mean, no.
All
It's not
right,
like
so
that.
this is the world we're living in now. And we enter another week here. NVIDIA earnings obviously looming a couple of days from now.
Looming.
They are
We
looming.
sound like everybody.
They're looming.
Yeah. Oh, boom. Yeah, looming.
You're obviously on the hunt for any cliches
No,
today.
I mean,
On the heels of your return.
I mean, look, people, and it's the key to this
I thought
market.
you went away to relax, come back, maybe show a little
Plenty
love.
relaxed.
Look
I was
at you.
in Croatia. I feel great. Now here's the deal. NVIDIA once again is the key, and we have to know how China's doing. You know, it's like every cliche. Oh, there I am. That's near Havar.
That's Havar.
How did you know? Did you put it through Grok?
No, I've been there. It's so beautiful.
Yeah.
Yeah.
Yeah, I
Obviously,
relaxed there.
Did a lot for your mood.
Yeah, I had
I can see that.
I had a mezcal there.
Yeah.
Now, what I'm saying, Carl, is that we get in these situations where it's a do or die. It's not do or die. Look at the stock of NVIDIA since it died. I mean, you see where it died? And then was it Lazarus? Was it like a Lazarus thing?
It didn't die.
Right. Well, that's why
It stopped going up for a brief period of
What
time.
it did though was it had a what did Palantir have right now?
It had a momentum.
No, you had a term for
it.
it.
What?
Succession. You know, to stop. How did you say Palantir is having
Suspension.
Yes.
NVIDIA might have a suspension, and we all might just say, well, you know what? It's finished, and oh, this is the other refrain. I mean, there are guys in Croatia who came up to me, literally, in the town of Split, like Splitsville, you know, and said, literally, I think it's over. What? The big spend. The tech companies have spent too much. I said, well, tell me. He says, well, AI, OpenAI. I said, well, now they're worth $500 billion for their spending. I said, well, Grok. I said, well, you know, Grok is now, if they don't stay involved, then I think they'll fall apart. You have to be number one. And then I said to him, do you remember when Google decided, you know, we're going to go full bore, but Microsoft said, you know, we're going to stick with Bing Crosby? They're Bing, what was it?
Bing. Yeah, just Bing.
Bing. Well, I mean, so, was that a smart move? It is a battle. It's not just like, let's wake up and spend a lot of billions of dollars for no reason why. Satya Nadella is not an idiot. Can I stipulate that?
Yes, I agree
So
that would be the case.
If he spends money, then, Musk, moron?
No, and your buddy Zuckerberg certainly not a moron either, and spending. Although last week again we got the suspension of additional spending, perhaps
Did
on
he
AI.
just go out again?
On spending money to get new people.
Yes,
to come in.
hiring freeze.
Hiring
Yeah,
freeze.
I'll tell you, you know what he needs? He needs Harry Rosen from the Eagles. He's rebuilding a team even as we speak. So I just find these guys, they're not, the people who write these headlines and write these stories saying that these people are...
Well, that's an interesting analog because the question then is there a salary cap, right, that these companies are going to
That's why
face?
they're doing what they're doing, because there's no salary cap. There's no salary cap in that industry, so these companies want to pull away. By the way, has it been wrong so far that they've been spending, okay, so well maybe Amazon hasn't had as big a year as, I don't know, Norfolk Southern?
We'll get to the rails later. But
I knew that was a segue.
Well, I get to David's point though. If Powell hadn't been dovish on Friday, we might be talking about Palantir at 140 today instead of whatever it is.
But there's
and you were looking for 200.
Right. Okay. So now, I came close the first time.
Yes.
I made the playoffs.
Yes.
Back in the new season. I think that there's a misinterpretation. We have a market that is not like any other market that we used to have. When you have easier money, apropos of rate cut, that just inspires I'm going to call them Gen Z buyers. They just go even crazier. and they use a lot of margin, and they go buy a lot of stuff. They're headstrong, they're foolish, you know, kind of like James Caan in Godfather.
Yeah.
You know,
That's been playing actually.
What happened to Sonny?
saying stupid things.
Didn't end well.
So I just think that they do a lot of this stuff, and when the money's even easier, they just go buy more. And look at Ethereum. Yeah, Ethereum had a big weekend. I tried, by the way, I tried to buy some of this. I tried to buy a cappuccino with Ethereum.
Didn't work for you?
In Split.
Yeah. No, you did. You did.
Yeah, I did. I said, you guys take Ethereum?
And they did.
Guys said, we don't even take American Express.
Ether did do a record over the weekend, and the rotation out of Bitcoin into Ether is
Incredible.
continuing apace.
Yeah, it's amazing.
Dropping
It's
that
almost
ENR, right? Look at
I
that.
know.
Yeah.
It's as powerful as K-pop.
It may
That was
be.
the other thing people
It
talked
may
about.
be.
That was universality in Europe. Yeah, K-pop.
That was.
K-pop, so K-pop. Yeah, I'm all over that.
All that said, yeah, no, you know, there is this question as to how quickly the models are advancing at this point, whether things are slowing a bit, and where we stand when it comes to some of these big questions in terms of agendics and how quickly that will move, and whether we'll replace software as a service in certain places, and in general whether this is going to, the pace is going to slow a bit in terms of the advancement, which may be viewed positively rather than negatively by some.
Well,
the sense that it allows, and there was a story, I think it was a column in the Journal this weekend, you know, allows for companies to start to really try to understand how they can effectively use AI.
Right.
As opposed to sort of right now being in a position of still waiting and watching.
Well, look, you can put a picture in of where I was on the graph and be told what town I'm in. I mean, it has uses.
Yeah. Oh, that has many uses.
Many uses.
Yes.
I think that
but
it's
the question is in the enterprise, and when you're going to start to, we've been talking about it now for over a year, when you're going to start to see some of these things actually generate a real return, or the efficiencies going to come to bear that we've been talking about.
Well, I just think it's happening right now. Everybody knows it is, but now it's a little ridiculous. Everyone says they have an AI strategy. I just think I don't want to be left behind from one of these guys. I just don't. I have all the money in the world. I've got the greatest balance sheet in the world, and you're telling me to go be like Apple and don't invest?
Back to your point on NVIDIA, they're all going to, nobody's cutting back spending at all.
Why should they? What do we think about the stock of Apple, given the fact that they're not spending the money? What do we think about that? How's that doing there? Down 9%. When it was down 30%, people, oh boy, talk about an obituary. You know, as a person who's written probably more than 1,000 obituaries, sorry to bother you this time of day, boom, Apple.
Yeah, remember when investment windows used to be bearish? Google, Amazon, remember, that used to be a bad thing.
But by the way, I still think Apple's got this great installed base, and someone's going to, they'll have to make a deal. We're all waiting for Judge Mehta, which is hilarious, right? Judge Mehta's going to make the move here.
Yeah.
Meta versus Meta? No, Meta and Meta.
We're going to get Jim's take on a bunch of the issues that came up last week. Furniture, more on software, Intel, of course, the healthcare trade. When we come back, the White House and the private sector, the U.S. government now taking that 10% stake in Intel. Fresh comments from Kevin Hassett on Squawk today. Futures moderately in the red. More Squawk on the Street in a minute. Intel shares building on their double-digit gains for the month. The U.S. government taking that 10% stake in the chip maker, valued at $8.9 billion. In a headline, the New York Times calls the president corporate America's newest activist investor. And earlier on Squawk Today, National Economic Council Chair Hassett was asked if Intel's agreement with the White House was just the beginning when it comes to government involvement.
I think this is a very, very special circumstance because of the massive amount of CHIPS Act spending that was coming Intel's way. But the president has made it clear all the way back to the campaign that he thinks that in the end it would be great if the U.S. could start to build up a sovereign wealth fund. And so I'm sure that at some point there'll be more transactions, if not in this industry, in other industries.
Of course, we had Lutnick on last week, Jim, where David asked about governance, and El Arian this morning talking about the difference between ownership and control.
Right. Look, I think this is, I've listened to all the commentary. I think what's been left out is the fact that this is a national treasure that could have gone bankrupt without this. I don't think people look at the cash flows. I don't think people look at the capital expenditures. I don't think people look at the cash position. This company was in real trouble. We all act as if it's the old Intel. They needed this. They bit up more than they could chew.
Well, let's be clear what they need. They were getting money from the federal government that was going to be essentially, I don't want to call it free, but it wasn't a loan, it was a grant.
They couldn't meet the milestones. They only took $2 billion.
Right, well, I think, right, although
yes, they did not take the other $8 billion.
Right, but now we're talking about $9 billion in total.
Right.
2 or whatever, but 3.7, and then it ends up to 9.
Right.
Some of it will be converted from what is the grant into equity.
Right.
And then the rest will be equity. But it's for the existing shareholders. It's not necessarily bringing new money to the company, although I guess your point is they weren't hitting milestones, so they wouldn't have gotten the money?
They weren't going to get the money, no. Okay. So we keep forgetting that. The other thing we keep forgetting is you couldn't let this company go. It's too important a company. Now, we look at a $25 billion, we have a $100 billion company. What we're not looking at is that he had to raise money. Luke Boo had to raise money. He was out there, he had hat in hand. Well, it wasn't even clear how he knew how to raise money. So he got the money from a real good source.
Again, they brought in equity that was otherwise going to be grants, and they are now diluting shareholders, but they are getting access to that money. They brought in $2 billion in new money from SoftBank.
Once the money came in from the president.
And, well, actually, that was done. I mean, that deal was announced.
Right, but I'm saying if people want to throw money at this company now,
and then I reported last week that there were others that, as well, that they were talking to about potentially also additional equity.
Right, but
because to your point, they need money.
Going well.
No, I know it's not going well, and you can make the argument that this is very central to the national security of the country. That's a pretty simple argument to make. Are you then therefore comfortable with the U.S. government owning 10% of a company that is not bankrupt, by the way, different than GM, different than Fannie and Freddie, in that they were not insolvent?
Wrong era. This is 1979. This is Chrysler, okay? This is Lee Iacocca recognizing that if they can't pull out of the tailspin, things could really get bad. So the government takes warrants, 14.4 million. Now the numbers sound very small. They take 14% of the company.
I thought that was loan guarantees way back then.
It was loan guarantee. Now, David, this is something I think you need to know. Loan guarantee, Pressure Loan Guarantee Act. Congress was involved. Those crazy guys, 530. Why many got there for?
535.
I don't know. I think it's like a number of. Is it owls or a Congress? If you have like a lot of owls.
Yes.
Or something. A Congress, a Parliament. But the main thing I'm using in this analogy is that once they got the money, they invented the minivan, the K car, stock went up. The government ended up making a lot of money, more than $300 million. I helped sell the stock that they got when I was at Goldman. But the thing that people have to recognize is this could have been Chrysler. And the president changed it so it wasn't Chrysler. Now, he did change the terms, so what? One was by Congress, yes, but we're not in that mode anymore.
One was by Congress, yes.
One was by Congress, one if I land, two if I see it. I don't know.
Right now, it's just,
this is what matters. As you were intimating to me earlier, the power of the president is rather extraordinary versus
we're in a current administration where one person makes virtually every decision.
But this was a great decision.
What was a great decision?
This decision to give them money. This company is going to be saved. It's a national treasure.
How do you know?
You could have.
And by the way, if things don't go well, the risk that the Journal highlighted last week was that they'll try to keep it from being a mistake, and that could get very expensive.
I think Luke was maybe the most confident man to do what he had to do, but he didn't have the money. I think we do need these boundaries. I don't disagree that it was certainly novel. It was not what we wanted. We as a country would not like that to feel like we need this. But what matters is that I think people need. You got to look at a balance sheet. And it's with a balance sheet.
You conceivably could have also eliminated some of the things they needed to meet the and given them the money as a grant, right?
Right, but
that
they were
would not be
nowhere
something
near.
that you'd expect here.
What is that picture?
This is a new post from the president about what we're talking about.
Yeah. Yeah, they are. The stupid people are unhappy with it.
Right, and I think the president's
I like
point
that.
is that we're going to get something for our money.
It could be like Chrysler, where we ended up making a huge amount of money because once they had the money, Chrysler was alive.
But I do wonder, Jim, whether
79.
Yes, again, this is national security without a doubt.
More than
I mean,
anything.
we need control of chip manufacturing in this country to a certain extent. If and when Taiwan, for example, ever becomes something that is
Don't even say it.
controlled by China.
Don't even say it.
Why?
Because we can't have that.
Right, and so that's why it's at the center of the national
Every
security.
administration official who comes on talking about how we need to secure our supply chain it's the inherent threat of exactly that. Of
course,
National security.
TSMC, which makes the most advanced chips, so there's no doubt about that. In the same way that rare earths and the $400 million equity position that the U.S. government has there. The question, I think, is when you see the president post something like that, is it going to start to be in industries that are clearly not necessarily central to the national security of the country?
I am saying that Intel, while not day to day, may have been month to month. Government puts a stake, government takes a stake, government's gonna make.
You're not answering the question. My question was, does it mean there will be new deals that have nothing to do with really national security? We'll just be doing it to try and make money.
Where they gotta do it for potato chips? I mean, come on.
I don't know.
And that's in one kind of chip. This is the company that was. It's about the balance sheet, and the president fixed the balance sheet. And those who think it was wrong,
it's
you know
not
what?
quite.
You know what they are? They're morons. They're not stupid. They're
May not be
morons.
fully fixed yet. To Carl's
But
point.
Lip Boo comes on day one. Lip Boo is an agent of the Communist Party.
Yes.
On day three, because you had the weekend, Lip Boo is the man to see. I don't know. I like the narrative. It's kind of like a Netflix movie. K-pop.
There's obviously a lot to catch up on with Jim. We'll get his mad dash in the opening bell in just a minute.
I'm here I'm doing all the things I need to do. Take off my shoes, get my tea water ready, meet Nancy in the bathroom. That bitch is always in the bathroom. I don't know what she does in there 8 hours a day. Oh, I didn't have the mic over by the thing. I wonder how people could hear it. Woke up this morning, put on my slippers, walked in the kitchen and saw Nancy. Oh, what a feeling it is to have a woman like her. Nancy feeds me ice cream at night. Okay, I'm in position. It's almost too late for anybody that wants to donate to my vacation. If you mailed it out today, you could get it here. Oh, Nancy, we hit my first support. I'd like to see it go down to the second. President Trump post on Truth Social regarding Intel deal. I will make deals with that like for our country all day long. Bill Miller's Mr. Bitcoin soars 40% as he piles into housing. Chicago. BTC. What the hell is BTC? Bitcoin?
BC Plus.
What are you going to do from that?
Bitcoin ETFs in Japan, regulated purpose, 20% flat crypto gain tax.
David will get you up to speed on this deal to buy the Dutch owner of Pete's Coffee. William Sonoma will talk about the impact of the news on Friday about a potential investigation into furniture, and WSM's getting
Whale dumps,
Opening bell a few
2.7
moments away.
billion.
Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street opening podcast.
We're definitely at a support. My buzzer's going to go off to get my tea here shortly. God darn it, Jim. What's up with you, man? Oh, you. Stop it. We definitely hit support on Bitcoin. I'll be back with my tea. I'd say if it broke 49.90, retest the orb. Where I get my hair cut at. After a little bit, you can go back in there and they'll trim it up a little bit for you for free. And I'm going to go in there and do that. Get ready for my trip.
All right, he's back, and he's got his first mad dash after vacation. What are you going to do?
Okay, so we got to get in the mode of selling.
Oh, dang, man. You don't even give me a chance to breathe.
The capital.
That gum you? President Trump posted blah, 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 blah. Trump's investing a bunch of money in Intel, or securing the CHIPS Act in a way. I don't like to be rushed. Hurry up. Yeah, we definitely had a huge run. God, I mean, we had too big of a run Friday. Did we make money Friday or what? Support level? The first support is going to be a triple bottom at 644586. 10-4. Come on, you stupid. Okay, I'm getting mad. Come on, there we go. What's so hard about that? I think they do this to us on purpose. Intel's already got 17 million in volume. Nvidia's down 63. Tesla's down, AMD's down $5, 469. Ooh, look at AMD. Watch AMD here. You think I'm joking? I'm not. The 29th, we have the 170 strikes. NVIDIA hit my support for a double bottom, triple bottom. We got 4 crows with a hammer. So AMD. Apple's moving up a little bit. I'm liking AMD here. A little aggressive sell-off. White House Economic Advisor Hassler, the CHIPS Act money is going out as planned. China AI chips are in focus ahead of earnings. We got earnings on a PDD. Okay, here we go, right here at 152. $147. So I got a little bit of AMD here. I don't know if it's the right thing, but I'm going to put risky on it. At 147. A circle being broken by Lord by and by. Wrench like me, we're at 164. Give me a little more. You can get out now if you wanted. 172, baby. There it is. I'll take it any day of the week. Out at 170. That's my first trade of the day. SPX is holding up support. SPY. Looks like it wants to form a symmetrical flag. We had 3 black crows with a hammer. Not even a hammer. Almost like a big fat inverted hammer. Spinning top. So tweezer bottom. That I probably would have took that maybe. Three black crows on /ES on the 1 minute. That looks pretty. AMD's back to my entry here. I got a story to tell about this weekend. Tesla hit my support at 336.74 that I called out Friday. Watch Mr. Coin. Google's at resistance. It needs to pull back. Then we got to pull back here on PDD off the 200. I always have these charts set up for different sectors. Like this is my China, top stocks in China. And then Baba with 3 black crows to the 63 for a double top. K-Web had a pretty good bounce last week. Maybe if we respect the 200 again, that could be a good buy. Or as triple top breakout. Yeah, the triple top breakout sounds like a better opportunity. Right off the 63. EMA on the hour. PDD looks like a real good setup. I would have probably took that one this morning on the hour time frame. But yeah, I would have took that. Tweezer bottom. Oh hell yeah, I would have took that off them real good earnings. Now we're back at resistance, which was support, maybe a resistance, I don't know. Probably a resistance. Let me look at the 20-day 1 hour or 5-day 30 minute. Yeah, I would have definitely took that trade off the 200 on the 5 minute. Had a run on into earnings and pulled back like $18. God, I would have took that. QQQ had 3 black crows this morning. When these things lead out with 3 black crows in the morning on a 1 minute, you got to pay attention. SPY did 3 black crows with a tweezer bottom. You got QQQ with 3 black crows with a tweezer bottom. Now this is undecided. We got a double bottom on IWM here. Someone asked me about Tiva. It hit my support level. On the Fibonacci. I don't feel like I'm in a real big hurry here, unless we break resistance or come back for a double bottom on the SPX with a higher low. NVIDIA's double bottom, higher low. AMD double higher low, but we just broke support, which was the 9. It didn't ever break the 9, so it almost, Equity futures decline as traders temper rate cut optimism. What? Whoever writes these headlines don't know what the hell they're doing. Who is writing this headline? Benzinga? This is MTNEW Wires, newswires.com. Nile pulling out that new car, and we got open. Nile had a good run last week on that new car. SPX or /ES is moving up a little bit here. We just broke VWAP. SPY has a triple top. Triple top on SPX. Got a head and shoulders. Kinda. AMD has a new low. Apple might have found resistance. NVIDIA, keep an eye on it if it breaks this resistance level of 177.32. Oh, I got that perfect. That hardly ever happens. Is the SPX going to have a double bottom? And what the heck? SPY just kind of just standing there acting stupid. We're at the 200 on the SPY here. 3 black crows breakout, double top, pull back, higher low. Snake breakout, pull back. Inverted hammer. Today's the 25th. Calls are cheap. Get 10 of them ready. We're at 84 cents. We got a triple bottom. Let's see what Tedolini's got on today. If she's showing cleavage, I could have a good day. Baba hit the 200. Can't believe I missed that PDD this morning. Not much of a, well, yeah, $7. She looks like she's been run through the ringer today. Hurry up and show her. Boeing up over 30% year to date. Year over year. What? Pumping Boeing, huh? A lot of fat cats will do that. I wouldn't want to be in her way today. She don't look too good, too happy.
100 planes over the next 20 years in order to meet its rising demand for air travel. So maybe this could be the beginning of a wonderful friendship. In the meantime, or at least, you know, sort of reigniting that friendship. In the meantime, when we
I'll
think
be your
about
friend.
the big picture here and the administration and regulation, our
Smooch,
national
smooch.
security, we know Boeing is so important to America because there's Boeing and Airbus, right? I mean, the final.
I'll be in an
story
Airbus
is
this week.
Is huge, and it needs to stay afloat.
Hopefully it won't go down and it floats. If it does.
Absolutely, and I think that has been really highlighted in the tariff negotiations and in the story over the course of this year. So I think extremely important to the U.S. economy, and of course the defense business is also a key element of our defense strategy.
Boeing would be a real good buy down here.
Aerospace Director, S&P Global Ratings. Thank you very
Right around
much.
226.
At Boeing, which is at 229 today. We want to give you the opportunity to trade it. We have some example trades.
Well, don't be pumping this stock, chick.
George Sillis, he's looking here. I was saying
I want Caroline back. George!
42 recently.
It's good to see you.
An incredible bounce back.
You cute little bear, you.
Issues over the years, but for right now is on a good trajectory, and just heard Ben talking about the credit rating also looking good. In the meantime, with this,
Yeah, and their flights are just outrageous because of their stupid freaking strike.
Yes, both the trades I'll talk about today are bullish, Nicole. They're just structured.
See, that's what gets me about, they had this strike, and the airfare has not gone down because of it. Used to be gas would be the precursor for rates to go up and down. Now it's that stupid strike where they're paying these woke employees an outlandish wage for what Biden did with that increase in inflation of 21%. And we have to pay for it. It has everything to do with the strike.
I'm going to go out to November, and I'm going to buy essentially the $220.
If you don't think
call
strikes
option, just a straight up call,
will cost your ass
It's a
for not even
trade,
working for the
option,
union, they will.
And you can buy for about $20 a share or $2,000 a contract. So in essence, what the objective of the trade is, since it's around a 66 delta, is if you do hold it to expiration, you have to at least hit 240 or higher to break even. But you'd also consider
I heard
holding it if the delta on that
that people were Disney and Carnival Cruise was accepting money from EBT cards out of my tax money.
exactly what you're going to outlay, which is $20 a share.
Okay, so that was your bullish example trade. You also have another that's a little bit different. Explain this one.
Yeah, so this one's more, it can be considered neutral to slightly bullish. This is sold for a credit, and I'm going to use that 220 area as another, proxy of our support. So in this case, what I'm going to do is I'm going to narrow down the time frame, and we're going to sell for a credit in this case. So if you're selling for a credit, you want to go for a little bit more accelerated time decay, which is a more narrow time frame and option. So I'm going to go to the September monthly expiration. So this expires in the third week of September. And I'm going to sell the 220, 210 put spread. So I'm selling the 220, buying the 210.
Hope I'm wrong about that.
Below that. So in this case, we're going to sell it for a credit of about $1.75 a share, or $175 a contract. So the whole premise behind this trade is you don't necessarily need
Who's
any
back?
stability in the stock. As long as the stock holds above the 220 area, that 175 credit would erode to zero.
Oh.
So if that's the case, that's your max profit. In this case,
She's
also
here.
consider your break even, which is essentially selling the 210. I'm sorry, the 210.
Elle is here.
Your break even in this case is 218 and a quarter, and then your max loss potential is 8 and a quarter, and that only occur if the stock hits 210 or lower. So the whole objective of this trade is to hold the 220 area between now and expiration of the third week of September.
Okay, George Sillis, wonderful to see you. Thank you for the details. There are 2 example trades for you on Boeing, and of course, right now at 229, and obviously back to the negotiating table for the union and the heads at the company. We'll see if they can settle something there. In the meantime, we still have you covered.
Good morning, Ringo.
We'll have our morning trade next, and we'll focus on Okta after an upgrade ahead of the company's earnings. We'll have all the details on that.
Okay, we're
Right now,
coming up to a
down
triple top
117,
on
the S&P
SPY.
down about 14 points. Morning trade live. We'll be right back.
We got an ascending triangle.
Trading at Schwab is now powered by Ameritrade, unlocking the power of
Happy
thinkers.
birthday to Rob.
Bring your trade
Happy
focus on
birthday
thinkers from
to
desktop, robust trading and
Rob.
analysis tools.
Happy birthday, dear Rob. Happy birthday to you.
Up to the minute news and insights. Trade brilliantly with Schwab.
Oh, Jimmy. You didn't have to go through that.
Whether you're a bull or a bear, you'll want to catch the latest market action on.
Well, I wasn't paying attention to SPX here. The 1, 2, 3, 4. 1, 2, 3, 4, and we broke out. You've got a double top, which was that. This could be pretty interesting here. Got a triple top right now with. So I got a couple things I want to do today this afternoon. Get my hair trimmed for my trip and go to the tanning booth. I burnt my butt last week. I told Vegas I burnt my butt. She says, well, you're not supposed to take off your underwear. So what? SPX is breaking out. AMD is now at 152. SPY's in the money. The 644s. Big inverted hammer right there. This is red. So we come back, I'm going to set an alert right off the VWAP, or actually right in here. We might not even hit the VWAP. There it is. It just triggered it. Right to the VWAP. 90 cents for the 644s on the SPY. Lotto. There's $100, 102 right there. There's 120. I'm going to try to get it. If we break, we could have a real nice bounce. It's called a VWAP trade. There's 102. Come on. Don't be chicken. The crowd's going wild here at the sports arena. $0.99. There's a buck. Hey, I don't know if it wants to break it. I'm going to go ahead and get out of this thing so I don't want to get stuck. Come on. Come on, Betsy. Got my finger on the sell ticket. There's 99. There we go. Got it. Ha 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 ha! Yeehaw! Don't mess with Slim. Big bad Jim. 103, 104. Out at 102. I got it. Second scalp of the day. Magnificent says that resistance, be careful. Okay, here's a good picture of Peppolini. She's showing some cleavage. This could be a good day. Not one of her best shots, but I'll take it. Now, if we break the top of the orb, I'll jump in SPX and run it up to the 200 EMA. Or if we come back down and hit this support right here, this could be it. Yeah, I heard Dominican Republic makes good cigars. So I might grab a margarita or whatever. It's hot for that day and grab a cigar. I used to smoke a little bit of them, but I never inhaled. Down my lungs. I'm going to raise that up just a little bit. So I set an alert for SPX at 64.5379. That's right. We got a triple bottom on Boeing. Dang, look at the SPY. What happened here? Jim, no. They're at 106. 109. Oh, 12. Panic attack. Panic attack. I just left $100 on the table. Panic attack. Oh darn, AMD's at 181. The hell. AMD and NVIDIA is always a go-to trade. Now this is interesting. We had the 9 cross over the 21, then it pulled back with 3 black crows and a tweezer bottom, and the 9 stayed above the 21. So that's something I got to pay attention to. Apple had a new high. Yeah, I think I'm gonna, today at noon, I'm gonna go get my, I think she forgot to cut the hair in my ears. So I'm gonna get that trimmed. And I don't have the card she gave me. So hopefully they'll believe me. I gotta buy a new silver necklace for my thingamajigger. Okay, we pulled back on the SPY here. No, I got it burnt. I heard there's a lot of senoritas over there waiting for me. Okay, I'm watching the VWAP on the SPY. And we do have a 1, 2, 3, 4 coming up. Prepare ye in the name of the Lord. Tesla broke out. I don't wax my butt. People on YouTube are wondering, what the heck's he saying? I don't wax my butt? What's he talking about? He's disgusting. John Smith probably heard that and said, damn, he is weird. Okay, we're back to VWAP. Oh, here we go. Spy, prepare ye in the name of the Lord. 84 cents. There it is. Now this could drop again, but we'll see how much this is going to go on. 84. Patience. Three black crows with a spinning with a long leg doji above, and the bar is above the VWAP. There's 94 cents. Now you're at a head and shoulders. Two-headed snake. Thank you very much. I did it again, 98 cents. Whoa! In and out, man. That didn't take me but a minute. Okay, this is the setup. So I saw this long leg doji, three black crows, the VWAP, off the 1, 2, 3, 4. So I had 4 reasons to take this trade. Let me go through them. Three black crows, long leg doji, VWAP, tweezer. I had 5. Let me count this down. And 5 reasons. Three black crows, long leg doji, VWAP, tweezer bottom, and a 1, 2, 3, 4. One of them 2 bis, 3 bis, 4. So I had 5 reasons to take that trade. Again, 3 black crows, VWAP, tweezer bottom, inside 6 reasons to take the trade. 3 black crows, VWAP, tweezer bottom, inside candle, 1, 2, 3, 4, 5, and a long leg doji. You get that many reasons to take a trade, I think it's good to get in and out, and I got right out of it. And the reason to get out was a 2-headed snake. There's your left shoulder, 1 head, 2 head, and then your right shoulder. So it's going to pull back, and then it might come back up and break out and come up to this final resistance of a double top. So here we are again. Here we are again. 88 cents. Now I don't have that many reasons, only have a couple reasons now. So I'm at a lot higher risk. Because it could just go ahead and flop out and hit the 200 like it did right here before. So I'm at 88. 95, 97. Bam. Wish I had some bread. Better I go get my stuff done, then come back and have lunch. So this is what happened this weekend. It's been 45 minutes, 48 minutes, 48 minutes. So I ordered the fanny pack through Amazon, and it said it was going to get delivered Saturday. So I said, okay, I'll just wait around here. And I left my notes. You got to have a security key to get into the building, security code, on a Saturday. So I left the code number and I left explicit instructions. Say, if you can't get in the building, call me. And I went out and I checked the code. So I figured, okay, I'll sit around here all day and wait for this idiot to show up. And I cleaned house. I got this thing spotless. Even got on my hands and knees and scrubbed the floors. Cleaned it, scrubbed the stove. I mean, I went to town. I want this place smelling like a gym when I get back. And I smell good. So it tells me he's going to be here between 4:15 and 6:15. I'm getting ready, you know. I'm all excited. I really buckled up. I want this fanny pack. I've been, and it's, I mean, it's, I want more than anything I've ever ordered from Amazon. I was really excited about it. So I get a note. He says, deliver it. And it was right when I looked at it. He was just here. And I looked up there at Amazon and he said, complications. We'll come back and see you tomorrow. And I said, what? I waited here. I could have done other things. I waited here all day for this thing. So I called up Amazon. Of course, I got some foreign lady on the phone. And I had to really pay close attention to how I could understand what she was saying. Nothing we can do. Just leave a note. So leave a note, and I called again to see if I could get someone that I could understand a little bit better, and the same thing happened. And I said, okay, I'll sleep on this. So yesterday, I said, I'm going to make sure that I'm here, and I'm going to wait out that front door this time, because I know that these idiots ain't going to be able to get into the building. So I've done a few things, and then right around the time he's supposed to be here, I waited about an hour, 2 hours before he even, same time, 4:15, 6:15, then it changed 4:30 to 6:30, then back to 4:15 to 6:15, so I got out there and laid out in front of the building to get a little sun for about an hour, and then come in and lifted weights by the front door for a little bit. There we go. Breakout. I should have been ready to take that trade. So I'm sitting here calling up everybody at the front lobby, waiting for this guy to show up. And then he shows up. I seen his van. I said, all right, it's here. And I run out to the front door and I said, you got my fanny pack? I mean, I'm really excited about this. I want it bad. He said, yeah, I've got a big load. I said, yeah. He said, I guess the driver couldn't get in yesterday. I said, yep. And I said, I'm here to let you in. And he gave me I was the first one. He gave me my fanny pack and I let him in. And so I I wanted to make sure that I could hit the fireworks at church last night. Okay, we're at support here. If this doesn't hold, we're at the 200. We got a tweezer bottom. Now I don't know. I'm gonna. It could be risky. Time's starting to wear off here. Missed it. I wanted to get 79 and I've got greedy. Yep, that would have been it. I'm bullish on Fannie, and I bought a new one. I bought another one. I bought another one. This one's all leather. It's waterproof. I'll get it tomorrow. This trip's going to end up costing me about $2,500 after I'm done said and done with it by everything I'm buying. Elle didn't stick around very long. I must run her off.
That travel and luxury home ownership is kind of a new form of luxury for the affluent family. What we're finding is that families really value experiences more than things. And one of the things that the second home enables for people is it enables families to spend more time with the people that they love most and make more of these memories that you really can't put a value on. So I think this luxury trend is just getting started, and frankly, we already see it in some of the housing numbers. If you look at the housing data, housing's roughly flat year over year. But if you look at luxury home trends, the luxury home market is doing better than the market at large in terms of both transaction volume and price appreciation. And we're seeing the same trends within our business.
And this is, home ownership and technology put together, right? I mean, we think about how tech has improved different industries. How has tech played such a big part in this for you?
Oh, it's everything. I mean, we're a real estate marketplace, but before a real estate marketplace, we're a tech company. Prior to this company, I created one of the leading software.
Well, what are you now?
Industry that I sold to Zillow. And myself and
I'm sorry, I think I didn't realize that. You created Zillow?
No, I created a company that sold to Zillow.
Oh,
and then my co-founder in Picasso was the co-founder of Zillow and the CEO for 13 years.
Wow.
So most of us came from Zillow
What are you
prior to
now?
starting Picasso, and I share that background because we came from the tech world. And everything that we do at this company, from the way that we service the homes to the way that owners access the homes, is all enabled through tech. And AI, of course, is just a whole new world. We have a core value at the company, which is to put AI first. So anytime we're innovating on a new product or introducing, some sort of a new process to drive better experiences or efficiency, we're starting with AI to do that.
And this is such a different way because Zillow ran into the issue that they owned so many homes at one point, and it was such a great concept, but then they owned too many homes.
Yeah,
and had
home
to,
buying business.
right, and in the home buying business. This is different because you have everybody committing capital and ready for everything and enjoying their home, their luxury home and their luxury experience. And you get it cleaned, and I guess they can also sign up and have people to be around to help them. I'm sure there's things that get add on, like
That's
you need a
right.
plumber, you need a housekeeper, for example, something like that.
I mean, we're like an asset-light marketplace in the same way that Airbnb doesn't aspire to own the homes that hosts own. We don't aspire to own the real estate. Once a home is fully subscribed, the owners own the real estate and benefit from all the appreciation. We retain no ownership in the home once it's subscribed.
And is this most likely going to be an IPO, or is it SPAC or direct listing, or how do you plan to do this?
But right now, we actually have an offering open through September 18th where anyone can invest in Picasso. You can go to invest.picasso.com. And this Reg A offering is, some people view as like a stepping stone to a traditional offering. So it's certainly our plan to go public at some point in time, but I can't share specifics on when that will be.
Right, well that's exciting, and they can be a part of the IPO.
Yep.
Right? Austin, it's great to speak with you. What an exciting concept, too.
Thank
If anybody wants to travel all over the world, it sounds like Picasso has you covered with some great ideas and using that technology. Austin Allison, Director, CEO of Picasso. Thank you. Coming up next is the Chart Master, and we'll dive into analyst calls for Alaska Airlines, American Eagle, and also Zscaler. Morning Trade Live. We'll be right back. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Morning Trade Live. Time for the Chart Master. Jenny Horn takes us through the fundamentals. Rick Ducat will take us through the technicals. So let's talk a little bit about Alaska Airlines getting an upgrade. Jenny, you're looking at this name first.
Yeah, Alaska Air is one that has not been on my radar, perhaps maybe as more so versus the larger airline peers. You know, we talk a lot about the Deltas, United, and American Airlines, but Alaska Air was some positive analyst coverage today at that. Raymond James did upgrade shares to outperform from market perform with a $70 price target, highlighting that their current demand and competitive capacity trends do increase their conviction into earnings forecasts. They also now see an attractive risk and reward currently priced in at share levels, but they do remain concerned about the increased complexity of their overall business model, but they've not seen a great appreciation of the company's measured approach to taking on this additional risk that they mentioned. So actually, shares are lower today alongside some of the weakness in the overall market, but conviction from the street is far stronger than I would have guessed for a name that's pulled back almost 9% on the year. I mean, there's 16 analysts that do cover this name, and there's 14 buys, 2 holds, but no bears. And the average price target right now is around $64 a share. That does imply about 8% upside, the street high of $80. So Raymond James' price target of 70 definitely does put it at the higher end.
Saw a bug, I wanted to kill it.
Currently cover this name, Nicole.
I think I smashed it, but can't find him.
It's up almost 70% year over year. I can't wait to take a look at this chart.
Been getting a couple bugs in here lately.
Telling us about still upside potential, they think. Let's hear it.
Yes, so this
I don't know
was
what kind
a
of
big
bug
day
it
for
is.
airlines in general on Friday. You know, the market was up overall, but airlines especially did well. We can see that Alaska Air, it had a bounce off of a prior support level here. If we were to look at our green line here,
That's
that was
fixed.
about where we had the start of a gap forming. Subsequent highs repeated several times here, but then we had our breakout point. Then we retested that area late last week.
Alaska Airlines. That's a nice triangle.
Exponential moving average as well. So that was an interesting test of support. Old resistance became new support. It did hold up in this case. However, the price also came up a little bit short here at that 60 level. We can see that our gap once again comes back into focus. Now it's the low after the gap up.
They're charging out the ass for these flights.
The price got stuck more recently here. So we can see now that we have a couple of boundaries to keep an eye on, one to the upside, one to the downside, 55 and 60. So we can also look at our RSI, our measure of momentum, trending upwards still. Did not quite make new relative highs just yet here, but the day is still pretty young. We're still starting out this trading week. If we were to look at our other studies here, our volume profile and standard deviation channels, we can see that the area that we broke above was critical in terms of our volume profile. Our point of control was about 53, the area of heaviest trading. You can see very clearly that there's the heavy volume is all around this area. Then we're in a very light volume zone, and then things pick up again slightly once you would start getting around 66. That also coincides at this time with our +1 standard deviation channel. So that could be another notable upside area to watch, and 51 would be another boundary to the downside. That's where the volume really starts to drop off as well.
Yeah, understood. Okay, thank you for that. And it's good that you brought in some of the other airlines from Friday. What about American Eagle Outfitters? Now, this name obviously got a lot of attention. The stock moved higher on the Sydney Sweeney ad and some positive comments.
Yeah.
You know, pertaining to that. And then there was also some criticism. So now what? What's next? Now getting a downgrade. Let's hear a little bit about this, Jenny.
I always think it's interesting the way public perception and a lot of this like public backlash can sometimes have a meaningful impact, as we've seen with companies like Target or Anheuser-Busch, but it will not necessarily.
It's not woke, you idiot. I'm done with her. That pisses me off. She's comparing woke to Sweeney. Oh gosh, Jenny, you just dropped a few points on me, darling.
From neutral price target of
Jeez.
10, that was cut from about $11 a share. They also did trim their fiscal 2025 and 2026 earnings estimates by about 8 and 30% respectively, saying this update is really to reflect the impact of higher tariffs and lower Aerie sales specifically. They also do see now this longer path to a more normalized earnings environment really throughout some of these retailers that do have still sizable overseas exposure. And it's been so far a very mixed picture as far as what works in retail, what doesn't. We saw some really positive earnings moves.
Feel like knocking a nut on your head.
Depot lows last week. Well, there was some weakness still to be had in Target, Walmart, but the apparel stocks with this, again, sizable outside of the U.S. footprint really is going to be, I think, a major near-term concern.
Apparel would be the better downgrade.
Play out. Plus, the stock was caught up a bit in that meme stock-like frenzy we saw in a lot of these sort of failing retailers just about a month ago. So still, about 18% of their overall share float is sold short, which does tell you still it's a volatile player, and that speaks to, I think, its 15% gain now on the month.
All right, and look, I mean, it wasn't the most popular, to your point, in the world of, you know, stores and retail. I mean, this stock went from $22 down to under $10. So it has sort of had a bit of a battle. Let's take a look at the chart. Rick?
Yeah, so we can see that this is one, quite a different picture from our last chart here. Now we've had a gradual decline that seems to have, perhaps for now, solidified around that $10 mark. We can see that that was the low point that we reached here around $9.70 or so. But from there, we held on at that area. The notable price extreme points where price repeatedly stopped. 1050 and 1150 are light green and dark green lines respectively. You can see here that this was a supportive area that then become resistance and then once again support. Meanwhile, 1150 was a bottom and then a low point and then a ceiling here, here, and here as well, several times going on into the future then too. Now we are at a similar ceiling area near 13. We can see here, and here, that's where we've brushed up against this resistance. So 1050, 1150, and 13 all really stand out as horizontal price levels for traders to consider. We can see that RSI, however, has been trending down.
Google's breaking out.
A bit of bearish divergence here. We are below our green trend line. Our red trend line is still in play, heading downward here. So if we were to break above that $13 level,
3 black crows on the SPY
stands out. That was a double bottom from back in this area.
I think I'm gonna have soup.
We do have our 252-day exponential moving average to contend with it. Well, as well, that comes in right around 14. If we were to examine, in this case, our volume profile shows that most of the trading is at these lower ends of the chart here. So heavy volume at a significant low is often interpreted as significant by traders. It could be a sign of a notable low point being formed.
Last but not least, so that's American Eagle. Last but not least, we look at Zscaler because you have a price target hike on Zscaler, a name Dan Ives always loved. Let's hear a little bit about this one, Jenny.
Yeah, and this is an interesting name because it operates in that very highly lucrative and also pretty resilient cybersecurity space. So we do also get earnings from them next Tuesday after the close. But Barclays, with a raise to $300 a share from $290, keeping an overweight rating ahead of that fiscal fourth quarter report, again on September 2nd. But they do believe Zscaler's fiscal 2026 annual recurring revenue outlook could be between 19 and 20%, with the 20% that bulls are hoping for being the high end. They also do like the company's set up into next fiscal year with what they said was a more mature sales force, broader platform focus, and a prudence around Red Canary. So, I mean, of the big three stocks we discussed today, this one easily commands the highest buy ratings among the sell side, with around 34 buys, 13 holds, but no outright bears in Zscaler currently. Average price target also 317. That implies, I mean, about 16.5% upside, with the street high still remaining at around 385 and the low around 215. So that, I think, puts into good context. There's still a huge appetite right now for upside in these shares that have now pulled back about 5% this month, but are still higher by about 47% and some change on the year. So still, I mean, a really strong performer when you look at its year-to-date performance overall.
Okay. What do you think here when you look at Zscaler? I mean, we think about what a hot area it is. Does it have the potential? Let's take a look here at the chart, Rick.
Right, so sometimes those horizontal price levels, support and resistance, can be difficult to identify. Sometimes they're pretty clear here. Oftentimes we can see during the past year that price bumped up against this level near about 215 or so, forming a similar low point at these extremes as well, near about 180. But regardless, we broke above that level, never really looked back from that point here. Now, the low point that is more prominent was where our price action opened up after our gap to the upside during our last earnings event, near about 263 or so. We did top out at this area near 318, 319. From there, price has traveled downward. We have this rather narrow falling wedge type shape here, typically regarded as a more bullish pattern, but really what you're looking for would be a breakout beyond either of those two lines. In this case, the upside level stands out a little bit more because it coincides with two of our moving averages, 21 and 63-day EMAs there. So right around 278 would be a notable spot to watch for a potential breakout. From there, 296 would be the prior lows, and then subsequent highs around that point would be the area to watch to the upside then. So volume profile, once again, shows some pretty clear areas of interest here. We have our smaller nodes here near about 255, 270, and 285 to consider as well. Those could be congestion points to watch out for going down the road.
Okay. Great look there. We had Alaska, we had American Eagle, we had Zscaler, Jenny Horn, Rick Ducat every day here with Chart Master, looking through the fundamentals, giving us the story and the charts. Thank you both so very much. Coming up, our market meetup panel is standing by. We want to discuss the day thus far and what you need to watch for going forward. Morning Trade Live, we'll be right back.
Notice I stopped getting them phone calls. Where's that soup at? What do I do with it? There it is.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Might as well pull back right there to the 200.
Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live.
SPX's Sideways channel.
Head over to schwab.com/coaching.
We got a megaphone.
Today.
To the 200 EMA.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. It's time for our market meetup panel after a record day on Friday and Jay Powell's speech, the anticipated speech. Alex Coffey and Joe Mazzola, Director of Trading Services, Charles Schwab, both join me now. And now we have a lot of anticipation for this week. Friday we hit a record for the Dow Jones Industrial Average, though we've seen the S&P, for example, down 6 of 7 days. Joe, what do you make of the market action, especially because we're waiting on NVIDIA and PCE this week?
Oh yeah, NVIDIA this week.
That really stood out to me last week was some of the broadening that we saw. Whether it's the S&P 500 equal weight, breaking out from a really
there goes the
range
SPY.
that it had been in since December,
Bam.
post-election.
Shit.
We've seen broadening continue in the small to mid caps, and then
82 to 95.
I think the risk on trade that we saw Friday, and maybe the markets.
I'm waiting for that 200 and I took my eye off of it.
Comments and their interpretations of Powell's comments being overly dovish. I'm not positive it was overly dovish.
I said we'd come back and hit that 200 and we did.
He definitely strengthened the cause, or that there will be.
Because we hit it here.
September, but I don't think
we almost hit it here.
Beyond that. But the markets
repeat.
Really kind of
stocks like to repeat their old supports
to where they could rally into the end of the week. This week it's going to be interesting because not only do we have NVIDIA earnings in the middle of the week, but then we'll have PCE on Friday and get a better indication of inflation.
$820 investment would have got me 150 easy.
Friday we've got non-farm payroll, so there's a lot tied up in these next
more than
weeks that could be market movement.
170.
Okay, what do you think here, Alex? Because we were just talking about some of the details of the week ahead. I think also Jim Bianco made the point that even though the Fed may cut, that doesn't necessarily mean lower rates like what we saw last year. What's on your radar here?
Yeah, I think we talked about that about an hour ago, Nicole, and I think I echo Joe's sentiment. While Jerome Powell didn't do anything necessarily to set us back as far as whether or not there will be 25 basis points here in the next few weeks, I tend to agree with, but I don't know that he set the stage for some sort of prolonged easing cycle, which is sort of what the market reaction was. So, absent some sort of economic turndown that we don't see coming, I don't necessarily.
Powell's been horrible for his job.
Washing of the yield curve and rates across the curve coming down. So, to Jim's point, I think that makes a fair amount of sense. I used the word sleepy to describe the morning action so far. I still think that applies. Did just see the NASDAQ trying to fight positive. That's a good sign going into NVIDIA earnings, that you're having a little bit of buying into those names. If you look at last week going into Jerome Powell's, speech, you did have, all those down days, albeit small down days. That to me said that the market was a little bit more on edge and there was a little bit more hedging activity going on that was offsetting sort of the general bull market that we've seen. Now today, you're seeing buying in NVIDIA, you're seeing buying in Microsoft and some of these key AI names. I think that's really important for this to continue into the earnings report, because earnings have been net negative so far this quarter in terms of price reaction.
No, they haven't.
NVIDIA is going to hope to flip the script a little bit.
And look, people are still worried about inflation. While it has not really reared its head, we do have a PCE print. We have had, some say the tariffs could bring some inflation, so everybody sees that as a wild card too. Some final thoughts here, Joe Mazzola. I know we haven't gotten in our stacks report just yet, but it takes confidence to keep a market up. How are folks feeling overall about the back half?
Oh, you're full of crap today. Netflix is pulling back a little bit. Okay, we're back down here on SPY. Them things got to 65 cents. Mister's down $8.67. I had nothing to eat today. Nothing. Now I have. I went through that pretty fast. It's so good. That last batch of soup I made, and that was the last one of them. I mean, delicious. I think it's probably the best batch I ever made. I don't think I've ever tasted anything so good. Okay, we're at 79 cents here. We're coming to the VWAP. Now we do have a megaphone. I hate to jump in this at the VWAP and watch it. There we go. 75. 76 cents. We'll see if we get the VWAP trade. Might not. .74. I'm in at 74. 644 strike. Looks to me like it's just going to be a fast scalping day. There's 84 right there. $88. I'm out. Thank you very much. That was VWAP. They're at 94 now, 95. Tesla's been hovering at resistance, an ascending triangle. And I've got for resistance 341.08. Okay, well, I think I'm going to go get that hair done, pay a bill, get my accountant started on this. My accountant went up $33 during the Biden regime a month. The biggest increase I've had in 25 years. It's just one of my bills that went up. 96. I hate liberals. I just hate them. Got a megaphone on Apple. Got a double top on NVIDIA. Everything's at a resistance level. AMD got a triple top. Beta at a 1, 2, 3, 4. There we just broke out, all three of them. I want to let you know I'm going to Punta Cana. Leaving out Friday. Thursday night I'll come and get the trash. Be back on Monday, Labor Day, Monday evening. Hopefully no delays. Spy broke out. There I go again, leave another $100 on the table. I gotta get a case of paper towels too. Dadgummit. I got a busy afternoon. Might just get it all done with. Spy moving. SPX right now is at the 200. We're getting close to it with a 1, 2, 3, 4. Maybe a 5 if you want to throw that in. And we're definitely at the mega on the SPX. We're at the megaphone. And we're close to the 200. So it depends what kind of mood this market's in, if we break it or if we go ahead and get pulled back. But we're definitely at resistance right here. Right now. There's the drop. You hit the top of that megaphone, and you had the 200 as a wall. Just broke it. Equity futures decline as traders temper rate cut optimism. Well, say what? Your headline is wrong. Just consolidate, in my opinion, it's just consolidating the run that we had on Friday. Okay, well, I hate to go leave. You gonna miss me when I'm gone? Be gone Friday. SPY's at 120. Oh yeah. Slash ES might have a new high on the 1 minute. SPY at 129. The 644s. Can they do that? So much to do. little pullback. Musk reportedly sues OpenAI over alleged iPhone arrangement. New high on Tesla, 243.89.90. Ooh.
That because I want to stick to the focus of your specialty market structure. So we often hear that stocks can be weak this time of year, seasonality. You argue, though, that flows and rebalancing matter more. What does that mean?
Yeah, you know, I will often pick on the tropes of the market, which would include seasonality, the things like sell in May and go away. I don't think that that's how the markets work anymore.
No, it's not.
Because it's evident in the structure of the market. The market is
because of the retail trader.
90% of the volume, as I've explained, comes from some other purpose or time.
Sell away in May used to be a big deal, but not no more.
I do think that what happens in August, because we're doing it as a firm, you know, we have 401k profit sharing plan, we have to do tax planning. I think that those things begin to affect models. And yet, you could look at August this year. You know, August tends to be the weakest month historically. I don't know if that's a good read. I think what matters is you have money following models, and those models make adjustments that account for taxes and exposure to equities and fixed income and alternatives. And if the equity market moves up sharply, models will be overweight. And it doesn't matter exactly where that will fall, that will be the thing that causes adjustments. And as money in models increases in size, it may delay the effect. So you expect it in August and it doesn't show up. But is that seasonal? To me, the only seasonal element there is that we're about to enter the fourth quarter. We get through September, it'll be the fourth quarter. You have to be positioned for the end of the year. That might be seasonal, but it's not how I think about the markets, and the markets are mathematical.
So, Tim, let me ask you that. Speaking of the math, you talked about
I agree with you.
How much of a contribution, say, the Citadels of the world, I think you said around 50%. And then you add that with the 25% of models, like the target data funds or whatever.
I agree with him 100%.
Right? There's been this talk of the market broadening beyond the Mag 7, and we've seen some of that. But from your perspective, when you think about the math around it, expanding beyond that, is that possible, or are some of the smaller stocks, say, too small to matter for the big money, or could they potentially be chasing returns? What does market structure tell you?
That's a big question, Diane. But I look at these things again mathematically. 95% of market cap is in the Russell 1,000 largest stocks, which means 5% of market cap is in the Russell 2,000. This
guy's smart.
If you were to try to move the one to the other, it would be like pouring water from a 5-gallon bucket into a thimble. So it's not mathematically possible, but you can get a big move like we did Friday. If there's a 20 basis point increase in a model that says that conditions may warrant a shift in our policy stance, right? Take that phrase, as opposed to the word curious, a description of the job market, and it could increase the exposure to small caps by 20 basis points, and they shoot up 4%. That's the problem.
We got a 1, 2, 3 coming down at the 200.
With 100 billion or more of market cap are 76%.
That or we have the correction
of
we
the
need.
stock market's value, $52 trillion.
We're at a buck
the money
on the
that
SPYs,
everybody else,
644s.
which will report results this week. You can get the misconstrued notion that there's a broadening out if big investors put NVIDIA in a basket to wash out capital gains. They can do that. ETFs do that. It's part of the appeal of ETFs. And they take in exchange a bunch of mid caps. So then the mid caps go up. But then those funds, BlackRock, whomever, bring NVIDIA back at a stepped up tax basis that benefits BlackRock shareholders, not necessarily you and me. And then the market makers will get rid of that basket of mid caps and down they go. It's very difficult in the market we have, which is heavily dependent on large caps. 90% of assets are in large caps, to have a sustainable broadening out in the markets. Again, I always come back to the math. We can have all
this
the
guy's good
we want, but you have to look at the math of the money behind price and volume, to me.
They've been telling you.
I think that's a fair point. Great point.
Oh, it's a great
point.
point.
The math and the money. That's Tim Quast, CEO of Market Structure Edge. Thank you, Tim. Coming up next, the disruptors.
See, they're trying to tell people to broaden out. And every time they do that, even from when we had the Obama crash, they were telling you to get out of USA and go into Europe. And Europe, the hedge fund guys, and this one guy put all of his hedge fund in Europe, and he ended up losing billions. And I remember that real well because this guy was really well known to call the market right. And I'm telling him, what the heck are you doing? Europe is a socialist country. They don't have a clue what capitalism's about. When I was saying it back then, I said, and then it tanked. Then Europe tanked more and more and more, and it never really ever has recovered. And they tried to do that again this year with Trump. I'm throwing it in Europe. And then what did we hear last week? That they're hurting. And they keep lowering interest rates. So now we're at a 112. But with Trump and these tariffs, it could be a catalyst, but I don't know. I wouldn't bet on it. I'm going to get out of this because I'm going to get ready to go. Well, I might have a cup of coffee and then go. This is off the 21. We're squeezing between the 21. Now, we got a wedge, or if it's yeah, we got a wedge. and we're squeezing between the 9, the 21, and the 9's above the 21, which means it's bullish. But we can still come down and hit this 3 and bounce back up and break a triple top. So, I mean, the option's still down here. There is an option of that breaking that 21 and hitting that, then coming up and breaking the triple top. But he's right about a lot of things. They're telling you that August and September are the worst months of the year, which in history is true. But he was right about May go away, and he's right about broadening out, the broadening out. He wouldn't broaden out. I wouldn't either. It's not that kind of market anymore. We're in an industrial revolution right now with AI. And electric cars. And I mean, what did I get? Oh yeah, we got a new alarm system here in the building. It's a lot more sophisticated than the one we had. It's got cameras on it, and you can use your phone now to open the door. Our laundry room is all online now. Now this don't make no sense. Am I looking at the right? Oh, I'm looking at Mr. You idiot. What the? I was wondering what the heck's going on here. What a stupid moron. I'm looking at Mr. and trading a SPY. Shit. I got too many things on my mind. I would have never got in this trade. Fuck. What the hell are you doing? I ain't done this in a while. Nobody caught that? Or did you? You're just laughing at me. We got a falling wedge here too. Lucky for me. God. Yeah, I'm trying to add to the challenge. What an idiot. Huh. I just now realized that. So I'm looking at Mr. when I should be trading a SPY. How dare you? Oh, that's funnier. It's not funny. I mean, jeez. That could have cost me big money. I gotta get away from this. get out, one or the other. Right now we're bullish because we broke out of the triangle and we're retesting the old resistance. So this is a number 4 breakout with a number 3 bottom. I mean, this is a sweet spot. Jeez. Well, 110. $112. You still got a day to get in the mail my check for my vacation if you want to donate. Private message me if you want to. Back to a buck. I guess we could call that the breakout and retest. I think I'll get out of it this time and watch it break out. $111, $112, $111. Right now. Okay, here it goes. Jimmy's gonna fuck up. 118, 117. Anybody take this with me? Yes or no? Yes or no? Got a bunch of no's in here today. I called it out. I tried to show you a trick play here. Yeah, I'm in the SPY and I charted it up to the master, MSTR. Didn't realize it until about 5 minutes. I'm going, what? And lucky for me, there was a fallen wedge also on the SPY. So we had falling wedge, breakout, pull back, boom. Now it's going to run. Now I'm going to see it at 140. Here's 123, just like Jimmy said. Okay. I'll drink this coffee and go get my chores done. I just now realize I need to get a case of paper towels too. So it might be a couple hours. There's 126. So I might left $100 on the table again. Now this trade I put in 1,000 and I sell it for 117 and I make $170 in what? 1, 2, 3, 4, 5, 6 minutes. I like his fanny pack. I can't wait to get my new one. This is a small one. Oh, I forgot I might have to put my phone in here. Might have to loosen that up again. Forgot about that. But I put my wallet, I've been putting I wear sweats and it's just doesn't feel comfortable wearing a wallet and your keys and everything in your sweats. So I wore this last night. Did I put a cube in here? If I did, it melted it. I could go in there and get another massage, another haircut. Yeah, because I ain't going to be able to do it tomorrow. So I got to do it today. Back to resistance. If this thing breaks, it could have a pretty good run. There's 129. Mr. Hickey.
Week, so therefore everything we do will touch NVIDIA in some way, but we've got other things that can move that can move the market. I've got Alex Coffey joining me. I've got Landon Swime coming on from Like Folio. I've got
Randy
George
Slime
Lewis coming on the show. All going to give you
serious?
insights into what's happening this week, and of course, talking about all things NVIDIA. So before I bring in my co-host for today's show, Alex Coffey, let's take a look at the four major indices and see where they sit at 11 o'clock Chicago, 12 o'clock Eastern. The S&P 500, let's call it unchanged, down about 0.04%, down about 2.5 points to 64.63. The NASDAQ up about 0.1%, 34.5 points to 23,354. The Dow Jones Industrial Average, the weakest, down 0.5%, 230 points to 45,401, and the Russell 2000 also down 0.5%, 11.5 points to 2350 and some change. Now let's bring in my co-host for today's show, Mr. Alex Coffey. He's on just about all the shows and a regular co-host on the Monday edition of Fast Market. Alex, if you look at the calendar, it says pre-holiday, and things should be on a glide path towards Friday. That said, if you also look at the calendar, it shows you we've got a fair amount of top-tier economic data. We've got NVIDIA is earnings on Wednesday, also CrowdStrike and Snowflake, a couple other key names there. What are you looking at, Alex, for this week? It might be an interesting one here. Before we break for the holiday, there might be some explosions happening. We can't follow through on Friday's Jerome Powell press conference.
Why can't you?
Yeah, Kev, always happy to be on your program. I guess the one thing that I would say is I agree with you that clearly NVIDIA is going to dominate headlines. It's a really important market event. But until we get there and the market continues to digest Powell's words, you may see sort of this sideways, slightly lower kind of absorption of Friday's move. Friday's move was such an anomaly of the volatility that we had seen in the recent weeks that it's just going to take a little bit of time, I think, for the market to consolidate those gains. That said, NVIDIA is a macro market moving event. It's not just because it's the front runner. It's not just because it's an AI. It's simply just mathematically important. Even if it happened in a vacuum, a 5-10% move for NVIDIA will move these major indexes because it's something like 8% of the S&P 500 now. But it also doesn't happen in a vacuum. If for whatever reason NVIDIA excites or disappoints the street, it's likely its peers in the mega cap space as well as semiconductors are going to move in reaction in probably the same direction. So it's going to have a shockwave-like effect either to the positive or the negative on the overall market. But Kev, we spend a lot of time on our programs digesting news and talking about. One thing I like about your show is that it's a little bit more hands-on. It's a little bit more the experience that traders really wrestle with. And, sometimes, and I think you'll have thoughts on this, a successful trade is the one you didn't make. And some days just aren't really conducive to good trading. And I would argue both Friday as well as today so far both fit that mold for
no, they don't.
Reasons. Friday, if you didn't have the position on before Jerome Powell spoke,
yeah,
you
I
never
did.
really got an opportunity. You were chasing the whole day.
Yeah, exactly. I was in it.
Likewise,
it was a perfect
today,
opportunity.
There's just no movement outside of maybe some of these NASDAQ names intraday.
You need to watch Washboardjim, Alex Coffee. I'm drinking coffee right now. You'd be totally up to date with Washboardjim. I'm 4 for 4. How about you, buddy?
Trade is the second best thing you can do, right? If you think about it, if you make a winning trade, we know that's positive. If you make a losing trade, you know that's negative. But if you go through the exercise for figuring out a trade and decide it's not working, I can't get it on for the right price, I can't get the risk reward aligned, no trade might be the second best thing you do. And traders that have been doing this for a while, you're constantly going through the exercise of, does this trade fit? I want to look at this. I want to look at something bullish here. Nope, that one doesn't fit. That strategy, no good. I want to try to do something bullish or bearish. You got to fit all the pieces into that idea. And if you can't get there, sometimes the best decision to make is no decision, to do nothing. And
You're a bunch of cowards.
Right. Sometimes you just got, or you have to say, I had an idea, I missed it.
Oh, God. What is wrong with you people? I don't know if I can take this much longer. Might have to get into it with these guys.
Chance to make money, but
cowards.
If what you're doing is not working, admitting that and taking a step back, reassessing is sometimes necessary.
It's good advice.
But beyond that, like you said, sometimes you got the right idea, but you didn't get it on in time. And sometimes the hardest thing to do is just simply say, hey, it would have worked, but would have doesn't pay. And it wouldn't necessarily work now, and it's okay. There'll be other opportunities in the future.
Yeah, I agree with that. And my mentor, every great trader has a mentor.
Me.
Mine was Charles Cox. And he used to tell me, there's times to make money,
It was
there's
whose
times
cock?
to preserve capital. You have to identify.
I knew there was something
what time
kinky
you're
about
in
this
right
guy.
now. And
His mentor is a cock.
in earnings, sometimes it's just the right thing to do to not press it. Wait for the news to come out and react to it. So, Alex, one thing interesting about today, you've got basically an unchanged S&P 500 with 8 of the sectors of the S&P 500 down, and it's really 8 down, 2 up, and 1 is basically unchanged. A couple of them are unchanged, but the ones that are up, communication services and information technology, those are the two big ones. Those are that left side of that heat map. And they can generate a lot of value, as you know, and they have in the past. So that left side of the page is doing a pretty good job of holding up this market, because it was down, 0.4% at one point. It's worked its way back because NVIDIA, Broadcom, Google Alphabet, Apple's higher, Netflix is higher, Oracle's higher.
Mind you, they had a couple people on here telling you to get out of these tech stocks and to broaden. They've been telling you it for 3 weeks. I would love to see them bring them back on here and ask them, how's your stocks doing that you're broadening out on? So I didn't fall for it. I never fall for it. When they tell you that they're going to go in a different direction in the market, it might last a day or two, but that's it. And they're in it for themselves, because they're probably in it pumping the stock, because it ain't moving. Like right there, my spot calls went to 133. I got out at 117. I knew it was going to run more. My Mr. Call. Oh well. Can't find my, there it is. Nope. Trying to find my, what hat I want to bring. I don't see my, there it is. This one might be too hot. I wear my Trump hat. Okay, YouTubers, I'm going to let you be the judge of what hat to wear. On my vacation. If anybody wants to get involved, in fact, I know what to do. Everybody look up in the right screen. We're going to make a business decision. Okay. This is one of my options to wear in Dominican Republic. Is everybody live? YouTubers? People in the room? You're going to see me come up here soon. So I got 4 options to wear what I want to wear in my hats. This will be my first option because my head will have a tendency of blistering if I don't keep it out of the sun when I'm at the beach. So this will be my first option. I just turned the hat around, so we got to give it a second. And I probably need to get an open mesh one. This is hat number 1. This one will give a little bit of shade to my ears. So that's hat number 1. Randy? Ringo? Hat number 1. This is hat number 2. Trump hat. This one would be a St. Louis Cardinals hat. And then number 4 will be the cowboy hat, which I figure this one will probably be my best bet, but I have trouble keeping it straight. I think it's tossed up between the cowboy hat and this hat. What's that one? 3 or 1? Let's go in order again. Hat number 1 is the one with the brim, the one I have on right now. Hat number 2, if I want to get shot, will be the Trump hat. And it'll come up here in a second. How dated is this thing? Hat number 3 is the Cardinal hat, which I think it's going to be a toss out. So we just get rid of 3. And then hat number 4 is the cowboy hat. So place your votes. I think the hat number 1, the safari hat, 2, Trump hat, 3, cardinal hat, and number 4 is cowboy hat. I look better with the cowboy hat. I think the ladies would like me better in that one. Angel says number 4. You think I'm handsome in that cowboy hat? Adorable. Oh, and it could be a, yeah, it could be a car. Heck yeah, I think it's cowboy hat all the way. As long as I don't have no fish hooks on my lures. So the lures are fish hook free. Okay, let it be said. Then I'll get a decal sticker of Punta Cana to put on the back of it. I've made a business decision. I was kind of rooting for the safari hat, but I think cowboy's the best way to go. Or should I wear my bear mask? I think it would be neat to take this hat. I've had this hat for 2001. So 24 years. YouTube, what do you think? Aringa says number 1. Yeah, I might get shot with the Trump hat. They got a barf on the cowboy hat. Well, sorry about that, Ricardo. Tesla. So Mr. broke out of the flag. It still would have been a good trade. Tesla's going to go to, what was the last resistance on Tesla? I'm going to go get my hair cut here in a short period of time. Oh, we broke it. We're almost to the double top, triple top at 346.49. Let's get this precise. So when you're charting, I want to show you a trick. So I asked myself, I said, where's the next resistance? Hello? Jim, could you tell me where the next resistance is on Tesla? I said, yes, ma'am. Oh, how'd you know I was a female? I'm a she. I'll go to the highest peak on the bodies of the candles. I'll take my price line and I'll draw this in 2 different ways. I'll take it to the body and run it right there at 346.43, and I'll take a trend line and run it from the body to the next previous body, which is right there. So now we're at what you would call a triple top, because we have the body hit here, the wick hit right here, and that's called a triple top. So it should pull back and bounce off this previous triple top. And that's the body, and the body. You see where we hit right here on the body off that wick? So that would be a triple top, pull back, break out of number 4, and then you got a triple top right here, which means the old resistance will now become support. Do you understand me? Say yes. We shouldn't break that. That should be a hard resistance. Look at that, right to it. I'm 1 penny off. Nobody will tell you this secret. It took me years to develop this. Oh, you can't see it because if I... YouTubers can't see it. None of you can see it. Here, let me get that fixed. I have to do this all over again. That's funny, you idiot. I'm off today. I just got one thing on my mind, and that's girls. Putkana. So let me get this fixed. Jim, you idiot. Okay, let's start over again. Okay, so I'm going to erase this line here. Now let me see. No, it's Tesla. Oh yeah, I was looking at Tesla. Okay, let's start this all over again. Okay. Hello, may I help you?
Yes, this is Francis. Jim, we just had a breakout on Tesla, and could you show me how to find resistance?
I say, yeah, I will, darling. How long you been my neighbor? Maybe after we get done here, we can go hang out at the pool. Well, we can go up to this fancy dining joint that I saw last night. I've been wanting to try it out.
Well, let's see. Let's get through the trade first. Then I'll make my decision.
So I want to go back as far as I can to find the last previous resistance level. And I want to take the body of this candle and I want to run it straight across because I think it'll run into this one here. So I want to take a horizontal price channel and run it to the side. I had 43 earlier. And I could see the wick hit that one right there, so that's a double top. And then I want to take a trend line and run it from right here to that next body right there. And then I'm going to go see where both of these here trend lines land. And that's going to be my next resistance to break. I'm using the body. I don't give a crap about the wicks right now. They're just confirmations that we broke it. So you can see we had a triple top right here. 1, 2, 3, and it pulled back, and then it came back up. And then number 4, it broke out and it created a new triple top with the body of there and the wick and maybe the wick right here. So let's pull this up on the 1 minute. and we just barely hit that resistance level. I had 43, so I was closer before by 1 penny. And you expect it to always pull back on triple top 99 times out of 100. But sometimes they just break out. It depends on what kind of news is going on here. You heard these people on Schwab crying and whining and say it's best not to trade if better not to chase. And they said that the market's not good today. I think they're full of crap. So if this thing decided to pull back, now the new resistance level would be right here on the daily, and you want to take the body of that candle and run it straight across that previous high, and that'll become your first support. It's right off the 63 on the 1 minute. So now you've got your resistance to break, your support to hold, and you know it's going to pull back 99 point out of 100 times, that this thing's going to pull back on that triple top, just like it did before. So you're landing on the 63, which makes it a solid support, and it could probably bounce off that 63. I wouldn't jump in the trade right now. What time is it? It's 11:30. It's 12:30 right now. And we could start having the pullback that these guys are, and we could even hit the orb down here off the 200 for a very strong buy. We bounced off the 63 for a lot right here. So that the odds of that coming back and hitting that's pretty good. Unless it holds the 21 and comes up and breaks the number 4. Well, I might bring 2 hats, but I think this is the one I want to wear. It'd be nice to take this out of the country. This is my, the other one's my gardening hat. Plus this one will breathe a little bit better. It's got some holes in here where my head can kind of blow up. The other one didn't have any holes in it. Yep, I made a decision. This one's going with me. I can hear it right now. I have seen Rita come up to me and say, "Damn, look at that guy over there with the cowboy hat. Man, he's artistic. I don't see any rings on his hand. Look at the hairs on his chest. Let's go see if he pedicured his feet. And if his feet are pedicured, I'm going to try to pick up on that young man." They're more than pedicured, baby. They're painted. Like your wives, it's Washboardjim. Washboard Jimbo. I like that. I might have to share that on social media. In fact, I'm going to. I'm going to steal that line from you. I've got to take a picture of my handsome face. Okay, we pulled back to support.
On women and with energy drink and supplements mainly for women.
What?
Celsius is the one that's struggling.
Racist,
The stocks continues
feminist.
to outperform, Landon. What does your data tell us?
Just men can drink
I
it
think
too.
You pretty much nailed it, Kevin. Happy Monday, by the way. And yeah, I don't know if that was pun intended or not, but they have.
That was pun intended. That was
energized
bull crap.
Celsius. So I wouldn't go so far as to say that Celsius, the brand, is really struggling. I think that their growth has slowed a little bit, but they're definitely being outshined by their new acquisition. They paid $1.8 billion for Alani Nu. I think it closed April 1st. And that brand has done something that Celsius and Monster and Red Bull have kind of struggled to do, and that is, hit that women demographic. Gen Z also, but mostly the women demographic. And you can see here on this chart, I mean, that is some incredible growth on a year-over-year basis, and just general interest, web visits, social media, all of that. So plus 144 is a huge number. Those are the kind of numbers we used to see out of Celsius. It's slowing down, but still very, very positive at plus 42, whereas you can see Monster's negative. So they're doing a great job. Celsius, the brand, is doing a good job. And then with this acquisition, they're doing a great job as a company of outperforming the broader energy category. I mean, they pretty much every metric across the board, they're beating them. And so, they last quarter they reported plus 9% revenue. Alani Nu chipped in about 40% of Q2 sales at $300 million. So doing extremely well, obviously. And between the two of them now, they've kind of created this behemoth energy drink company that's hitting on all cylinders, because you've got Celsius at 34% household reach and Alani Nu at 22% household reach. When they combine, there's some overlap, so it's not completely a sum, but when they combine, they got about 43% of households use or buy one of these two products. They're internationally growing, plus 27% on a year-over-year basis, so they're doing really well. And in the category, like I said, the energy category overall is about plus 15% year-over-year. They're, as a company, plus 29, it's almost double. And the stock really shows it. I mean, you've got the stock chart here. I think the stock was about $21 in February. It got as high as 63 recently. It's 60 now. Just ahead of their last earnings report, it was at 42, which was high compared to February. That doubled, but then it went up another 21 points after a great earnings report. And so I think this is a company that has really taken Wall Street by storm. The energy sector is not the same since they've entered, and yet they're still somewhat. Small is not the right word, but they're still competing against these big brands. But they're doing, they're holding their own and then some. And I think really this acquisition puts them in a place where they've got a two-pronged attack against the market, where no one's really been able to crack that women category, and they bought their way into it, and now they've got a home run.
Landon, Alex Coffey and I were just discussing earlier in the show how the earnings this quarter have been good, but it hasn't necessarily correlated to higher stock price. Well, you can't say that about Celsius. This stock's up 30% in a month. They had earnings on August 7th, and this stock is sharply higher since then. And it seems like, correct me if I'm wrong again, you're the expert on this, Alani Nu really uses social media well, and they use influencers really well, and that is so important with a women demographic. They follow trends and influencers, and that really seems to be hitting for them.
That's exactly right. I mean, I think it's just a completely different way of marketing to male and female, and Alani Nu figured it out. I mean, you can tell by just looking at the cans that they're going after women. Sure. It's just got a different style to it. But yeah, they're
okay. We're back to here. It is
social media, and that's just not something that really would.
Would I take this trade, or would I wait for it to hit that previous resistance? That's the question. It's that time of day where it gets a little bit more riskier, and. Listen to the jabberjaws on here that said, don't chase. The market's not doing nothing today. And have we already had the run that we need? Or are we going to wait for the blue line? And there's only one confirmation, and that's the triple top. I got an inverse head and shoulders here. I got the 63 here. I got a pivot point inside of this channel right here. So I have 3 reasons to take that trade there. $115. I think it could pull back. And I'm going to go get my hair cut anyway, so I got to pay my accountant and I got to go pick up a case of towels because I'm not really going to have much time to do it till I leave. Thursday night I got to work hard, and I don't want to wait till Wednesday because I want to be packed by Wednesday. Uh-oh, we're at 119, 120. 121. Oh, that's Tesla. God, there I go again. I'm looking at the wrong stock. I got to stop this. Jesus Christ. Did I just chart up Tesla? Oh, yeah, I was doing Tesla earlier. And I was looking at the SPY option. That's I mean, that's just pathetic. They're right. Maybe I shouldn't be trading today. You got your mind in other places, Jim.
%30 in a month, and so you've got to trade it going forward. And so the trade we put on is this. We looked at a very minimum downside exposure, only looking at the 55 strike. I went out to the September 19th monthlies. Here's one interesting thing about Celsius, and it goes back to what Alex Coffey and I were talking about when you're looking for trades. Very low premiums.
Very low.
Options. Minimal premiums in their options. So it forces you to look at other alternative strategies. So we kept this one relatively simple, buying the September 19th 55 put, selling the September 5th 55 put, not this week, next week. Why? Not enough premium in this week's options to make the risk reward appealing. So you had to go out to next week to sell that call. So you have the 55 put calendar. And again, what does this do? It takes advantage of the overbought nature. It takes advantage of a decreased level of implied volatility. Right now, the IV percentile, 3. That means you should be looking at long Vegas strategies. And this calendar spread is a long Vegas strategy. It's currently got about just about 2.25 Vega per trade.
There's
But
a SPY
the
up
debit,
15 cents.
about right around 50 cents. It was 40 cents when we put it in. It's gone up to about 50 cents.
Could have had
now,
two good
but
trades
very
looking at the wrong
low
stock.
Net debit on this trade. So when you think about this, this gets the benefit of the delta. It's short delta, but it's also long Vega. And so if you get any bump in implied volatility, you could get the dual profit from a long put calendar. Now, remember, the risk on the trade is the debit paid, and you're looking for a move towards the $55 strike is the optimal place. And you don't want to move too far away from that 55 strike. All right, now, let's take our final break, where we'll bring in George Tillis to talk about our last trade of the day, and that is Coinbase. Because what happens in Bitcoin isn't always what happens in Coinbase. Take our last break, come back with a great discussion with George and I on Coinbase. We'll see you 2 minutes for more Fast Market. See you then.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market, everyone. Kevin Hinks back for here now for our last segment. Before I bring in George Tillis to talk about Coinbase, let's do a quick market update. Although not much to update exactly. The S&P 500 is down 16 cents. Let's call it unchanged. As we get to the bottom half of the hour here, the NASDAQ up about 0.2%, up 44 to 23,541. Dow Jones just slightly better than before, still down about 0.5%, 207 points, and the Russell again down 0.5%. 1180 to 2350 and some change. All right, Al, let's bring in live from Salt Lake City, Utah, Mr. George Sills to the show. He's going to look at Coinbase. Now, George, you and I spoke
same drop just now.
Because
Here's
there's
your
no
choices.
theory out there. If you want to trade something, don't trade.
Shut up. Because of you, people ain't trading. So we've got a 1, 2, 3, 4. We're squeezing between the 21 and the 9. Are we overbought? Or are we going to listen to the fear mongers? Let's try this again. We got a 1, 2, 3, 4. We're squeezing between the 21 and the 9. We've got to watch the tape. I'd like to get it down here personally, but that's a big wall. And if that gets down here, it might not have a chance to come back up. We were at 120, 122, now we're at 127. So I'm just going to wait. I'm going to go do my hair and pay my bill and see my accountant. I got to get all that stuff done today so I won't have to worry about it tomorrow. I got to be around here tomorrow anyway to pick up my new fanny pack. Did everybody participate in the poll? What are the results? I'm going with cowboy hat, hat number 4. What? God. A lot of indecisive people in here. Spies dropped down to 115. We're at support. Jimmy called number 4. This is do or die. $6.44 at 114. This is going to be my pre-haircut trade. Can't believe he did it. Yeah, I did. It's not a good idea. Don't be chasing this with me, because we can fall. I'm going to get out of it if this thing don't hold. We're at 116. I'm up $20. This is kind of risky, but if we break this here, come on, Jim. You're on put on the spot. It's 117. There's 117, 118, 119. It's just paid for my haircut, 120. You have 10 contracts at 114. Jim, you're up 3%. Have you ever thought about selling? No. I can't. No. Jim, you're up $40. Have you ever thought about selling? No. I can't. Jim, you're down $20. Have you ever thought about selling? No, we got a double bottom off the snake, high or low. As long as we hold this blue line, I'm staying in the trade. Jim, you have a chance to get out even. Uh-oh. Have you ever thought about selling? No. No, I can't. I won't. We're at 123.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
$1. $1.24. 125. Come on. 125. I'm out at 125. I'm now going to go get my hair cut. What do you got to say about that? Room.
with Nicole earlier, and she said something like, "Hey, the S&P's been down, 6 to 7 days." And I was thinking, like, I hadn't realized that because not all days are created the same, and obviously Friday undid so much of the weakness and basically got the market.
We're coming to the 200
point.
or the
orb.
orb.
We were talking on Fast Market about how sometimes the best trade on a
I
day
squeezed
is
that
the
one
best
out.
trade, and today is definitely a sleepy day.
It is not.
A lot of volatility.
You're a liar. So we had a pullback breakout. We had snake breakout, pullback, boom. Now we're coming to the 200. Now we could, I don't know if they're getting their launching orders from headquarters or what. But I'm going to go and do my thing. Three black crows to the 200, just like Jimmy said. But I'm not taking the trade because I got to go. I don't want to go for some reason. I'm having too much fun. These guys are like Debbie Downers on here today. Well, I won't be trading today. The market's not doing much. Have they looked at Tesla lately? They look at Netflix lately? I mean, look at NVIDIA lately? Come on, guys. What the hell are you talking about? So this Sunday, I'm sitting in church, and the preacher talks about how important it is to give, and he passes out the plates, and everybody puts their money in it. And his sermon was all about how bad money was. Be happy with what you got. And I'm going, should I take my money back out of the plate? Because that's all I got. That really pissed me off, kinda. So I don't want to be ridiculed because I love money, my love for money. I felt like telling him that. I said, I got, I give a friend of mine to help her with her car. Was I a fool to do that? If I didn't have the money, I couldn't have offered, I couldn't have gave my sister $300 last week to fix her car. I couldn't have bought her a washing machine, or I take back what the money I gave her to redo a bedroom. I get pleasure out of that. What about the people that don't have enough to survive and that are barely making it by? I felt like just yell and say no real loud. And I had to wipe my eyes and say, am I dreaming? This guy telling you how important it is to donate to the plate. And then you turn around in the same speech telling you that money's not that important. And he gets down, almost begs for it. Then why did you charge for your book you just wrote if money's not that important? Why didn't you do it for free? Tesla just broke resistance. Man, it's right there at support, right on the orb, just like Jimmy said. That's on the 5-minute with a tweezer bottom. We got the 63, we got the 200, we got the orb, we got a tweezer bottom. I got 4 reasons to take that trade. Now I've got more than 4. I got 5. We got the double top breakout. So I've got 5 reasons to take that trade. Should I have took it? If I was watching it, I would have. On the 5-minute, I would have took that trade. There's no doubt in my mind. So we got a double top breakout. I called the 200. We're off the 63. We're off the orb. And we got a tweezer bottom. And all the times that we bounced off the 50. So that's 6 reasons to take that trade. I'd probably come up with another one. And I would have took $120 out of a $900 investment. Run it up to the 21 and get out here at 106. I would have made $160 in a matter of 2 minutes. So you understand? Double top, breakout, pull back to the double top, which was resistance, now becomes support. We got the 200 SMA, We've got the 63 EMA. We've got the 50, which we bounced off all morning, SMA. We've got the Orb, and we've got the tweezer bottom. And I probably missed something else in there. I did. We got a megaphone that hits them support. So that's 7 reasons to take that trade. Seven reasons. I think you learn how to read chart patterns, you could and moving averages and being in the now. And I think just the opposite of fat cats do. And you heard these fat asses. Oh, don't chase, I'm too afraid to be in the market. I think I'll take both hats. I'll take the safari hat and I'll take the cowboy hat. And we'll see which one gets the most attention. I made a business decision. Okay, well, oh, I got one other thing I can do too. I got recycled cans I got to take to the recycling center, but they're not open on Monday. So forget that. I'll do that tomorrow. After I get my, maybe at lunch I'll do it. It'll only take a few minutes. Got to take the number 3 hat. That's the one that chicks will love. What one was that? The Trump hat? Oh, the cardinal hat? Ah, dang, man. I think the chicks will love the cowboy hat. I remember I went to Green Bay, Wisconsin. And I was up there for a marketing event. And I took, what did I take? I took a, what prize? The top 3? Yeah, I took the top 3. No, I took first place. No, I took top 3 to go to nationals. And we went to Anaheim, California, and I was wearing what was I wearing? I'm sure it was a cowboy hat. Yeah, I had a cowboy hat. Not this one. I think it was a Stinson. And girls, man, everywhere. Loved it. And that was the same time when I got jumped by 3 black guys Where they just come up to you and punch you in the face, don't ask no questions. What they call that? And that was their biggest mistake. Back then I could fight, but I can't now. I'm too crippled. Busted my face. I had a black eye and I had to go to the I had to give my presentation with a black eye and broken pair of glasses. And I still won.
Its momentum has been to the upside of Palantir. So to their credit, really solid numbers and great government and now more commercial contracts.
Well, how things are priced right now too, it is not unreasonable for this stock to move $5 or $6 intraday.
Yeah,
we've seen that already. So
Trump hat.
Just know that's the risk you're taking in a stock. And hey, understandably, when the VIX one day is 7 and the market's not moving, I get it. Palantir's moving around, a lot more exciting than what's going on in the overall market.
Hey, it always is.
I'm gonna listen to the ladies.
I appreciate Palantir for that reason. The news cycle is never liked in a stock that moves.
I'm going with Angel.
But we'll leave it there for the top of the show today. Coming up next, though, it is time to chart and trade Okta as well as MongoDB. Both names ahead of their earnings out tomorrow after the closing bell.
Okay, well, I'm gonna go and do my thing. I'll come up with the hair cut out of my ears and a trim. I'll go see my accountant and I'll go buy a case of towels. Gotta do it. I remember one year I took a vacation and we got a big order of picture frames in. And I had to do like 250 picture frames. And these weren't just chopped and put together. These were all kinds of frames. And I worked and worked. I had to do a whole week's frames and then I had to do that big order. I was so wore out. I'll be back. Trade number 5 today. And I would have took this one if I'd been ready. I'm gonna leave it on the 5 minute because it's a lot more clear. Got a megaphone.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to chart and trade, and joining us as always is our chart master Rick Ducat to help us break down 2 names ahead of earnings. I know Nvidia is definitely the primary event of earnings this week, but it's important to keep in mind we have other names still to look forward to. Okta being where we'll start here. So this name's higher today. I say that hesitantly because I'm watching it sort of erase some of its gains, but walk us through this chart here.
Yes, a bit of a downturn since our last earnings event that we saw. We topped out heading into that event near 127. From there, we gapped down. That gave us the start of this new downward sloping trend line at these highs that were just above the 110 level. From there, you could connect these subsequent highs near about 105. That would give you this downward sloping trend line. You could also duplicate that line, put it across these lows. It happens to match up fairly well based on these few data points that we have. Nonetheless, it could give you a potential boundary to keep an eye on there. We can see today's price activity initially looked like it was going to break us above that yellow 21-day exponential moving average, which comes in just below 93. But so far, the bulls have not been able to hold on to that rally. Price has faltered a bit here. We are near the lows of the day so far. We can see, if we were to backtrack a little bit, our green line near 88, that represented some highs and then lows around these points here. So a frequent stopping point for price, that's where we encountered our most recent set of lows around that same area. If we were to break beyond that point, 78, that was another frequent stopping point here. Highs, 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 and lows then. But to the upside, we have a similar type of horizontal line here at our red line, which is in this case near about 105. So some boundaries that traders could keep an eye on in the shorter term here.
Okay, so as we do approach this earnings event, we do still have a full session obviously ahead of these numbers, so that volatility. But what else are you watching for here as far as Okta is concerned? Because it does operate in a relatively resilient space, being cybersecurity, but these names have also been fairly choppy on the back of earnings.
Yes, and we can see that when we do look at this volume profile, we can see that there's many areas that stand out here. There's spikes here around this area near 83, 84 or so, then around 91, and then finally our point of control, our heaviest trading area of all, comes in near 98. So perhaps between 93 to 98 or so, those would be some potential congestion points that traders would be looking to push beyond if they had a bullish outlook, or below if they were more interested in the bearish side here. We can also see our standard deviation channel study shows that price topped out at our -1 standard deviation channel today. We had our linear regression line, our line of best fit based on closing prices near 109. One standard deviation below that is this lighter yellow line that comes in right around that 95 level or so. So another potential resistance area to consider there. If we were to look at our long-term 5-year chart as well, here we can see that the point of control, all the heavy volume is concentrated near the lower end of the chart. We are kind of near the upper boundary of that point now, so the bulls would really like to see a good push above that 100, 105 level especially.
Yeah, and this name has been, I mean, definitely trying to at least recover, but if you look at this, it's really remarkable how far we've fallen and how we've just formed an entirely new range from what was at one point the relative highs of Okta. So all that to be said, now as we do look to trade Okta here for example purposes, Alex, walk us through your thinking.
Yeah, looking at kind of the sector trends still being positive, perhaps you believe in this company, but knowing that the earnings or seasons have not been rewarding good news, rather than looking for upside, just looking for stability, perhaps slightly higher, slightly lower, neutral to bullish, short put vertical in Okta here, end of the week. See 88, 86, so keeping it relatively tight in order to control that risk. 70-cent credit means you're risking 130 to make $70, close to a 2-to-1 risk reward in that case. Break even in this particular example would be 87.30. Elongated Z risk profile here, Jenny, neutral to bullish strategy in Okta. Very, very short data, just going to the end of the week. Capturing this earnings event is kind of the sole catalyst for this potential movement.
Yeah, so obviously, like you said, an earnings pure play here, but looking to at least lean into hopefully some movement that we'll see tomorrow after the close. Our next name today, though, also with earnings out tomorrow, and that's MongoDB. Different company, but also seeing some pressure today. Very different performance as of late, though, and we're also kind of stuck in this recent range, Rick.
Yeah, so for this one, we can see that we have a bit of a range to consider, as you said here. Probably many people would categorize it as being between about 200, which is our green line here. You can see that was roughly where price hit some highs that we saw after our gap downward here. That's where they then encountered lows as well as further resistance. And then more recently, that was where price bottomed out. To the upside though, 250, this was where price hit some highs. If we were to backtrack further, this would be about where we had our lows before that same gap down that we just mentioned. So around 200 to 250, that's the overall boundaries that would need to be broken, perhaps to signify some kind of broader new trend. We can see that there are some important points beyond that as well though. For example, if we were to break below 200, we can see 185, our lighter green line. That was the low point of a smaller range there, kind of a similar price boundaries there as well between 185 to 200. So that could be a supportive zone. To the upside, similarly, 230, that was our recent highs. That was another point of interest here for price. So around that level could be further resistance.
Yeah, and this name not really seeing a whole lot as far as momentum either, but MongoDB is modestly lower, not taking it on the chin today by any means, but down about 0.8%. We will leave it there though. Appreciate all of the technical help. As always, Rick, our chart master. And now, as we do look to close things out here, trading, of course, MongoDB ahead of earnings tomorrow. What was your thinking, for example,
If you imagine the mirror image of what we just talked about, we're looking at the neutral to bearish short call vertical in this case for MDB. So very similar strategy, but a little bit more of the bearish lean with this one. Some of the downtrending items perhaps stated in this one are more clear, let's say. So you believe in that. Looking at a similar strategy, like I said, 240, 242.5, again expiring at the end of this week. 70-cent credit once again, so that's your max profit of $70, but this is a $2.50 wide spread, Jenny, as opposed to a $2 wide spread, so that risk reward is closer to 3 to 1 in this case. You're risking 180, chance to make 70, break even is 240.70. Same elongated Z, but again, it's that flipped mirror image where the other strategy, of course, risk to the downside, profit, unchanged or higher. This is unchanged or lower profit. Big move higher is a disappointing, and that's where this one wouldn't work.
And of course, like you said, our previous example trade, both do expire at the end of this week. So both are pure plays into some of at least this week's expected tech volatility, though we will leave it there for Chartmaster today. Coming up next, it's time to look at Spotify, as they have now floated the idea of perhaps raising prices again. If you have subscription fatigue for price increases, unfortunately, this story is not for you, but Spotify actually higher on the news today.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk all things Spotify, as we did get some reports that they are right now perhaps looking to raise prices again for customers as they do invest further in some new features. So joining us now to discuss more about this is Sam Vadas, contributor here for the Schwab Network. So Sam, I have fatigue for like all of these price increases. Apple TV is going up. Something else just went up in my horizon that I was like, again, but you just sort of have to get used to it. You just pay it, and we all have, unfortunately, we're all at somewhat of the really disposal of these companies because they can raise prices. Pricing power seems to be king right now.
Yeah, absolutely. And you could say by the reaction in the markets today, this is music to investors' ears, pardon the pun, but that is because obviously they've been looking at these price increases and the cost-cutting measures over at Spotify, as well as the company really focuses on profitability, and that really is at the essence of what this FT article and report is all about, that the company, the executive that they've been speaking to has certainly been suggesting that these price increases could be coming for these consumers. So this is the senior executive, Alex Nordstrom, that they've been talking to, and I'll just pluck out a couple of lines from that report just to highlight what he's been telling the folks over at the FT, that this is part of our toolbox now, he says, after many years of keeping those prices flat. So in return, what are you going to give me? That's the big question. Well, he also goes on to say that this would be accompanied by new services and features. So that's what's really going to make up for the increase in prices here. And also predicted that the streamer could eventually have more than 1 billion users. So he's been talking about how this is all about value add right now for customers in tandem with the price increases. We essentially want the customer to win here. They're looking to add more value and more stickiness, they call it. So price hikes we've seen, and to your point, Jenny, about some of these price hike fatigue type feelings setting into the market. I mean, they're talking about how they are seeing people converting to the service despite the fact that they're seeing these increased prices, grabbing more market share. Just over 3% of the world's population, they say, are paying us on a recurring basis, and they say that they have more runway to expand subscriber numbers as well. So it very much looks like that this has been a very big focus for the market as well. Previously, remembering back to that earnings report that we got just recently, they had certainly signaled that they would be looking at price increases in international markets, multiple markets, Southeast Asia, the Middle East, Africa, Europe, Latin America, and APAC from September. So it does very much look, if you take note of the price action we've seen today, up 1%, that investors have been encouraged by what we're hearing from this company, but also the fact that this has been priced in for some time. I mean, you can see that reflected in the stock, up over 100% over the last 12 months. It did take a hit after those earnings, but it has been recovering. So let's see if this takes it the next leg higher.
Sam, anything else on your radar with this one? You mentioned sort of the repricing post-earnings, but that's sort of been the season. It wasn't necessarily that things were overly bad. It's just, if it's not perfect, it's been punished.
Yeah, right. I mean, look, disappointing quarter. It was a surprise quarterly loss, a revenue miss. I don't need to recap what we got from that, but you know, we did see that we got a bit of evidence of the struggling ads business, but the good news is that the subs, I mean, that certainly was the highlight and the bright spot in all of that, and they do continue to look to build on that. But I mean, I've just been looking across a few analyst reports in response to this. I mean, you had Guggenheim off the back of the report card raising the firm's price target, but they had been very much focusing on the fact that they expect another round of price increases to be announced by Spotify in the largest markets, including the US. So it felt like they felt like this was in the pike, very much coming their way. And the analysts over at Wells Fargo look very bullish as well. I mean, they've been talking about how, you know, the results weren't overly exciting, but this remains still very much a top pick as far as they're expecting, and very attractive catalysts that it's hard to ignore. That's certainly what they've been talking about. They said that investors should remain calm, but they are very bullish on the latest subscription tiers, Superfan and and that they will see product and very much feature innovations to come with regards to videos and also education, because also we know that Spotify has been talking about sort of making a foray into videos to take on the likes of YouTube as well.
Yeah, and I will say that their product is impressive. I like being one-stop shop for all things like audio, now perhaps visual. So I've been getting into some of their audiobooks because it's cheaper than what I was doing before. So I guess I am victim of a part of their success, because it's really like, you know, they can raise prices. They have that flexibility. And for me, I will pay probably any dollar amount. It's much cheaper than the days of paying per song, which was just ridiculous. So I appreciate that, Sam. Of course, all that insight on Spotify today, with some of its latest price activity. And now, before we go, Alex, as we do look to trade Spotify here for example purposes only, I mean, this name has been on a really nice run. I know we saw some pressure on the back of what was still, as Sam did point out, a pretty strong report, but I mean, it's still about 55% up on the year.
Yeah, and I think we're at kind of a critical level for this name. When you look at this 700 mark, it's been sort of a battleground for this company. When you look at the stock shares, it's the 1 week exponential moving average is right around this level as well. And so I looked at something that we don't often do when there, for example, when there isn't an earnings event, but because of that, because of all the things going on in the next several weeks, I kept it short term just the end of the week. But say you think that this support level is going to hold and you want to express that in sort of a risk-defined way, this is how you can do that. And so giving it a little bit of cushion, it's the 695, 690, short put vertical, where that 695 is also the 1 month EMA, looking for that to be kind of that final line in the sand. If you collect around $1.70, that means you can make $170 on this for the 330 in risk. That's a 2-to-1 risk reward. And your break even would be 693.30. So one way to think about it, again, is short term. So any movement that you have this week is absolutely going to have impact on a really short dated trade. But there's a thesis here, and that thesis is you're at support and you believe support's going to hold. This example might make sense for somebody who has that belief.
Yeah, and obviously we already have that earnings risk behind us, so we're just sort of looking into the mid to I mean, actually short term, I guess, horizon here for the expiration, but also looking to play into the fact that this name has pulled back from highs, I mean, by about 11%. Again, still a near 12% jump so far, though, this month. So August, the month of feared weakness, has not really been as wide felt, at least through some of these tech names, as expected. We will leave it there, though, for FOMO today. Coming up next, time to talk the furniture stocks moving lower on some potential tariff concerns looming now from the Trump administration. We will also be discussing Okta, everything more we can expect from the sell side perspective here, with a name that's up about 15.5% this year and now modestly higher, pretty much unchanged on the session.
Whether you're
you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest tariff turbulence with our now go-to tariff correspondent, that being Diane King Hall, who's the host of Morning Movers, but always provides all of the insight on some of the more macro tariff trends out of the Trump administration. So Dan, I don't know how you got this unofficial role, but we're sure glad you did. I mean, and thankfully today we get to talk about maybe the more fun things, that like furniture. But unfortunately, furniture stocks lowered today on the back of what could be some pretty sweeping tariffs.
Yeah, I know. Somehow I became the tariff correspondent, the tariff talker, if you will. All right, so here's the latest on the tariff front. You've got pressure on many of the furniture makers. Today you've got pressure on Wayfair, on Williams-Sonoma, on RH. Off of the lows of the session, for instance, Wayfair honestly could, not to say they want to, could take the bigger hit, because before today's date it's been outperforming, even with the move lower today, it's been outperforming the S&P 500 year to date. The pressure comes after President Trump called out the sector and targeted that sector for an investigation into it. He said there is an investigation into the furniture makers and those that are importing, right? It's unclear what the level of tariff rate is. He said on a Truth Social post, a tariff at a rate yet to be determined. And he said there's an investigation on furniture coming into the U.S. The idea is this will be completed over the next 50 days. Who has the most exposure? Again, as you mentioned, some of the names that we're familiar with, like Wayfair, RH, Williams-Sonoma. Companies that make furniture in the U.S. though stand to benefit, because obviously those that are facing tariffs would make that more expensive, those products. So we're looking at a chart where Lazy Boy shares are a little higher, but Ethan Allen higher by nearly 1.5% at the moment. They have a lot more of their production here in the U.S., whereas Wayfair, RH rely heavily on imports from like China and Vietnam. So the framing of this, of course, is that there's been a big focus, as we know, by the Trump administration to bring production back to the U.S. Even in his Truth Social post, he talked about North Carolina. We know that has been a hub for furniture making for many years. South Carolina mentioned as well, and Michigan, among others, guys.
Yeah, and I didn't realize, actually, outside of maybe North Carolina, the furniture hub that existed in Michigan. So yeah, I learned a lot about like some of the geographic really demand coming right now from the furniture industry. But furniture is expensive right now. So my own personal fear is that if it gets more expensive, I mean, it's already kind of I know, it's already just ridiculous, but unfortunately, I guess we all do need furniture in some capacity, so we keep buying. But we'll have to watch that as it unfolds. Of course, we'll be, I'm sure, coming to you throughout this week for more of that tariff talk. Appreciate it, Diane King Hall, for all the insight. And now to shift gears here and talk a name that, of course, still has earnings ahead, that being Okta. I'd like to welcome in Ahmed Khan, who's an equity analyst of technology at Morningstar. So, Ahmed, thank you so much for joining us today to kick off this week. As I keep reminding everyone, we have earnings that are not NVIDIA this week, that being Okta. And so this has been a really great space to be in, resilient. I mean, anything that is right now has cyber security exposure has been strong. So what really are you watching here into this print?
First of all, thanks so much for having me. One of the things that we're very curious about is if you think about Okta over the last couple of years, the company has had a lot of execution challenges, including some of the cyber breaches that they had a couple of years ago. So we're looking for evidence of a turnaround, and that's primarily going to be driven by forward-looking metrics such as remaining performance obligations or current or CRPO or current remaining performance obligations, strength on those metrics alongside retention metrics would be good evidence that the company is actually turning around a corner and their go-to-market strategy is actually, showing fruit.
Ahmed, maybe you can use a couple of the other names in your coverage universe to describe maybe why you're a little bit more neutral on this name. I see you got a buy on Fortinet, but you have sell ratings on Cloudflare and CrowdStrike, or equivalent to that, using your fair price assessment. What sticks out within this space in terms of why you like some and maybe why you don't like others as much?
So first of all, I think when you're investing in cybersecurity, it's important to sort of delineate between valuation and quality. So from a quality perspective, we're big fans of CrowdStrike, we're big fans of Cloudflare, but once we put that valuation layer on, suddenly those multiples, jump out. The growth you need to assume, the margin expansion you need to assume to justify those prices seems a bit stretched for us. Now, on the other side, when we're looking at the quality sort of metric within security, one key trend that we have really we've been talking about, and I've talked about this on this show in the past as well, it's vendor consolidation. So large cybersecurity vendors actually growing their footprint. So that's why, that sort of consolidation thesis really supports large vendors such as Fortinet, Palo Alto, Zscaler, and CrowdStrike. And now with Palo Alto acquiring CyberArk, that has an interesting implication in terms of Palo Alto expanding their security footprint, but it's going to put pressure on identity pure plays such as Okta.
Yeah, absolutely. We talk a lot about we talk about some of its competition like Palo Alto, the platformization strategy that was widely criticized for being expensive and taking a long time, but starting to see that now have more favorability. So is that something that Okta is looking to perhaps mimic or sort of duplicate, or are they in their own world because they're, at this point right now, far smaller and like you said, some disadvantage as far as just size and cash at hand?
Yeah, so when we think about identity, there's employee identity, so that would be the equivalent of like a multi-factor authentication system. There's customer identity, and another interesting area within identity that is emerging is agentic identity. So you have agents that are going to proliferate. How do you secure those identities? And I think that is a key focus if you look at the Palo Alto CyberArk deal, and Okta has also been eyeing the same market. So I think execution is going to be the most important thing as we have more agents proliferate and as those agents require identity security solutions. So I guess to your point, like Okta does have an opportunity within identity to actually create a more comprehensive identity security platform. I think the key word is going to be execution and how they're able to sort of have an identity security for workplace or employees, customers, machine identities and agents. And I think that remains to be seen in terms of whether they're going to be able to execute on that sort of platform as we're looking at the identity space overall.
When you look at this kind of holistically, then obviously that big deal that Palo Alto announced, $20 billion or thereabouts, that's basically what the price tag of what Okta would be too. Is this perhaps medium to long term something where you could see a part of that consolidation story that you're talking about, where these big players are sort of racing to be the one-stop shop?
Yeah, for sure. So it was always like the perception in cybersecurity land was that identity was almost its own thing. So you had a lot of consolidation in the endpoint space, in exposure management. You had network security players such as Fortinet and Palo Alto get into cloud security and SASE, but identity was almost its own space. With Palo Alto's aggressive acquisition for like roughly $25 billion for CyberArk, it basically says, Palo Alto is sending a message out to the rest of the industry that, hey, we're gonna be as close to a one-stop shop for security as it can be. But again, we have seen historically in security that you can have pure plays that are really good in the key market that they're specialized in, as long as they have good execution. Examples of that are Zscaler in network security. You have Wiz, which is a privately held company in cloud security, and then a myriad of other examples. where companies can be successful in insulating themselves against this vendor consolidation trend. But that again requires strong execution and strong go-to-market in that specific end market. And I think that's what investors are primarily looking for in Okta. And just to sort of set the stage here, Okta right now trades at roughly 5 times forward sales. The median across our coverage is roughly 10. So that kind of tells you that investors don't really think that Okta is like, a high quality company as it, even if you look at the broader cybersecurity, publicly traded cybersecurity stocks.
Okay, and that's a really good point and great place to leave it as, hey, we could always see a surprise to the upside if perhaps the expectations are lowered, but a lot of these names have just taken it on the chin on the back of mixed results. So we'll be watching those numbers, of course, as they report. But so appreciate your time and all the commentary today. Ahmed Khan, tech equity analyst at Morningstar. Now coming up next, last but not least, it's time for Under 30. We are looking at Intel, which has erased a lot of its earlier strength despite U.S. government taking now a 10% equity stake in the company.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss Intel as one of the biggest stories of the session here, with the government taking a 10% equity stake. Joining us now is George Tillis, Senior Markets Correspondent. So George, a lot of thoughts when it comes to this story and some of the government workings, but really walk us through it and some of your thoughts.
Well, I think this is interesting. It depends on, I guess, your subjective view on government ownership of private capital. But it looks like, along with SoftBank, which invested about $2 billion in equity, that the U.S. government, through the CHIPS Act and other various means, are basically taking a close to 9.9% stake in Intel, basically converting the grants into equity ownership. But I think this is interesting because you could make the case that Intel is really a very critical company from a national security standpoint. The reason I say this is we know that Taiwan Semiconductor is investing a lot of money, about $40 billion in a plant in Arizona, to which they're actually having struggles, and not necessarily putting the plant together, but how to deal with some of the environmental impacts on the sensitivity that there is on chip clarity, and of course all the precision instruments that are needed to make the manufacturing process very complete. So Intel's already got a foundry business here in the United States. They're a legacy foundry business, and I think one of the things that a lot of the analysts and a lot of the haters against Intel have been criticizing about is their foundry business, which some would say maybe they should spin it off, but others would say that they've been manufacturing here in the United States for so long that they're actually very good at it, even though they're challenged when it comes down to market share in the servers and data center markets. I think that's really where there's been some structural weakness relative to AMD, which has gained market share. But nonetheless, I think this is a message from the Trump administration that they want to support domestic manufacturing of critically important products. And I would consider semiconductors a critically important product of our country.
Hey, George, in a way, too, is this kind of a read-through that maybe the government's pot committed to Intel now, where once you write the first check, you're more likely to write the second one?
Well, I don't know if they're going to continue to do this, Alex. That's to be said, but I do think it sends a message that the United States government looks at Intel from a strategic, but also from a national security standpoint. And like I said, it takes quite some time to bring a manufacturing plant to the United States, even reproducing it 100%, like Taiwan Semiconductor's plants across the globe. The United States is having trouble, finding certain types of products and specialty clean chemicals to actually bring to the United States to manufacture to the high specifications that Taiwan Semiconductor needs. This is a high-level thing, but I think it comes down to Intel's already been manufacturing for decades in the United States. Even though their business has been struggling, it hasn't necessarily been because of manufacturing, and it's been because of technology innovation, but also design. But at the same time, we know AMD has really encroached on AMD's server and data center markets. For instance, AMD only had about 2% of the market back in 2018. Now it's 25%. So they really cut into Intel's market share. But I think the Trump administration is really looking at this investment in Intel as a strategic importance and national security. But there are going to be criticisms because, like I said, the whole premise behind U.S. government owning private capital is really subjective in nature. It's happened in the past, per se, especially during the times of the great financial crisis. And some would say that maybe Intel is not a critically important company, but nonetheless, the Trump administration seems to sanction this because they do see it as important.
Yeah, no, absolutely. And I think it'll be interesting to see then the dynamic of what that looks like with Taiwan Semi, because they're both competing right now to still have this U.S. dominance, which right now, frankly, Taiwan Semi, it's not even a two-horse race, but we'll have to see how Intel can make up ground. Appreciate it, George Tillis, for all of the insight. And that will do it for Alex and myself for Next Gen Investing for this Monday. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. I'm Nicole Petalides, and a happy Monday to you. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. So glad you are with us. We have a big show for you today. Of course, we'll break down Fed Chair Powell's remarks from Jackson Hole last week and the expectations for rate cuts for the rest of the year, beginning in September, of course. We'll continue our discussion on the Fed and take a look at several reasons that our guest believes now may not be the time to cut rates and what it could mean to your portfolio overall. We'll also preview NVIDIA. The earnings are due out this week. Discuss the outlook for the broad tech sector, which has been a bit volatile lately. Here's a quick look at the markets. The Dow hit a record high on Friday, had a record close. It's in fact the first record close of the year. And by the way, the S&P is not too far off to its record levels, but right now we're off the lowest points of the day there, but the S&P is at 64.57, down about 9. The NASDAQ showing a gain here, up 8 points at 23,506. The Dow's down 275 points at 45,357, and the small cap's down more than 0.5%. Oil and gold are mixed. Gold's down $3, while oil's up $1.31. 14.38 on the VIX, and the 10-year bond yield at 4.27. So of course we're watching that. Bitcoin 112,000. That is down 3.7% today, and Bitcoin has lost its oomph lately since we heard more. And so in the meantime, Kevin Hinks, host of Fast Market here on Schwab Network, is coming through some of the stories. Of course, we also got in new home sales. We've been getting in bits and pieces of news. What do you think about that, or what are folks saying?
Hey, Nicole. Yeah, you know, we're going to get the bulk of economic data as we get later in the week. But this morning around 9 o'clock Chicago, about 10 o'clock Eastern, we got new home sales. And new home sales a month ago were 627,000. They were looking for a number right around that, 628, right around there. Comes in 652,000, a nice beat on new home sales. Remember, we do new home sales and then we do existing home sales. So it just shows you that any decrease in rates that will lead to lower mortgage rates are really affecting that queue of home buyers that are waiting on the sidelines for lower rates. So yeah, we're starting to see, and we saw it in some of the home builders and their earnings, we're starting to see a housing market that is firming up and starting to head back higher. And this is just another one of the good data points, not exploding to the upside, but a good solid number for new home sales.
Yeah, understood. I mean, look, we know that home sales in general have been somewhat depressed. We saw home builder sentiment, which has been volatile, hasn't been particularly great. But if you have a lower rate environment, that certainly could help the group, though tariffs could really affect some of the materials that go into building a home. That's still sort of a wild card. However, you know, anything good news is good news. How about Keurig Dr. Pepper? We learned a little bit about an acquisition there, a big one at that.
Yeah, a merger Monday for beverages. It's a cold beverage buying a warm beverage. Keurig Dr. Pepper is near a deal to acquire JDE Peet's. That's a coffee and tea company for around $18 billion, citing people familiar with the matter. The combined company plans to separate its beverage and coffee units, sources told. So this JD Peet's, they're a worldwide company that sells coffee and tea and other, small things like that. And so it's a pretty substantial purchase. And like I said, when we think of Coke and we think of Pepsi, we don't think of Keurig Dr. Pepper, but it's actually a pretty large company, as you know. So yeah, take a little merger on Monday between them and a coffee and iced tea maker.
Yeah, look, I mean, they have Dr. Pepper, which is really popular. They have Snapple. That's another part of the popular part of the story. Thank you so much, but this is a big deal, right? I mean, it's $18 billion or something, so definitely a big one. Okay, Kevin Hanks, great to see you. Thank you so much. Good to see you. All right, now let's take a look at the bigger picture. Mindy McIntosh, founder, CEO of McIntosh & Associates, is with us. So, look, we've heard a lot of on monetary policy and fiscal policy. Are you worried at this point or feeling more optimistic?
Cautiously optimistic still for us, even though we're seeing all these market trends continuing to have nice closing numbers. But with that comes still some hesitation when we're looking at more of the market where we're in pre or nearing retirement, really for our client families that we're servicing. So kind of not quite over that hump yet of retirement, but definitely planning to. So it's just kind of times where we don't want to put the brakes on and we don't want to freeze, but we also don't want to just continue to be optimistic and keep pumping into the market. So for us, we're really looking to see if the Feds are going to do some rate cuts again. We definitely feel that that's going to happen, but we still have the wild card of really what's going to happen with tariffs. And as we're seeing the housing market, we want to continue to see people be able to have a bigger footprint in the home buyers. And I do think that tariffs might kind of reek a couple of different directions there. Depending on what they do, though, it might get some additional consumer staples in to really kind of smooth out that ride. So yes, I'm optimistic in what we're seeing for the market currently, but I do think that we're going to still see some bumpy roads ahead. And that just for us even helps to circulate, Nicole, even with what the big beautiful bill has had to offer of how do we help people diversify and really kind of have some staple environments and diversify amongst asset classes as well to even be more tax savvy and efficient in the manner as we see.
And do you think tech is something that should be in each portfolio? I mean, do you find that to be at least part of a barbell approach, that you may have more growth or more risk when it comes to tech?
Absolutely. Yeah, we sure do. So we still want to see tech in there. NVIDIA and Tesla is going to be staples, and just depending really on our consumers' risk spectrum, timeline to retirement, what their pace is to use for income and their focus plan will decide how much of that should be a staple in there inside of their portfolio. But it's one asset class we're definitely keeping in there, along with oil and gas, because the energy sector just doesn't seem to be quite as volatile. It's kind of a nice staple to have in there for some consumers. So then that way they can continue to have opportunity zones without necessarily having to have uncertainty of risk.
So AI, so you mentioned NVIDIA and Tesla in those Mag 7 names, and there's a real AI theme in all the Mag 7 names. Do you mostly like most of those names?
We sure do. Yeah, we want to kind of ladder those inside of the portfolio mixture. The percentages are going to change amongst our team here depending on the clientele. But yes, we're definitely wanting to see a nice level of AI. We want tech to be in there, healthcare too, and some of the consumer staples. Because with healthcare, we're even seeing how should their portfolio be buffered with the diversification of healthcare insight in there, because we are going to see some additional increases to healthcare costs this fall. I think as we move into 2026, when the inflationary number, when we take a look at the Feds and reducing interest rates, we're also looking at the other side of what's going to happen with healthcare and inflation there. So we want to leave more of a buffer even in what's happening with their safe funds or kind of their sideline funds to help pay and hedge these additional costs that they're going to see into next year as well.
Yeah, understood. I mean, when you think about how much cash, I know you're doing a lot of wealth management and retirement planning. You know, some folks like to pull in their cash and they've been fully invested lately. Maybe different if you're a little older, right? I mean, I know we've had market breadth changing and equity rotation, and we've seen some sectors trying to pick up some speed that didn't necessarily do as well in July, and they're doing better in August. But do you recommend a lot of cash, or are you trying to keep people fully invested?
The sector rotation is key. You're absolutely right there, Nicole. So we do like to see that. Giving buying power is obviously anyone who can buy when we're seeing some of those zones compress was better. We are seeing, though, depending on where you're at in the timeline and really kind of your age and really risk spectrum, we use a lot of rule of 100 here. So we take 100 minus your age and really leave that amount invested. So we kind of still want to see that 3 to 6 months of living expenses if something were to really judgmentally happen. But a lot of our folks can be fully invested. They have a lot of Roth accounts. We do a lot of upfront tax planning and strategies to be tax-free or efficient in their portfolio. So if they have a lot more Roth funds or legacy planning in the tax-free envelope, we're able to be a little bit more all in inside of cash and just sectoring that into giving them some more treasuries and things like that to still have that low-lying fruit there, but not to just leave it sitting in the bank in cash or in a CD that is underperforming and not hedging inflation. So we can utilize that really asset class diversification, tax-free funds to utilize when we need to, some safe funding that they can use if they're drawing when the market might not be doing as well and as stable as it is currently, just to give them a lot of flexibility and comfort in their zone to and through retirement.
Understood. I mean, overall, how do you feel the rest of the year may go? I mean, are you expecting some rate cuts? And do you see that we could be getting some more new highs? I mean, on Friday we hit a high on the Dow Jones Industrial Average, and it wasn't long ago we hit a high on the S&P.
Sure. With these latest two highs that we've seen, I continually feel like we're going to see more highs. I think we're going to have more volatility come into play, though. But first, I really want to see the Feds. I'm anticipating that the Feds will reduce rates. But I think that depending on what happens with tariffs, there's still our wild card. But I think we could definitely still see some market highs and also use some of these pivotal moments of seeing what the Feds do for reducing rate cuts. If we see volatility, it gives a great time to utilize the big, beautiful bill and do more tax strategic legacy planning and more conversions. So I think there's more to come. I think as long as we continue to keep our eyes open, be actively involved, we'll continue to make changes that are optimistic in the moves for folks to be able to hedge and walk through this fourth quarter of the year here, Nicole.
Mindy McIntosh, founder, CEO, McIntosh & Associates. Thank you so much. Great to see you. Really appreciate it. Coming up, Options Corner. Rick Ducat standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news. Constellation Brands, Merck, and Antero Resources. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. Rick Ducat, lead market technician, is with us of Schwab Network, taking a look at a few names and some real trades that you found, the action. Looking at Constellation Brands, STZ, you found one that was somewhat neutral to bullish. We want to hear more about it.
Yeah, and kind of the theme for this segment would be outsized trades here. So trades that stuck out because they were such a large quantity relative to the overall market here. And we're focusing on Constellation Brands first, alcoholic beverage maker of Corona, Modelo, Kim Crawford, other wine and alcohol brands here. And it's a sector that's seen some trouble lately here. Fundamental problem is that younger folks just simply don't seem to drink as much as older people. But the more acute problem is the trade war right now and our neighbors to the north, Canada. U.S. alcohol exports to Canada are down about 60% after the USA imposed tariffs on Canadians. Canadian imports, Canada retaliated by removing U.S. liquor from their stores. So really a difficult situation for these United States beverage makers here. Consider as well Brown-Forman, maker of Jack Daniels and other brands, has earnings later this week. Canada accounts for about 1% of their total sales. So food for thought, I guess, or drink for thought, I guess. But anyway, the trading question, minus 4,125, October 17th, 140 strike puts at a 161 credit here. So neutral to bullish trade here. This did seem to be an opening trade. The volume was greater than the open interest here. This comes in at about a $664,000 credit received here. So we can see that if we were to pull up our chart here that I provided, we could see that the recent lows that we've been hitting around that 160 level, that seems to be a longer term floor for this stock here. So this trade was looking for perhaps for this area to hold here. That's a 5-year weekly chart. And the break even would be around 138.39, so below, a good bit below current prices, about almost 15% to the downside here. Expected move would be a little less than plus or minus 11% here. So the break even for this trade would be rather comfortably outside that expected move area. Nothing's ever a sure thing though. And when we talk about the outsized volume here, this total volume of about 4,100 contracts, that was against total volume of only about 11,000 contracts or so. So this trade was about 38% of the market at the time I checked.
Oh, okay. Well, look, that's the whole theme here. You have outside trades, and this name has really been beaten down. I mean, you've seen it's gone from 261. Now it's at almost like 161, right? Its low was 159. So very interesting to see that trade. How about we get to Merck? A lot of folks wanted to get into pharma. They felt that it was supposed to be the trade of the year and didn't necessarily do so. Now what? You have a neutral trade you found.
Yeah, and Merck in particular is kind of interesting because this is a sector in general that's really being really shaken up by the governmental policy changes. We had all kinds of changes to the general healthcare sector due to the GOP budget bill that was passed. It would include projected sweeping cuts to government spending on healthcare. So that had a lot of effects as well. But the other thing, more specifically for Merck, is that even though there was no real specific news for this company today, their big drug is Keytruda for cancer treatment. They have an exclusive patent that's going to expire at the end of 2028, and this is important because Keytruda accounted for about half of their revenues in the second quarter of this year, according to a Barron's article recently here. So the new budget bill actually did delay Keytruda's eligibility to be negotiated through Medicare, so that it kind of extends their favorable prices until 2029. but it kind of just buys a little time. There's a really big problem for this company that's coming pretty soon, probably sooner than shareholders would like to expect. But when we do look at this particular trade, this is a neutral trade. Minus 8,763 November 21st, 100 strike calls and 75 strike puts here. So we're selling calls and selling puts in the same month, but at different strike prices. This results in a trade called a strangle for a $2 credit here. So this would be our biggest dollar amount trade, about a $1.7 million credit received, 88 days out here. And remember, max loss potentially unlimited when you're dealing with short calls. Max loss could be catastrophic when dealing with short puts here. So everything's great as long as the trade stays within that flat area. It's kind of our mesa shaped type risk profile there, like a flat top mountain there. So between that range, this trader would keep that $1.7 million credit received here, but the break-evens 73 and 102. If we could look at our candle chart that I provided as well here, you can see those areas are kind of interesting. That green line and that red line are roughly in that area that gives us kind of some highs and lows, where this trader was looking for price to stay within these boundaries here. So about a 12% move plus or minus here. The break-evens are beyond that range here. So this would be a trade that the probabilities would be favoring it, but certainly not a sure thing. And if it does start to get beyond those boundaries, the losses could accelerate rapidly.
Okay, and look, I mean, you made the point that they get the Keytruda approval for head and neck cancer in Canada. It's been on a bit of an upswing, but you can't be sure which way it'll be heading. Also, the tariffs and things like that, maybe pressure on pharma overall from the administration. I know people have wanted to get back in here big time into names like this one, so thank you for that. And what about Antero Resources? You found a bearish trade. AR is the ticker.
Yeah, energy company, maybe not a household name necessarily. Oil and gas exploration production in the United States. No real news today. We did see some analyst activity recently, a bit of a mismatch. UBS upgraded to buy from neutral with a $43 price target on August 20th, but Roth Capital downgraded them to neutral from buy. $32 price target, down from 44 a couple days before that here. So our analyst picture is a little bit fuzzy on this one. They did get a new CEO and a CFO earlier this month, but that didn't really have too terribly much of an impact on share prices here. So not really a ton of specific news here, but this one was interesting because we can see here that our trade in question, it was 2 lots here in equal amounts. It totaled out to plus 9,200 November 21st, 27 strike puts at an 82-cent average debit here. So this would be about a $754,000 debit paid here. That would be a break even here of about 26.18, so about 15% to, or excuse me, 14.7% to the downside. Expected move is about 15.7% in either direction here. So this would be buying long puts, so they would need to get beyond that break even price in order to make any money at all in this trade here. And it's quite close to that expected range boundary here. So really this would be more of a lower probability trade, certainly not impossible, but this would not be one where it would be a very high chance for working out here based on what we're looking at right now in terms of the expected move here. So we can see though, as we said, that the total size for this one, and I did mean to say the size of the previous trade as well, that trade was about 52% of the total market in terms of the options volume. This trade was about 45% of the total options volume, but there is one other interesting thing here. There was a very similar closing trade done as a spread at the same time. They closed the September 19th 31 strike puts. It looks like there was a very similar opening trade for those on July 29th. So those options seem to have been closed out for about a $175,000 loss, just kind of back of napkin math, looking at the closing prices there. If you do put both of these two spreads together, these two spreads were about 90% or so of the total volume in this contract here. So really outsized activity in this name here, concentrated by just, it seems to be just one trader.
All right. Well, thank you, because you brought us some big names to watch and some big trades too, Rick. Thank you. Rick Ducat here with Options Corner. Really appreciate it. looking at Antero Resources, Merck, and Constellation. Thank you. Coming up next, let's take a look at Fed Chair Jerome Powell's remarks. Some people thought it was a bit repetitive from the year before. What do we need to know about rate cuts in the rest of the year? Our guests will break it all down. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. So glad you are with us every single day. I have a few movers for you to take a look at right now. Looking at Okta, received an upgrade to a buy from a hold over at Truist. Price target of $125. That was up from $100. Firm believes the cybersecurity company is approaching an inflection point with headwinds from seat count pressure and go-to-market changes abating in the second half of fiscal 2026. Okta is set to report its earnings after the close tomorrow. PDD Holdings slightly lower today despite beating top and bottom line estimates for the second quarter. This is the Temu parent. Saw revenue rise 7% for the quarter, but saw operating profit fall just over 20%. PDD cited intense competition for its moderating revenue growth and said sustained investments may weigh on short-term profitability. All right, let's have a discussion. Fed Chair Jerome Powell spoke, made his remarks at Jackson Hole last week. It was received with a rally on Wall Street, believed to incite that we are going to have a rate cut on September 18th. Art Laffer is with us, president of Laffer Tangler Investments. Arthur Laffer, what do you think? What were your interpretations of Powell's remarks?
I thought it was actually pretty interesting that he's taking a softer stance on the inflation side of the equation, which has been seemed like what's been holding him up with regard to rate cuts for the last, say, year or so almost. But he's focusing much more on softening employment. But the unemployment number is still having around 4.2, which is where it's been for the entire last year, right around 4.1, 4.2. What I thought, Nicole, was really interesting this time was the change in language about structural versus cyclical factors in the Fed's outlook on whether they should be cutting and how much and when. I'm still not 100% convinced. I mean, I'm a lot closer than I was before the meeting in Jackson Hole that they're going to cut in September. I think the inflation numbers, which for August, that come out about a week before the actual next FOMC meeting, are going to have a much more oversized impact on whether they actually cut and how much in September. You got CPI, you're going to have the PPI, the core PCEs, they're all coming out, I think at the 10th, around the 10th. And the meeting is the following week, I think on the 16th, 17th, right in there. So if I was going to be a betting person, and I don't like betting because I don't like losing money ever, I'd be watching those numbers pretty carefully as to whether or not they actually do cut in September and if it's just 25.
And so at this point now, I mean, what would you like to see? There are people who think it'll be a full point by the end of the year. There are some who talk about Scott Bessent pressuring for 50 basis points in the next meeting, and some who say, look, I mean, he was concerned, Powell was concerned about labor last year. He gave a very similar speech, cut rates, and yet rates went up anyway. You're watching the yield curve too.
Yeah, and the yield curve steepening. You look at it, yeah, the short end came down. But, you know, Friday we had a nice rally, but today you see the 10-year backing up a little bit here. The yield curve is steepening. And I think that's one of the things that the president might forget, or maybe he doesn't know. I'm sure he doesn't focus on this stuff very often. When I say the president, I mean the president. Scott Bessent, too. The tail does not wag the dog wags the tail. And one of the things that the people that really deal with the market every day, is the Fed does not set the term structure. They can only set short-term rates unless they try to come in and do bond buying or bond selling and mess with the yield curve in other ways. But the Fed funds rate does not determine the 10-year, and the 10-year is actually what determines where mortgage rates are. So if you want to see long-term rates come down, you've got to make sure the market believes that inflation expectations in the longer term are actually moderating. You saw the core numbers, they're all coming up. You saw the last 2 months, you've got core producer prices that went 3.7, you've got core CPI 3.1, you've got core PCE rising the last 2 months to 2.8. That's not the direction that the Fed really wants to see numbers going. They want them going back down to that 2, 1.5 range. Last couple months they popped back up, so the question really is, how much of an impact are tariffs really having on prices? Is it temporary? Is it transitory? As much as I hate using that word, and I'm sure Powell hates it way more than I do, is this a transitory function, like a one-off, or are we starting to see the resurgence of inflation through the end of the year?
People who remember you way back to the Reagan administration. I mean, you've been a part of economics and planning, and I've been around, and I actually booked you when Reagan passed, when our president passed. I actually was a booker, and I remember booking you that weekend, running to call to book you.
Nicole, you're talking about my dad. He's 85. I've got the gray hair.
Because I was gonna say, I mean, what are we talking about here? Anyway, you have a lifetime. I know, right? You have a lifetime in your family of, you know, economics. How do you feel our current state of the economy is?
Economy looks pretty good. I mean, employment's actually doing really well. There's some adjustments. We got I call it the Obama bill passed. So people actually now have certainty with regard to their tax rates, which is really, really important, especially for economic investment and people trying to figure out where they're going to put their money. And then also it got the expensing of purchases, immediate expensing of purchases. We've got this huge amount of investment coming into the economy. I'm actually really bullish on equities. Not to say there can't be a correction. I'm really bullish on employment, production, and output. Tech. I heard one of your earlier guests talking about, you asked about should they have techs in the portfolio. Absolutely. The right tech is very important. I'm not super happy about the Intel stake for the government that smacks of European socialism a little bit to me. State interference, but overall, I think the economy is doing really well. Tax certainty is really important for investment and for people to decide what they're going to do with and how they're going to allocate assets and investments. So, very actually bullish on the economy, on labor prices, unemployment. This is actually a really attractive economy. I'm very bullish.
That's very good to hear. When you hear folks saying that their target year end is 6,600, we're at 6,455 today. Does that seem reasonable? 6,600 this year, 7,000 next year for the S&P 500. Does that seem doable?
Yeah, I think it is. Yeah, I think it's very doable. And, the interest rate equation is, it's interesting is that as much as there's this pressure on Powell to lower rates, if you look at credit spreads, they've been very historically tight and narrow, which means credit's actually very easy to come by, which is one of the things you need to really get the economy going. One of the factors you need to get the economy going. AI is going to have long-running addition to productivity and output, which is, sets the stage for a really nice longer-run equity market here. Bonds, I don't know, but equities sure look really attractive.
And so what is the catalyst? Is there certain sectors that you think may do better than others as we move to higher highs?
Yeah, I think it'll be businesses that where the AI continues to be something that can really improve margins, and where you can supplement, say, high-cost items for AI, and AI now is becoming much broader. But as it keeps expanding, as you see more and more investment, you're going to see more and more uses, and they're going to really kind of seep into the bedrock of the economy. And you're going to start seeing really large improvements in a broader number of industries rather than just the very narrow ones you're seeing initially. It's like any technology, it tends to have a very narrow application at first, and then it broadens out as it becomes more adopted by the economy. And also, as more investment comes in, that should bring prices down even more, which is the way economics works. So the attractive part of this is the AI. I think it's initially much more of a gimmick, large language models. I don't mean gimmicky in the sense it just has a limited application. It'll become much more broad, much more a really driver for future productivity growth across the whole economy. I think it's really exciting. And then robotics and all the other things that are associated with it too become much cheaper, much more broader use, and really increase productivity per unit labor. This is really an exciting time. A little scary sometimes, but it's exciting.
You're not fully convinced that the Fed will definitely cut in September. We'll have to wait and see on that. Arthur Laffer Jr., President, Senior Portfolio Manager, Laffer Tanger Investments. Thank you. Nice to see you. Thank you. Still ahead, we'll continue our discussion of Powell's Jackson Hole remarks and why our next guest believes it may not be the time to cut rates and why it matters to you. We'll explain.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. We've been watching rate cut odds, and they've jumped since Fed Chair Powell's remarks at Jackson Hole on Friday. And our next guest thinks now may not be the time to actually cut rates. So to discuss this, Dory Wiley, CEO of Commerce Street Capital, is with me. I saw that we went from 70% to over, it went up to 90-something%. It came down to 84% right now. Certainly been jumping around, but definitely higher than it was prior to the speech. Your thoughts on what you think the Fed may do and what they should or should not do, Dory?
Well, it looks like they probably will cut, and if they don't now, the market will throw a pretty big hissy fit. I think Mr. Laffer hit it right on the head. Is Trump and a lot of the market, at least economy-wise, are looking to get those long-term rates down, and it may not happen. If you look a year ago, they cut rates 50 basis points in what I clearly thought was a political move, and Trump was right to be upset about that. You have one dissenter for the first time in 20 years, and Mickey Bowman. But what did the 10-year do? It went up. And I think you run the risk of that staying the same or going up here. And what we have is a distorted term structure of interest rates. And the Fed can only control the short end. The term structure used to be very, very helpful in forecasting rates and what is going on. It's been much more difficult ever since the Fed has an inflated balance sheet, which is about $6.6 trillion right now, and I would rather them see rates hold steady right now, where we still have concerns about tariffs coming into place. We still have some inflation numbers, which I can go over, but I'd rather see them lower the balance sheet and make sure that we don't have any issues right now, rather than just trying to get a quick drop down in long-term mortgage rates by using this one tool, which it may not work and it may backfire on them.
Well, I mean, it's like the lesser of two evils, because there are plenty of people who thought they should have cut already and should cut 50 basis points. If they don't cut and the labor picture gets worse, then that would be, I wouldn't want to be on the committee because I don't want to decide these things. But if it gets worse, then they'll say, oh, you should have cut. And, if inflation peaks up a bit, will the cut, had they done the 25 basis point cut, will that be so bad? Which one's worse, right?
Well, that's the key. Which is the worst evil? So let's address that. I think when you're running 4.2, 4.5, anything under 5 or 6% unemployment, we're fine. The real danger is inflation. If that gets out of control, you can't do anything about it. So think about it. CPI 2.7%, shelter running 3.7, core at 3.9, food at 3.9, and then we have shelter really creeping up to 0.8 in these last numbers, which is an annualized rate of 9.6. Goodness, maybe we wait a month or two or wait a little bit. I'm thinking that the Fed strategy is, go ahead and throw them a bone, cut it a quarter, and then we're going to hold steady for a while. And I really do hope that's the case, because there's still clearly some inflation risk out there. And, if it gets out of control, which we spend so much money on interest and everything right now, and the Fed balance sheet is what, 6.6 trillion, as I talked about, that's 23% of our GDP. Those numbers need to come down. And you don't want to become a Venezuela or somebody with runaway inflation. And once inflation gets out of the bottle, you can't put it back in.
And what about some key names to watch, such as NVIDIA? Have you been a fan of NVIDIA? Do you think NVIDIA is going higher? Do you buy NVIDIA on dips?
You know, I've been following NVIDIA for a while, and I am a very conservative value investor. And so people sometimes wonder why I'm big on NVIDIA, but NVIDIA is almost its own asset class. It's bigger than France and Germany combined. You got to have an opinion. We've never seen a stock like it. The margins are massive. The return on equity is massive. The growth numbers are massive. So revenue is expected to grow somewhere between 51-54%. You have earnings per share going to grow somewhere between 47-48% year over year. The margin's still running at 70%. That's a gross margin. Profit margin still over 50. Return on equity over 120. And this is a moat. This company is still, you know, the center of the universe. Everyone has to come to them. And so until someone shows me different, I think you have to own the stock. Now, as far as value, NVIDIA has a tremendous track record of performing through the earnings announcement and making its numbers and beating its numbers. And looking at the option pricing right now, I think there's a little bit of value in there for the upside. So I would bet on NVIDIA to outperform. I don't think it's all in the market. I think you can see the stock run. And I think being the biggest news of the week out there right before Labor Day and everything, it could cause you know, some really good support and tangential running in the market elsewhere.
And we're going to be talking about this also with our panel too. How about some other names that you like or have liked for a long term?
Well, you know, I'm a bank investor. You and I have been visiting many times on this show. And so I think with the cut in rates, it gives a chance for these banks, which have already stabilized their margins, doing very good on equity, doing very good on credit. It gives them a chance to quickly lower and get another 25 basis points in on their cost of funds for some of the more sensitive accounts like money market savings and whatnot and short-term CDs. And I think that'll be a good boost to banks. And so I don't think it's all priced in, particularly for the smaller banks that are still trading in the 9 to 12 times forward PE earnings when you see an S&P without Mag 7 at about, you know, 19 or 20 and with Mag 7 at 23. So that's pretty good value.
Yeah, watching those financials. Care to share your favorite one in the group?
EFSC and Third Coast.
Okay. Well, I'm writing them down. Thank you. Good to see you, Dory Wiley. Great to have you on, always, CEO of Commerce Street Capital. Dory Wiley, thank you. And still ahead, we'll bring in our panel. We want to talk more about NVIDIA because the earnings are due out on Wednesday, and pretty much every investor wants to know more. Let's take a look at the broad tech sector, Jensen Huang, and all the details of NVIDIA next.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, The torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to the watch list. We bring in our panel to discuss all about NVIDIA. The earnings are due out on Wednesday after the bell, and everybody on Wall Street is waiting to hear more from this tech giant. Paul Meeks, Managing Director, Freedom Capital Markets, and John Freeman, co-founder and senior analyst at Ravenswood Partners, are both with me. So, John, I'll start with you. I mean, most people are still in the buy camp. I saw today we had looked like 58 buys, 6 holds, and 1 sell on NVIDIA. I mean, I saw a couple of price target raises today, well above the 200 mark. Are you in that camp, or are you nervous?
Yeah, no, we're not nervous. So obviously, quarter by quarter, things can bop around, especially when you're in the semiconductor industry. Nevertheless, you know, the thing that makes us, I mean, obviously, there's a lot of other people who are very bullish on this company and this stock from here, and so are we. But I'd say, you know, where we are sort of above consensus is in the duration of the growth. We think this is a long duration, 20% plus grower on an annual basis for revenue, because of the value that generative AI and all of the other new next generation AIs with models training each other and all kinds of stuff. You're going to have a lot more value produced and a lot more capacity that's necessary to produce that value. So it's a virtuous circle that NVIDIA benefits from, we think, in its very, very monopolistic, almost exclusive position in the AI value chain.
Paul, what's your long-term on NVIDIA? I mean, maybe we'll see some volatility this week, but do you have a long-term thought on this name?
I concur with a long-term thesis. I'm very bullish. I think the stock should go well over $200 a share when the day is done. But I will tell you, as per the quarterly report, yes, they will beat on revenue. Yes, they will beat on EPS and probably give bullish guidance. But here's what I worry about. They have a issue, and it has nothing to do really with their own fundamentals. They're trapped in this trade negotiation between the US and China. So we have a deal on the table where, with a 15% essentially reverse tariff paid, you have AMD and NVIDIA able to sell the Chinese, lower power, lower efficiency chips. But now the Chinese say they don't want those because they're a security risk. That sounds familiar. And so what happens? They're now negotiating for maybe shipping higher end chips, but we probably won't know until we finally have the comprehensive Chinese trade package out of Washington. So with that, I cannot recommend that anybody start a fresh position when the stock's already trading at its all-time high.
Right, understood. I mean, there was talk about Blackwell chip going to China and whether or not they could work on that. The Blackwell chip has been used in the new NVIDIA brain, the humanoid brain. I mean, is this going to be the next money maker? And I'll tell you, John, I read that robotics is the next big cash machine for NVIDIA. The NVIDIA brain costs $3,500 and runs on the Blackwell chip. Is this a big deal?
I think robotics is a really nice to have over the next decade. It is not why we are so excited about the stock. That comes from generative AI and agentic AI in the enterprise. That's going to create a tremendous amount of value that's going to accrue primarily to a lot of the software players are going to get their cut. And we think ServiceNow is another one that's kind of interesting there. But a lot of the value is going to accrue to NVIDIA and its supplier, TSMC. That's kind of the Moore's Law complex there, and ASML as well as a supplier. I call it the Moore's Law complex, and NVIDIA is very well positioned to take the lion's share of the economics of the value created from agentic AI. And we see that happening right now. Barclays is rolling out 100,000 co-pilots. They're not doing that because, right, it's a nice to have. No, they're doing it for a return on investment. So that's what we're seeing, and that's why we're long-term investors in NVIDIA right now.
Yeah, and you're both bullish on NVIDIA for the longer term. Paul, what do you think about the other tech names, which names or stocks are best positioned for investors that you would recommend to folks?
So I'll tell you right now, if I was to take a look at a U.S. equity portfolio, I would no more than neutral weight the tech sector and maybe even underweight it, not because I have fundamental concerns, but I have some valuation concerns. And I still think we haven't seen the full impact of tariffs, which may not impact tech companies directly, but they sure will indirectly. But my favorite tech stock right now, and it's been for some time, is AppLovin.
Wow. AppLovin. Okay. And what about you, John? What are some of your favorite tech names that you recommend to folks?
So one of the ones we really like right now is ServiceNow. It's a pretty well understood name, but we think they're an underappreciated beneficiary of agentic AI. And kind of their layer really is going to persist over time, even though agentic AI is going to cause a lot of disruption and a lot of change in enterprise software, change that we haven't seen for a long time. But we think ServiceNow is, and another one I'll throw out that I think is kind of interesting is Commvault. Which we have a position in, and Commvault also is benefiting from the importance of data, and data is the oil, obviously everyone says, of the AI revolution, and so they help protect your data and restore it, and they are kind of a cybersecurity play that we think has a lot of duration and is a really well-run company. With CEO Merchandani, he's done a very good job of turning that company around, so that's another one.
Great to see you both, Paul and John. Paul Meeks, Freedom Capital, John Freeman, Ravenswood Partners. Thank you. Good preview of NVIDIA and some of the other names to watch. Much appreciated. I'm Nicole Petalides. This is The Watch List. I catch you every day, 9 a.m. and 2 p.m. here on Schwab Network. So glad you are with us. Keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tip.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. here at the New York Stock Exchange. This is Market on Close. I'm Sam Vardas filling in for Marley Caden today. Hope you're having a good start to your trading week. With an hour left in the trading day, let's take a look at where markets stand, because it's a bit of a mixed Monday off the back of what was a post-Powell rally on Friday. Of course, we saw the Dow at a record, but we are pulling back today. We've got the Nasdaq really just on the flat line. We did see some gains earlier as we look ahead to, of course, what is going to be the major catalyst, Nvidia's earnings on Wednesday. The Russell 2K underwater by 0.6%. So is the Dow, and the S&P 500 sitting down 0.2%. So we are underwater for the afternoon session after what has been a little bit mixed throughout the day. So US dollar on the way higher at 98.7%. Gold down just so slightly though. Crude oil is marching higher, 1.7% at $64 a barrel. And then we've got Bitcoin continuing to take a leg lower there, 3.7% at levels of 112. So we'll be discussing that with our guests throughout the course of the program. All right, for a look at a few stocks on the move, I'm joined now by Jenny Horn. So let's get over to her now and broaden out the conversation and talk about a few things on your radar, Jenny. And you're going to be looking at a few of these corporate stories. Tell us what you're eyeing right now.
Well, a good place to start, I think, is always NVIDIA, as naturally that has been the center of already all of our conversations so far today, and I'm sure for the remainder of this week, as we're pretty catalyst light on a macro and even micro standpoint this week, outside of the major event being NVIDIA's earnings. But we saw last week they closed out their second losing week, the first time they've done that really since April. Now, from a street perspective, it has still been hugely optimistic. I think also helping fuel still its outperformance today. Baird actually raising its price target to 225 from 195 with an outperform, saying they're increasing also their revenue and earnings estimates now, which they do believe can be significantly accelerated in their GB200 sell-through shipments in July. They also do expect now the ongoing momentum with XAI shipments weighted to the fiscal fourth quarter, as well as highlighting GB300, which is on track for that initial late September launch, and they believe represents a significant performance step up versus its prior model being the GB200s. But Stifel, additionally, echoing a lot of the same narratives, honestly, within its price target raise and its overall coverage. They did raise their price target to 212, so a bit more modest, but from 202 with a buy rating. They do expect NVIDIA to report a beat, and with guidance, they also think that could right now be better than feared, as H20 shipments did resume in July, plus that accelerating demand for GB300 infrastructure. Their supply chain checks do continue to point to also expectations for that ramping of the GB300 orders into year end, even as they still see strong demand really for their existing products continue. So the major question I think will be is, what does right now the geopolitical situation really mean for their supply chain? One of their more lucrative markets being that of China, and also the relationship between Beijing and Washington right now has been so depicted by some of these chip makers. When you're the biggest heavyweight in the entire market, yes, there's going to be a lot of scrutiny on what this really looks like for then your H20 chips, as well as these floated reports about we could see a new chip even unveiled, especially after NVIDIA did tell some of its component suppliers last week, per reports we got from the Wall Street Journal, that it was actually suspending work related to the H20. So I'm sure that will be definitely of note.
Better than
also,
feared.
I think
that's
that
hogwash.
Chips
Uh-oh.
Hugely
Market's waiting for me.
US. So that will also be in question. But so far from the street coverage, this name commands 58.
It's better than feared.
There's one lone underperform. Street still feels pretty optimistic going into this print.
Still bullish very much on this stock, despite some of the challenges, as you highlighted. The wild
Challenges.
earnings, as they're very laser focused on the China story. So it's going to be really interesting to see what Jensen Huang says about that, particularly with regards to managing to straddle both sides of the equation with the demands from China and also the US. But another stock that the street is fairly optimistic about is Okta. We'll be hearing from this company tomorrow ahead of NVIDIA's earnings. No doubt a critical part of the whole software sector with regards to the products that it offers with regards to identity and
challenges.
Risk there. So what are you seeing as far as what the analysts are saying?
I'm seeing you're full of crap.
Yeah, so this is also going to be an interesting report because so far in the
Blah, blah. Oh, they're Okta. Who cares about Okta? We got a big old snake. The market's ready for Washboardjim to move this market. Let's get it on. Everybody ready? Say yes or no. Boom boom doo ba doo, boom boom doo ba doo. Oh yeah.
There's a dude down the street with his old washboard. Washboardjim, you got a sneaky snake. Goes boom boom boom, goes boom boom boom, boom boom boom, boom. Sneaky snake.
Boom, 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 sneaky snake. Oh yeah, let's get it on. We got a inverse head and shoulders. Ready to break. I've got the sneaky snake. Oh baby, oh baby, oh baby. Boom, boom, a boom, boom, yeah. Got a sneaky snake. Oh yeah. What'd you all do? Scare the market? I got a sneaky snake. The 6455s at $2.20. So we got this on the 1 minute tomb frame. What happened, man? This thing ain't moving. Fuck. It's like standstill. Oh, this is a spy. Here I go again. Yeah, why not trade a spy? A boom boom, boom boom. It's the same setup. The SPX at 225, 220, 205. Washboardjim's got a sneaky snake. Oh yeah. Extend to the right. Oh yeah. $2.25. Let's do it. 64.55s at $2.20. Boom, boom. Something ain't right here. It's like this thing's froze or something. The platform's acted up. I was charting up the SPX, or wasn't I? What the hell? This is the weirdest chart I've ever seen, man. Got a boom, 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 and a boom, boom, boom. We're at $2.55. We need a boom, 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 and a boom, boom, boom. Boom, boom this, baby. They tried to tell me, Jim, you're up 3%. Do you think about selling it? No, I can't. I won't. You can't make me do nothing. You got a boom, 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 and a boom, boom here, everywhere. We're at $2.75. We're about time to hit the top of the snake channel here. Did anybody see that trade right there? Can you tell me what this is? Someone can. Do it now. It's a sneaky snake. Watch the pattern. You're right. It's the inverse head and shoulders. There's your left shoulder, and there's your head, and there's your right shoulder, right shoulder, right shoulder. And you have a 1, 2, 3, baby. That's dead. You can break. I think you can do it. It's like someone died. Smart. What time is it? Oh, it's that time. It's 2:14. I got a little bit anxious, baby. Tight stop. This is not working right. Something's wrong with the platform. I hate being in this fucking trade right now. Why ain't it going up? I'm telling you what, I don't think I've ever seen anything like this. The price goes down. I'm going to put up a new platform here. It's definitely been a weird day. I ended up getting a haircut and this thing dropped. Anybody else having problems with the platform? Add on right here. Or should I? We probably could go down to the orb. This is acting a little bit better. But I don't quite understand why the price was going down and this thing wasn't moving. It went down a lot. I ended up getting a haircut instead of a touch-up. Okay. Jimmy doesn't understand. I don't understand how that dropped so much like that. Everything else looks good. Is NVIDIA earnings are what, Wednesday night? Hey. NVIDIA's after close Wednesday. Snow and CrowdStrike and Hewlett Packard. That's a big deal right there, all them earnings. I think I'm going to add, I just don't like how this stock's not moving. Volume's picking up a little bit. 223. Boom, boom, boom. Boom, boom, boom. It's Jimmy with a sneaky snake, yeah. He got in 105 from 220. Let's go. Got a two-headed snake now. Boom, boom, boom. Then a boom, boom, boom. I'm gonna go get my tea and I'll be right back. I've got 105 and 220. And we got 35 minutes left in the market. Let's go. Another school shooting in Arkansas State. Our University Artisans active shooter text, when was this? 2 hours ago. Police confirm no gunshots or injuries. What? Ah, darn it, come on. Might have to stop out of this one. Cracker Barrel. I didn't even look at that today. It didn't do much. Held up on my support level that I called in the video. 53 bucks. We at 53.15. I had 52.99. Anything below that would hit 52.06. This is insulting. Look at my tea. Well, got 20 minutes, 30 minutes. Goes much lower, I'm going to cut out. We're at 90, and we're still just right out of the money. So something ain't making sense. We're at a double bottom. There's the invoice. I was looking for this. Could be one of them days where it just tanks. We don't start getting something. Now I got a fallen wedge at the end of the snake. We're going to find out shortly. We broke out of the snake. There was your shortly. Now we got to break the 21. And I need 143. So I'm counting too. This still had two of my files from last year. HTMS. Oh, I gotta take that one out. Put it on my clipboard. Break the 21, please. Break it. One guy said last week that if we don't count on the interest rates pulling up the market, if he cuts them. I don't know who it was, but Kevin Green
an aggressive re-rating to the upside in their guidance. Maybe they're a little bit more optimistic that
we're at
the China sale
110.
will continue to go through. They're still seeing
We
demand.
broke the 21.
And they continue to see a conservative guide that should actually align with the trend that we are seeing with what the company is.
I've been in this
actually
way too long.
It's not what analysts' expectations are. And I have seen a little bit of a split where analysts have some analysts have backed out the China impact, and some have not. And so that'll be, once again, something that the market will focus on. And I find it very interesting as well. News reports and around this whole robotic AI. Chip processor that they're coming out with as well. That's kind of a new niche going into this report, which I'm sure analysts will talk about. And that could also be something that sparks a little bit more optimism when it comes to this name. I would say cautiously optimistic. The chart, if you kind of look at the past, 3 out of the 4 times we've seen a down move for NVIDIA after the earnings announcement. That has been the trend. But maybe this one is going to reverse itself. And maybe it does give us enough of a boost to the upside for the S&P 500 as a whole.
Plenty to watch. Great setup for that as we look ahead to NVIDIA's earnings on Wednesday. We'll be talking more about that, I'm sure. Kevin Green, thanks so much. Appreciate your time today. Coming up, we will switch gears and look at the crypto market and check in on Bitcoin as it has continued its recent slide.
Go.
Market on close. We'll be right back here.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the only way.
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach.
Well, shit, come on.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
accelerate your market knowledge,
and shift your perspective into full gear.
That hurt.
Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon.
You might end up with a red one here if this
Fast
don't
Market,
hold.
ready for you, ready to go at 12 p.m.
Can't take as
Eastern
much longer.
on the Schwab Network.
It's a pretty good size hit too.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you.
Sometimes your commercials are not very good timing. We got a double bottom. Just now noticed that by pulling that up. Oh, we'll see if it holds. Double down on these things. Throw a little money in it, I might. Squirrel did a real good job on my hair. $15 more minutes left. What to do? Very strange. Right to the orb. I'm in that borderline 2 notches out of the money. There it goes. We're at the orb. $0.35. Let's go. Breakout. I got 71 cents average. I'm at 10 minutes. Yuck. I'm about to lose everything I made today if this thing don't break out. Coin's back at my support level for a double bottom. Slash ES is at the bottom of the orb on the 1 minute and the 5 minute. $30-minute we're at the orb and the 63. Well, looks like I lost this one. Because I am not going to stick around here and wait for the last minute. My platform has been acting up all day. Hmm. 6 more minutes to go. I still have some, but I stopped out my 35s right at 30 cents. But I think I've got a total loss on my 220s. Come on. Yeah, I more or less just write this off and get out of them. I don't think they have a chance. Oh well. That sucked. God. Boom, drop. Well, there goes a grand. Oh boy. Two more minutes left. Tesla's coming to my resistance that broke. NVIDIA big knife. Ooh, another one. Right to support. Dow Jones down 337. NASDAQ down 57. Well, that's it. Got to go head out and do my thing. And I'll be back another day. Oh boy. I need Caroline. I hope they throw the wrench at Bolton, that's for sure. I never did like him. And I'm going to go. I'm debating on going to this real fancy restaurant tonight. Probably will.
I'm Dr.
So yabba dabba doo, we'll see you tomorrow. Right to the bottom of the megaphone.